Good morning, everyone, and welcome to Traders Corner's special event. I'd like to start by saying all of us here at Traders Corner would like to wish everyone a happy Father's Day. I'll be celebrating my third, and we'd also like to wish you a happy upcoming Juneteenth. Excuse me. Stay happy, stay safe, and best wishes to everybody. On our panel today, we've handpicked 7 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable trading strategies with us today in a free online educational forum. In today's summit, we're going to have a wide range of topics from how to simplify your day trading to dominate the market and use artificial intelligence into an automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter happens to be one of my personal favorites, and she specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probabilities trade setups. Here to present 4 steps to simplify your day trading and dominate the market under any condition is Marina, the trader chick, Villatoro. Welcome back to Traders Corner, Marina. It's always so nice to have you.
Hello. Thanks so much. I always love your introduction. It makes me feel so good. So thank you.
Hey,
thanks, Rob.
We try our best.
So there's some people that are saying that their audio is not good. Sounds like buzzing. Is there anybody else having issues, or is it just John? Can you guys please let us know in the questions box here if everybody is okay with the audio? Because I hear Rob perfectly on my end. Yeah. So John, can you log out and come back in? That might help. Yeah, to reboot it. Hi, Arthur.
Pardon the interruption, but sometimes buzzing is also crosstalk and something loose in a connection. If he unplugs and plugs his speakers back in, it might make it better.
Okay. Yeah, hopefully you heard that, John, and didn't just hear a buzz. We don't know what he's actually hearing. All right, well, I'm gonna hop right in because I so appreciate you guys taking your time on Saturday to be here with us, and thank you so much. Okay, I'm gonna tell John to reboot. Ooh, oh, here we go. And there we go. Okay, hopefully John has seen that. And all right, guys, well, I just want to say again, thank you. And thanks for being here on this beautiful June morning. Actually, I don't know how beautiful it is for you. For me, it's absolutely beautiful. Gorgeous day here in Spain. So I just want to say today I am going to be presenting for you, but one thing that I always want to repeat is that I'm here to be able to help you guys. I am definitely hoping that you will come out with learning and taking away one massive lesson, because I always tell my kids, if you come out with just one thing that you're going to be able to implement into your life, that one thing could be the thing that completely changes everything for you, right? So that's the most important thing. And usually the way you really do learn stuff is by interacting, right? Asking questions. And I'm here to fully answer all of your questions. So guys, let's jump in. Today, I want to talk about simplifying your day trading and dominating the market under any condition, because as you guys have seen, the past couple of years since COVID has been pretty crazy, right? But you could still completely do incredibly well simply by listening and watching and really understanding what the market is telling you. And a lot of times that's all it really takes, is just simply understanding what the market is saying to you. Okay, this is me. I am Marina, the trader chick, and I am in Spain. I have just recently moved to Barcelona. We were living before in Central America, in Costa Rica and Guatemala. We actually moved here from Guatemala, and now I am officially an expat living in gorgeous Barcelona, Spain. It's really an incredible city. I am very happy to finally be here. It took us a while. It took us a couple of years to get here, but we are here. And before I became a day trader, I was a fitness instructor. So why do I talk about me being a fitness instructor and a travel writer? The main reason is that a lot of people believe that they have to have a math background or a economics or financial background, and it's not true. I mean, I literally was a fitness instructor and I'm still a travel writer. I still have a travel site that is my baby. It's Travel Experta. So you could totally still do that. And I am trilingual. Now, the reason why I bring this up is because one massive shift that happened for me. I've been trading now. I've been in the markets for over 11 years, like full time. And I have to say the first couple of years were a real struggle for me. So I was born in the Soviet Union. Russian is my mother tongue. We moved to the United States when I was pretty small, and English is obviously my main language. But when you're small, you don't actually learn a new language as much as you just continue learning a language. So I never actually learned English, right? It just kind of happened. However, Spanish, because I learned that when I was in my late 20s, definitely was a learning process, right? There was this commitment. I had to be disciplined. I had to practice. I had to have somebody that was very patient with me and help me with the repetitions and a lot of repetitions and a lot of translations until one day you wake up and you just are able to speak, right? Because all your hard work finally comes through. So one thing that I recognized, because I just wasn't doing well with my trading, I started to look at it as if I was learning a new language. And that was when the whole shift happened for me. Because when you start to look at the market actually speaks to us. It literally speaks to us. It talks to us in a language. And once you could understand even the most simple words of it, I can guarantee right here, right now, I can guarantee it will completely take your trading to a new level. That is what I want to talk to you guys about. Okay, that is literally what we're going to be focusing on today. Now, the coolest thing about trading is that you can do it from anywhere in the world. Being an expat from third world countries, I don't even know why they say that, right? Because I find Guatemala to be quite developed, but that's a whole other issue. Was a lot of people kept on telling to me, oh, how's your internet in, Central America? And I was like, sometimes I go to visit my parents in New York City and the internet there is worse than the internet I have in my home. And in Spain, forget about it, right? So at this point, today, you can't use how's your internet or is the internet going to be good enough as an excuse not to go and travel and work and trade anywhere in the world. And before COVID, I used to do a lot of in-person shows, but obviously during COVID, everything changed, and I kind of enjoy doing these live shows with you guys. Now, before I continue, I actually have the entire presentation done up for you in a worksheet. So please go right here for free. You'll get it for free. MakingofADayTrader.com. MakingofADayTrader.com. Go here right now. You can totally get it. MakingofADayTrader.com. Okay, MakingofADayTrader.com, and you can follow along with the whole thing. So guys, let's begin. What are the basics of day trading? First and foremost, you cannot be a Formula One driver in a minivan, right? I say this often. You cannot be a day trader with ridiculously crappy apps and delayed feed. That is never going to give you a success rate, right? You need to get a really good, powerful software. I've been doing this for so long that I am happy to help you. When I first began, there's maybe only like 2 or 3. Today, there's like 50. So I am totally happy to help because I have seen the evolution of all of them if you have any questions. I personally use only 2 indicators. I have 1 chart, 2 indicators. I have completely simplified my life because it can get really messy and really stress you out. Okay, now let's begin. So here's the thing, right? Like I said earlier, the market speaks to us. It has its language, right? Now, I want you to imagine this, all right? I don't care if you want to close your eyes or if you could visualize this, but imagine you are a native speaker of, let's say, English, right? Or Chinese. It doesn't make a difference, whatever your language is. And you enter a room full of people who are only fluent in Spanish. Do you think that you are able to have any sort of a conversation with them if you've never spoken a word of Spanish? No, you understand the logical thing to do is to learn even the basics, to even have to say hello, hola, mi nombre es Marina, right? You understand that. However, the thing with the financial markets, just because people have a little bit of money, they feel like there is no barrier or entry, and they can just donate their money to the market because nobody is stopping them. And a lot of times they just don't understand that they're not understanding the language. Rather, they start to say, oh, it's too risky, the market sucks, but it's literally lacking the understanding of what's in front of you. And believe it or not, it can be quite simple, right? A lot of people make it sound so complicated, and it's not. Look, the pure basics. There are 3 types of trends. There are only 3, right? There's the upward trend, the downward trend, and the most important trend of all, believe it or not, is the sideways trend. And why is that? Because this is the trend, this is the area, this is the movement that literally takes away all of our profits and most likely even takes away our savings, right? Why? Because this is the indecision zone, the channeling area, the chop, the exhaustion pattern. I don't care what you call it, but that's exactly what the sideways trend is, right? So once we can start to recognize it, we can do 2 very powerful things. 1, we can stay out, and 2, we can spot when the next super high probability trade is going to happen, which is usually a breakout or a new trend trade, right? So this is how it looks. Again, downward market, upward market, and the sideways trend. So really quickly, what is an upward trend? It's literally when each pivot is higher than the next, right? You could say that it's the bull market, the market moving up, the market going up, but you normally will hear this terminology. It is when you are going long or when you are buying. What does that mean? Super simple, guys. You're entering low, exiting high, taking the profit in between. Super simple, right? Don't overthink it. Entering low, exiting high. But when you're hearing people say, are you going in for a long? Are you buying? Now you know what it is, right? You're going long. You're exiting at a higher price point. Now, let's do the opposite. Downward trend is literally when each pivot is lower than the next. What do you do in a downward trend? You are going short or you're selling. So whenever you hear that terminology, what does it mean? Super simple, guys. You're entering high, exiting low, taking all of that money in between. Don't overthink it. Don't put any emotion behind it. I cannot tell you the amount of people I hear, oh, but somebody is losing when you're selling. Who cares? Do you know that somebody personally? They don't care about you. Don't care. It has nothing to do with it. It's all about technical analysis. You need to remove the emotion behind the trading, and that's when the magic is going to happen. And the only way that happens is when you understand the wording, the language that the market is telling you. Okay, you're going short. This is when you're shorting the market, the bear market, when the market's going down. I don't know if any of you guys have ever seen the movie The Big Short. If you haven't, I highly recommend you guys going to see it. It's just a great movie. But literally the entire movie is about a handful of people that when the market was booming in 2008 and everybody was buying or going long, they started to recognize that the market is about to explode and they began to short the market. They are the ones that came out with the biggest wins. Okay, you are literally just going against what is happening, right? And that is actually the majority of the money is made during those types of shorts, right? The majority of traders, that's when they actually make the majority of their money. Okay, hang on one second here. Okay, so let's talk about consolidation areas and the transitional areas, right? The sideways market. I literally call this the trader's worst enemy. Why? Like I said earlier, it's literally where the majority of the money is taken away from you guys because there's no movement, right? Look, there's nothing going on here. It's consolidating. What does it look like here? It's just bouncing back and forth, right? Do you really want to put your money into a place where there's absolutely no direction? Now, why? Why do we lose all our money in this area? Here's the reality, okay? And I talk about this all the time. Trading is 90% mental. What does that mean? It's 90% emotional and mental. When you are able to completely master your emotions and your mental understanding what's going on, you will start to win. Now, why is this the most mentally, emotionally charged area? for two reasons. Well, actually, it's one reason, but from two different views. There are only two types of traders in the world. I know that there's millions of traders, but they all can break down into two traders, two types. One, the first one is the trend is your friend kind of a trader, right? That means when they are looking at this market, they are saying to themselves, you know what? The market's been going up all day. I'm going to continue buying or going long. Then there's the other kind of trader that is the contrarian trader. They're looking at this market and they're like, you know what? The market's been going up all day. It's got to correct. I'm going to start to short it. Here's the reality. There is nothing there. The market is literally telling you, stay out. I don't know if I'm going to go up or down, but you as a pro need to stay out. And that's when your mental and your emotional mindset starts to literally look at the validity and what the market is actually telling you. When you're sitting at a traffic light and it's red, are you going to question it? So this is a big red light, okay? So it doesn't matter. Sometimes the market could be running down and boom, it's going to hit this area and it could totally transition. You cannot beat the market or predict the market. We are in absolutely no position to do that, right? We are individual, retail, small amount traders. It's impossible to do that, okay? And they could happen on a smaller scale, they can happen on a larger scale, but you as the trader have to understand. And when you start to really identify these areas, and when those areas get broken out of or a transition happens, that's when we make the most amount of money, because those are the biggest confirmation movements, right? This is a perfect example of the breakout, right? We have a downward market, total flat, boom, it broke out. And I'm going to talk more about breakouts in just a little bit. Now, here's the reality. When I tell you have to identify it, it's much more than just looking at it and saying, oh, I think this is a channel. You have to actually draw it in. You have to mark it off. So what is it that you're marking off? It's called areas. And the market respects areas, and we have to respect those areas with the market. So what are those areas? It's only two really important areas, the support and the resistance. And if the market is going to respect them, so do we. And you cannot just have a mental support and resistance area. You need to draw them in. Every single platform out there has a drawing tool completely for free. You don't have to spend extra money on that. I know people love to spend their money on nothingness. Don't spend your money on that. Your platform usually comes with it, even if it's just a flat line. Because the thing is, when you are in the live market, your adrenaline is pumping and you are looking to the left because you just entered the market and you want to know why you entered the left. And if you don't have your areas drawn in, you are going to start to stress out, and that's not necessary. You could have it all drawn in. So let's talk about it. What is a resistance area? It is literally the ceiling of the market. It is an area where the market keeps on hitting it over and over and over again. And we have to draw that in. Okay, we have to draw it in so that we understand what is going on. Okay, you have to understand resistance area is the ceiling, right? It's where the market revisits that area over and over again, and it's a protection zone, right? It's an area where we know we need to avoid until the market either completely goes off of it to a new transition or it breaks out of it. Okay, now what is the support area? It's literally the opposite of the market. It is an area where the market is hitting over and over and over and over again. Okay, it is where the market comes to a stop. It doesn't matter if it's been going super strong. We don't know if it's going to continue. At the moment, it's a wall, and you don't want to be, like a crash test dummy. You don't want to be banging yourself against that wall. So hold on to your money until it gives us massive confirmation. Okay, so again, like I said, professional traders make as much money shorting the market as they do going long. All right, support areas is where that market is hitting that floor. Now you need to draw these areas out when you have a channel, because now you could recognize where there's a channel. Look at this ugliness. Do you want to be putting your money into this? Do you want to be guessing what the market is going to do when it's like this? Absolutely not. Okay, do not even consider bouncing between these two areas. So look at this ugly behavior. Terrible. I do not ever want to donate my money to the market because when it looks like this, I want to give it when it is a really strong confirmation. And when I have these areas drawn in, that's when I can really rely on it being a very high probability trade. Now, the most important thing I get asked is, well, how do you spot these areas when they first start to happen? Really good, valid question. So in the beginning, when the first time, like when the actual area starts to form, you might take one bad trade. I totally get that. It happens to the best of us. However, it's the continuation, because now we get into that revenge trade mentality, and that is just a disaster, right? That's when all of our money gets lost. So, but we can also avoid entering the market. We can also start to recognize it in the beginning, and that is through reversal areas and divergences. I literally call them the map for the shift of direction and the trend. What are reversal areas? It's a double top, a triple top, a double bottom, a triple bottom, and a head and shoulders, right? They are actually very easy to spot. And when you start to recognize them, it is like this huge light bulb that goes on. And you're like, my goodness, I've seen these so many times, but I've never used them. And the thing about them is they're free. They can be used on any platform because it's literally the market talking to us. Okay, so this is a reversal pattern. We first started off as a double top and went into a triple top. And when I already see a double top forming, I'm already out of the market. And a triple top just simply reinforces that. Now, what is the strongest and the most powerful sign for me when I'm seeing a reversal pattern with divergence? As you can look below, I use the MACDs. For me, they are my holy grail. And if the MACDs are telling me that, for instance, here it's a completely flat line with the double bottoms, but my MACDs are already inclining going upwards, it's literally telling me that the market is losing its steam. Here's another example. However, I want you guys to look a little bit beforehand, right? We can see the double bottom, we can see the divergence, but if you look a little bit above, you can start to notice that the MACDs have already been kind of flat while the price action is going down. I personally start to look at divergence way before a reversal pattern happens, because when divergence happens, what the market is already telling me is that it's starting to lose its strength, is becoming weaker. And I am a very conservative trader, so I already completely stay out. I don't want my hard-earned money to go into a market that is already losing a little bit of its edge, right? I'd rather sit on my money until I have massive confirmation. And guess what, guys? You will have that massive confirmation. So remember, go to here, makingofadaytrader.com, makingofadaytrader.com. You'll get this entire presentation completely for free sent to you. So make sure that you go and get it right here. All right, now I've mentioned several times the breakout trade is probably one of the most powerful, most highest probability trades that we have out there, right? But the thing is, if you don't have your market drawn off, or if it's not properly identified, you're going to miss out those areas. So here's what a breakout looks like. You need to have your either resistance area or a support area drawn in. This is where you could see that the market's been going in one direction and all of a sudden became flat, right? No direction whatsoever. You have no idea if it's going to continue moving in the same direction or if it's going to transition. So a breakout it's when it continues to move in that same direction, right? Imagine you're driving on a highway and all of a sudden they're telling you the highway is closed, you got to get off. When you get off, that construction sites, there's detours. I personally start to stress out and freak out when I see those detours, right? And what happens when I'm stressing out? I am, uncertain, I'm unsure, I'm in full doubt, I don't know what's going to happen. Are they going to reopen the road? Are they going to continue with the signs? I don't know where I am. Google Maps is telling me that I have to keep on going back to the highway, but the highway is closed, right? There's all these bad things going on in my head. It's definitely not a place I'm going to put money on. But then all of a sudden, the highway, the construction guy says, all right, guys, you can hop back on the highway. It's all yours, boom, in the same direction. That's that breakout trade, when you're back on the track of the same direction, okay? So this is how I spot the breakout trades. And I use my EMA lines, which are the exponential moving averages, as a place to enter the market. This is where I enter the market. Okay. And I have a lot of spacing with my MACDs. I don't see any divergences. This is when I have the highest probability chance of the market continuing in the same direction. So I want to hop in as early as possible. And that leads me to one other really, really powerful trade. I personally call this the initial reaction trade setup. What it literally is a new trend trade. Okay, so here's an example of what I mean, a new trend. Imagine you want to go jogging, right? You want to go jogging, you're in your house, you just put on your jogging clothes, your sneakers, and you're out the door. If I was to bet on you running or jogging, I would say that you would be really good for the next mile, mile and a half. And that's where I would like to put my money in, right? Because that's when you have the most amount of enthusiasm and energy. That is the new trend, guys. When the market shifts and starts a new trend, that's usually the most amount of power. So you want to get in as soon as possible. And again, drawing in those areas, understanding when it completely breaks out, when is the good entry point, that is the magic, right? Because then you can get in, and that's usually when you can go for the most amount of profit. And that's the goal. And it's usually understanding and seeing, but you have to be able to listen to the market to be able to do that. Okay, last time, go here, Making of a Day Trader, so that you guys could get this whole presentation, and you get to write to me and ask me, because those charts, you know, if you have any question, I'm super happy to answer all of your questions. Okay, now here's the thing, guys. This is really, really important. We have absolutely everything we need to take action, right? We have absolutely everything we need to take action, right? For instance, we have these amazing summits. We have these gurus on YouTube and going to live presentations. There's a bunch of amazing books out there, podcasts. But at the end of the day, how do you know that you are doing it right? How do you know that you are doing it right? Who is there to help you, to guide you, to explain to you, and be like, yes, this is the correct way of envisioning it? How do you know? And all of this is great, right? But the real question is, how do I really get started? Like, how do I finally get started and become consistent? And this isn't only from beginners, right? I get seasoned traders who've been trading for ages and still aren't consistent asking me these questions. How can I turn this around? How can I be more profitable and consistent? And usually it's literally lacking the understanding of the basics, right? Just the same as if you would to enter a room with a bunch of people that don't speak your language, you could at least say hello and present yourself in your name to understand. That is the basics. And this way they'll be able to even understand that, wait, this person isn't 100% speaker, and I'm going to also speak to you in a different way. And that's usually the basics, right? And honestly, this is the most important part. Here's another example. My 19-year-old just learned how to drive a car. And I remember when me and my husband first sat down with him to teach him how to drive a car, he sat in the car and we're like, okay, buckle up, make sure that you push on the clutch and the brake, put your gear into first, release the brake. He's like, wait, gear, clutch, what are these? I don't understand what these are, right? And because we forget that this is the beginning. When we first sat in the car, we neither didn't understand these basics. Today, he hops in, he knows exactly what to do because he learned the basics. But if you avoid learning the basics with a car, you'll never get moving, right? And a lot of times we forget to overlook, we overlook learning the basics in the market because there's no barrier to entry. Nobody is telling us that, wait, you didn't learn how to do this first, right? Imagine you are driving and somebody enters your car who has never been in a car. And you're like, okay, buckle up. This is going to save your life and let's go. And the person, they've never been in a car. They're like, buckle up? I don't understand. What does that mean? What do they mean? Right? I know it sounds ludicrous. People say that, but just think of that, because at one point it was like that, right? And if you don't know how to even do something as basic as put on your seatbelt, that could truly save your life, you know? So a lot of times we are not taught the basics. And this was my own personal sad truth. Like, I spent over $20,000 on my own trainings, right? I mean, I spent so much money. I was in chat rooms and everything, and nobody was teaching me the basics. And every time I was asking, can you please explain what is a divergence? What is a reversal pattern? What is a support area? They would either completely ignore me or treat me like I was supposed to be born with this information. But no one's born with this information, right? And because of that, I ended up struggling for years and losing money, to the point that I ended up losing almost $4,000 in 5 minutes. And at that point, I felt so defeated, so beaten up. Like, I just felt like I just did not understand what's going on, that I ended up quitting, right? I ended up quitting. But here's the thing, and I think every single person who is sitting here today has the same experience. What's happening is that we are all bit by the trading bug. We are all bit by the trading bug, and it never stops itching. And do you know why? Here's the thing. Here's the reason why we continue. Because deep down inside, we know that we can do this. And that is exactly what I said to myself. I was away for about 4 or 5 months, and I came back and I decided to get back to the basics. So what does that mean? At one point, I had 3 monitors going on, 10 indicators. I was in constant analysis paralysis, stressed out. When I came back, I literally took 2 high definition, almost new monitors, and I pretty much donated them to the garbage men. I just got rid of them. They were so toxic for me. Then I removed all of my indicators, because the thing is here, guys, we watch all these gurus and listen to all these people, and everybody uses different indicators, right? And we believe that we have to use those indicators that they're using. I was struggling with Fibonacci's, Kettler bands, and Bollinger bands for years, because I felt like I had to use them because everybody was using them. They're so popular, they're so important. And I removed them. When I removed all my indicators and started to put one back at a time, I cannot even tell you the stress release when I did not use the Kettler bands, Bollinger bands, and the Fibonacci's. They just weren't working for me. They could work for someone else, great, but make sure they work for you, okay? And that's when I did get back to the basics. And since then, I mean, I've been doing amazing. And about a couple of years back, one of my students says to me, he's like, you know, Marina, your teaching philosophy and style is very similar to Coach John Wooden. And I was like, who is this Coach John Wooden guy? I've never heard of him. So I went obviously to look him up and researched him. And he was literally the most legendary basketball coach. I think to this day, he's passed away, but he is still a legendary coach for basketball. This man has more accolades than anyone else. 88 national championships, 10 NCAAs. He trained superstars. And his entire teaching philosophy was, when in doubt, get back to the basics. Because every season when he started training, it didn't matter the amount of championships these guys have won, didn't matter what they knew and all the tricks and whatever they were doing, but he went back to the basics. How to tie your shoe, how to roll up your sock, how to dribble the ball. Why? Because it didn't matter all that you've done before, because if your shoe is not tied on properly because your ego is getting to you and you're out on that court, you sprain your ankle or break your foot, whatever, even worse, guess what? All your knowledge is useless because you're going to be sitting out on the bleachers, right? And today, for you guys only, because I totally understand your time, your commitment to being here, I have a very special offer for participants only. This is not an offer I offer anybody else. It is my introductory course, Bootcamp for Day Trading. And you could access this on any apparatus, desktop, laptop, tablets, iPhones, Samsungs, whatever. And all of this, I'm offering to you guys one-time fee. This is not recurring, $97. That's right, $97. Now I want you guys to go right here, right now, go into your browser and put in bootcampfordaytrading.com so you can follow along and see exactly all that is offered to you for $97. Again, go here, bootcampfordaytrading.com. Go to bootcampfordaytrading.com. Now, what can you get for $97 today? that is the same on return on investment? Do you guys like to play golf? So me and my husband really enjoy playing golf. And when we first moved to Guatemala 15 years ago, we used to go to this unbelievably beautiful golf course, and it was like $27 per person. Before leaving 5 months ago, it was $119 per person. And this is in Guatemala, okay? And what we used to do, and we still do because we can't afford it, but I remember going out to lunches and taking our family, taking our friends. And today, for $97, it's barely a decent lunch for me and my husband with a glass of wine. No exaggeration. Okay, guys, you can't get that much today for $97. So let me break this down for you, exactly what you'll be getting. And again, go to bootcamp4daytrading.com. First and foremost, we're gonna simplify the whole package. And like I mentioned earlier, I have now been doing this for over 11 years. I have seen so many platforms evolve, and I know that it could be pretty challenging in the beginning. So I have a 30-minute platform setup tutorial for any platform, and I could also help you if you need help, so that you guys can avoid the issues and the struggles of setting up the platform and get into the fun stuff, the trading. Then we're going to really break it down to dissecting the markets, understanding upward trends, sideways trends, downwards trends, understanding those reversal patterns and divergences, because they can make all of the difference. And when you can spot these reversal patterns, it is magic. And it's free and it's so simple, but you have to know what you're looking for. And then also spotting and identifying the support and resistance areas, understanding how divergences work, because when you understand that, you can stay out of the market when it's getting weak so much easier, right? And to hold on to that money so that you can enter when you see real strength. And mastering the breakout, because the reality is, like I said before, the breakout is one of the most powerful trades, and we learn how to spot it. But we could also avoid how to see the fake out breakout, and they happen. And when you can avoid putting your money into a fake out breakout, again, you will be sitting on a lot more money and able to put in more money, right? Because the breakout trade is one of the most highest probability trades. And on top of that, you get your whole curriculum on unlimited access for life. All of this is valued at $1,600. Everything you get here is valued at $1,600. So here's what some of my students have to say. And I have students from all over the world. Like I said, there's no worries anymore where there's internet. And that's the beauty of trading. You can do it from anywhere in the world. Michelle said, best money I ever spent. I just finished the boot camp. Unbelievable. Derek, you are the only mentor that truly helps with the work, that is there to truly help. Adrian, I am enjoying your boot camp so much. I am learning every single day. But let me share something really important with you. Do you guys remember what I said? How do you know you are doing it right? How do you know you're doing it right? Who is there to help you, to be accountable to? So that's what I'm giving you guys. In that one-time $97 price, one time, you get one entire month unlimited feedback with me. One entire month unlimited feedback, one-on-one coaching with me. I mean, that alone is priceless, honestly. We'll be going through your charts, and a lot of times a mentor can literally be what takes you to the next level. And the best for last, I even have a chat room live, and it's just me. It's not some moderators or administrators, which a lot of people hire. It's me in the room with you. This is on top of the one-on-one. And we are there implementing everything we're learning, taking live trades in the live market. That is all part of this $97. Like I said, special price for you guys, $97. Go here right now. Bootcamp4daytrading.com. Bootcamp4daytrading.com. So again, here's what you guys get for $97. Everything in the course. 30 days one-on-one mentorship with me. 30 days live chat room in my live chat room membership. Okay? And here's the actual reality. It is all worth less than one trade that you guys normally take per day. I don't know about you, but my average trades are between $200 to $400. This is $97, and the return on the investment you're going to get with that is 10 times that. This way, you could take your buddies out 100 dinners because you have put that money into your education, and education is the most important thing. However, here is the thing. Because of my one-on-one coaching and mentorship, I could only take 25 people because of my commitment to you guys, okay? One, really, really important. Now, go here right now. This is the order form, bootcampfordaytrading.com. As you can see right here, one-time payment, $97. I do offer a 2-payment plan for $59, and even if you go for that one, you get access to everything right away and access to me and everything. Okay, $97, guys. Go right here, bootcampfordaytrading.com. No brainer. All right, so I have some questions here. What time chart in the slide and symbol with referring? So my course is for all instruments. I personally use tick charts. So yeah, it has tick charts, right? So that means every single candlestick is transactions, right? All right, all these slides are not useful. Okay, if you're here to be mean, we prefer not to, have that problem. So questions should be valid. At least answer a few questions. Yes, I am answering all your questions. I am teaching right now to all of you guys for any instrument, and that is the key here. In 45 minutes, I hope that you received even the one most important thing of all, and that is understanding that the market speaks to us, right? If you understand what it says to you, it's magic, right? It's the same thing when you enter a car and you understand how to work that car, all of a sudden, boom, you could also do that. You know what I mean? Immediately, you could take your car for a ride. But if you take the car and you don't know what the road signs are, it's really hard to also be able to read the road, right? So that is the most important thing of all. Oh, thank you, John. I appreciate it. Yes, Lloyd, I do have a live trade room, and that is included in the price of the $97 for 1 month. Absolutely. So you get to sit with me and a lot of the students and people, and we're trading live, taking live trades, implementing everything that I offer, right? Everything that we're learning and taking live trades. So yes, I do have that as well. And again, guys, $97, no brainer. My goal is not to be making money off of you. My goal is to really be able to help you. It just really breaks my heart when people are just in the market without really understanding what's going on, and it's quite simple, and that's the beauty of it as well, right? Yes, absolutely, Isabella. I totally help with Thinkorswim because I used to have that for years, and I think it's a great software. It is actually one of probably the best platforms out there for equities. Absolutely, and I help you completely set that up, and within 30 minutes, you're up and running. That is definitely part of it. All right, guys, if you have any other questions, please let me know. Hunter, you mentioned that there are basically 2 types of traders. I used to be, no, those are not the 2 types of traders, Hunter. Every single trader should be able to go long or short. That is not the 2 different types of traders. There's 2, as in the trend is your friend, meaning if it's going down, you're still entering down. Or there's a contrarian, a person that sees it going in one direction and thinks it's going to go in the other direction. I used to be a contrarian. Today, I am completely neutral because I see what the market is doing. I don't anticipate what the market is going to do. I listen to the market. It's a very big difference, okay? Russ, you accidentally blocked yourself. Can you please email me, guys? You can email me, thetraderchick@gmail.com, and I will help you get in for sure. Yeah, so hopefully that makes sense, guys. And again, bootcampfordaytrading.com. You get to work with me and literally ask me endless amount of questions all of the time. I literally have some students that email me and send me charts, and we talk 2 or 3 times per day. I love it. My goal is to be able to see you guys actually succeed and have fun. And thank you so much, Rob. Thank you, everybody, so much. I really, really, really appreciate it. And thanks, Arthur. Thank you. Hopefully you can make it to Barcelona.
Thank you, Marina. And if you guys didn't know, Marina is great. Here at Traders Corner, we love how she simplifies everything. Very powerful, and love the 4 steps to simplifying day trading so anyone can understand and succeed at the art of day trading. Thank you so much for taking the time out of your day to join us today, Marina. Ladies and gentlemen, Marina, the Trader Chick Villatoro. I put her link in the chat box, and you can find her at www.thetraderchick.com. Marina, we hope to have you back again, and I hope you enjoy the rest of your weekend and are enjoying your new atmosphere out there. God bless.
Thank you. Bye, everybody.
Ladies and gentlemen, I told you at the top of the show we had a great lineup, and our next presenter is no exception. He was in the fire service for 40 plus years. He started day trading futures on his days off 40 years ago. He has a great presentation full of brand new cutting edge material. Ladies and gentlemen, here to present Beta Traders Wanted, introducing Helix, is Mr. Steven Tremper of Tremper.com. Welcome back to Traders Corner, Steve. Uh-oh, Steve, did we catch you off guard, or do you have yourself on mute?
Oh, I was muted. Sorry. Is my screen there?
Your screen's up, but you might want to maximize your presentation.
That's the wrong screen then. So let me take that one off. Hold on, I can never tell which screen it is. So stop showing. So we want, I think we want this one. How's that? Can you see my mouse now?
Much better. There you
go. Okay. So too many screens. So anyway.
Hey, I know the feeling, you know, 1 minute charts, 5 minute charts on one, daily charts on another, tick charts on another. We know how it goes.
I guess we all have the same problem. So anyway, well, thanks for asking me back. Usually in the past, I've done the Discipline Manager tool that we have, and I figured I'd just change it up a little bit because I've been working with Helix for years now, but I'm to the point where we got some beta testers out there, and so I've just thought if anybody's interested, we'll just throw this out there and see if anybody is you know, want to check it out, and I'll go through some things like that. It might not be for everybody, but you might find it interesting. So I thought I'd just at least present it to you and go from there. So basically, what is, you know, the Helix? It's a manual and automatic trading strategy. It is a strategy, not an indicator. And I'll go through some of the settings because there are a lot of settings, and gives you a lot of versatility and things that you're trying to do as far as your setups and how you want to manage your trade and whatnot. But that is obviously the biggest thing because there's so many settings, and so there's a lot of things to, you know, kind of understand. And it might not, again, it might not be for everybody if you're not into the setting part of it. You know, I'll show you how to download it, and then what's expected of you, what do you need to do. We'll go through some questions and answers. So anyway, well, who am I? Basically, I'm, you know, kind of everybody when it comes to the business end of it, but I started it just trading. I've been in the fire service 30 years. I retired in 19. I started doing futures, you know, started trading about 10, 15 years ago, but then I ended up in futures probably, you know, 6, 8 years ago after, you know, failing with options and Forex and all that other stuff. So now I just do futures. It's just a better fit for me. But by no means do I want to come across as a mentor or a trading expert. You know, I still struggle with the psychology side of things, the emotional, the, you know, FEMO and all that. And that's in the money management mainly is my, you know, my big thing. And that's basically how Discipline Manager and Helix actually came to fruition because, you know, it's me and lack of control. So that's where it is. So, you know, again, what is Helix? If a picture is worth 1,000 words, then I figure a 20-second video must be worth more than that. So look how clean this is. It was kind of funny how the Trader Chick was talking about the indicators. I did that years ago. I just ripped everything off the screen and I went to a nice clean chart, and that's and that's what I like. So anyway, this is Helix. This is I'll just show you the 20-second clip of what it does. We're at the point right now, and you know, we're ready to test some more. There are a couple glitches from time to time that we're trying to iron out, and Just last week, we discovered a few more. So anyway, this is an 8-minute clip of the May 30th. This was just last week when I was working on the presentation. It was a great day. A single, it was just 8 minutes. So the first 8 minutes we did 100. There was, you can see here, the realized P&L was $1,000 in the first 8 minutes. And so I'd be lying to you if I told you that was every day. Unfortunately, it's not. I wish it were, but it's not. So let me go through there. So in any event, I will go through this disclaimer though, because we have come to realize that it's so true. You know, I put on 2 charts, one on sim, one on live, and I trade identical things with the exception of the account, and they came out with different numbers. So sim, this rule down here, hypotheticals, simulated performance does have different results. So I'm sure you've seen these rules before. I don't need to reiterate them too much, but they are something that you really do need to concern yourself again. So the sim and the playback will give you different results, but they're a great tool for reviewing your trade and, you know, where you want to get in, how you want to get in, manage it, tweak it, and then when you get it down, then it's just a matter of you really got to test it. So let me move forward with some settings. I'm going to go through some settings. We have two types of groups in here. We have the numerical setups, I'm sorry, the numerical groups and the alpha groups. Now, originally what had happened is I had 2 indicators. I had my first one that I called my entry zones, and I had entry zones placed on my chart where all my rules came to be. So I didn't have to do it all in my head. I would just see the zone, and all the rules had met previously. So I knew there's the zone, and now I just need to wait to go get it. Then the next thing I did as a strategy, which was trade management. It's like I got tired of, you know, just pushing buttons and dragging things around. It's obviously, you have the ATM, but that was limited. So I had the trade management that I had pre-designed that would be able to put on my quantities and offsets and things like that, the way I want to trade and manage the trade once I got in, with additional setups. And then it's when I married the 2 of them together and put them both into the strategy, that's where hence Helix came into play. And so that's really it. It's just the 2 of them together. And now since then we've added more to it. And I always refer to that, you know, like the DNA of the trade, and really get into the analytics part of it. So if you're an analytical kind of trader, then, you know, this might be up your alley. So anyway, I just want to go through some of the settings, and you know, if you want a little bit more about, more about it, you can just go under tools and then Helix, and there's the little introduction, the 20-second video they just saw. There's a little smaller introduction, but the main one then obviously is the strategy settings overview. And this page is, it's like if you watch the full video, it's like about 2 hours long, but it's all broken down. So if you started from the beginning, you know, that's how long it would take, but most people don't do that. Sometimes they get into the trade, man, they want to understand just there. So it'll just take you to 1 hour and 5 minutes into the trade. It just zips you there. It's just like a little index. And if you want some supplementals in there, if you want to know a little bit about the more manual mode, or if you want to know about what the heck is a pivot trailing stop, there's a few minute video on that specifically that I've added in there. So this is just basically nothing more than an index for you, but it'll give you some ideas. So there's 2 ways to do it, and I have there's a handful of people already using this, and I would have to think that I would probably say 80% of the cases, most of them are doing the auto mode, because I think that's where everybody's going nowadays. And then, but there is the manual mode, because everything has to start on the manual mode and then you move forward. But basically the picture here on the left is when it's in auto mode. You just click auto. It always defaults to paused and manual mode. So you just click it to auto and unpause it. And here's the manual mode, and it's active. And there's those entry zones I was telling you about that I wanted. So that's, this is the status box. So, you know, that's another little tool that's on the web page. But so getting into the DNA, if you will, as far as there's basically 5 charts in essence. There's 4 in the background, as I call synthetic higher time frame groups, and then there's your main chart of whatever that might be. Now I use the Ninja Renko because it's cleaner, it's uniform, I like it, I've been using it for years. But you could use rain charts and, you know, things like that, but it doesn't really matter. So so in this case, like now we go into group 2. all the group 2 is exclusions, and there's lots of exclusions. So you're looking at your trade and you want to attach to a higher time frame, you can do that. If you want to look at your spread, like 2.2 is a spread. You can see the distance between these two here. If you start seeing it, getting too close, usually 1, 2, 3 ticks or something will determine that it's, starting to spread away. And when they start roping together, then that's where they kind of, you kind of maybe want to stay away from that. You start getting into the choppy area. There's 4 EMAs on here that you have, obviously 1, 2, 3, 4, the bigger they are. You can orientate them and mandate that they are in a certain order. Some setups, we don't want that, because obviously if you're doing a reversal, then obviously they're always going to look like that and you'll never get a trade. So you don't want that kind of thing. But on a trend trade, typical trend trade, you're looking for that uniformity. So you are going to require that the moving averages are in that order. Then we go into, as I said, some of the more exclusions. You've got the VWAP in here. You've got the high, low of the day. There's some what I call no trade zones, and all these things right here, which are, I have to use them with the construction orange. I try to stay away from white and black, only because people that have white and black screens can't see anything if they're using that same color. So all my colors are for the most part a little different. So I've used the construction orange. So if you have an orange background, that might be a problem, but I don't think that is the case. So VWAP, I just have a no trade zone around that. I don't want to see that or trade around there because it's too sporadic. There's also one around the day and the high and the low. There is one particular setup that does not require or doesn't want to take trades going into the high of the low. Obviously, on one of my ones that I'm doing now, I have that set to 0 because I do constantly take into the high. Some of the other things are, reversal warnings. You've got your plots. Those are really good for testing and trading, just to kind of see where things might be taking place. But once you're done with, once you kind of idea what you're doing and where you're at, those kind of come off. You don't need the dings and the dongs constantly. So the trend direction, you've got more indicators. As I mentioned, we've added some indicators, and actually I might even be adding some more indicators in here, just to get more tools. Now you could overlap indicators on the screen itself if you wanted, Bollinger Bands or something else on here, RMI, whatever the case is. You could just throw it on here like anything. But if we're going to use it as far as a setup, if it's going to be determined that a certain value of a particular instrument is going to be included in the particular setup, well, then we need it as a rule, so it has to be incorporated in here. Now we start getting into the alpha groups, and there's more to the, all the numerics are plotting, EMAs, do you want it to plot, do you not want it to plot, the colors, exclusions, things like that. All those indicator type basings are going to be the numeric group. All the alpha groups are trade management, and whether it be stop management, offsets, placements, how many targets, how many contracts, etc. So this one is the entry trigger, and this is kind of where it all starts. And it's this little line right here that if you were to say go buy on an up bar, your price has to breach that. And so that's what that is. And you can make it positive, negative, and it doesn't even have to be on this particular bar. Now, this particular bar happens to be a 21-3 chart, but I'm not using the 21-3 bar. So if I did, and I was using the 21-3 bar, well, then that entry trigger would be up here at the close of the bar. And when price breached it, boom, it would do whatever it's designed to do, whether do offsets or just market order, whatever it might be. But I have it set to what's called a synthetic group, and I don't want to wait the whole 21 bars. So I have that set for a smaller time frame internally. So when I say up bar, I don't mean the 21-3 up bar. I mean the internal one that I have set. I believe in this case it's the 5-1. So in essence, it's a 5-1 reversal bar when I'm clicking up bar, which is then right there. So it's a little faster. So positive and negative numbers could be used. So once the price breaches that in the up position, what do you want it to do? And you could your offsets in there that an order would be placed here, or maybe you want it down here to get a little deeper. So, you know, once it's fiddling around right here, it pops the order in. Now it locks it in. It sets a limit order down here or a buy order up there. So once it goes further up, it'll take you with it. And there are some settings in there that will allow cancel if not filled right there. So if you're putting an offset in there and it never gets filled because it goes against you in the opposite way and never fills, you want to cancel that. You don't want an order hanging out there. So after so many ticks, it'll cancel out. So this is what I mean, like group A is, you know, your quantities. Now, if you're just going to put on the same trade management but multiple contracts, well, you can just put them all under quantity 1 if you want 2 contracts, 3 contracts, etc. But if you want different trade management, so for instance, your first contract is going to come off at X ticks and your second contract is going to go off at later ticks, well, then you need different trade management. So because the first quantity is not even going to be around, but you're going to need some trade management for the second target. So, and the pivot trailing stop is another part of the trade management. There's 4, I think 5. You have the initial stop, you've got the 3 auto trails, move to break even, 2 pivot trailing stops, so 6, and there's going to be 7. They're going to be dynamic stops. So they're all independent of each other. This just happens to be the pivot trailing stop. So everybody's heard, you know, buy high, or, you know, higher highs and lower highs and lower lows and lower highs, or, you know, whatever that is. So in any event, the point of it is let's say you were to set this for a your pivot trailing stop, you set it for 50 ticks in this example. So it's going to go up. So it's coming down. Let's say you're short, you're coming down, you're coming down, you're coming down. When it goes up a minimum of 50 ticks, now this is 57 ticks, so you have to have a minimum if your rules are set. In this scenario, it's set for 50 ticks. So at 50 ticks, it's going to go up and it's going to retrace. Okay. Now, now you need a resumption. So once you have your resumption of, let's just hypothetically say 50 ticks. So when you get an up of 50 ticks or more, and then you get 50 ticks down, which being 57 here, you're looking probably about there. It says, okay, that is your pivot. You see the kind of the V form there. It says that's your pivot, and it pops down your stop. And of course, if you have trailing stops, they're going to do their own thing anyway, but this will just pop it there. As I said, they're all independent. So now you're coming along more. Now you notice this one went up, but it didn't go up 50 ticks, so it doesn't qualify. So it comes down, it went up. Now this one went up 66 ticks. So it went up, but again, a minimum of 50. Now it has to resume 50, which would be probably, you know, right around there. It realizes, hey, there's a pivot. It takes the stop, jumps it down here, and so on. Now this is 49 ticks. So this one's not going to qualify. Now, if you had your set for, you know, 48 ticks, well, then that would qualify as a pivot, and then it would come down. But in this case scenario, it doesn't qualify, and then it resumes 50, and then your pivot goes there, if that were a qualifiable pivot. But in this case, it's not, so it's still up here. This now is a qualifiable pivot. It's 83 ticks, so now it's gone up there, and now it's resumed 50, and boom, it brings your stop from here to here, and that's the pivot trailing stop, and vice versa for the longs. So, and again, those are all independent of each other. It's just one of the stop mechanisms that are available. As I talked a little bit about the data series, the synthetic data series, that was that entry trigger I was talking about. In the group C, you could change your settings, and you have some options as far as, you know, what type of, and even with the EMAs, you have the option of, you know, even though you're looking at a tick chart, or in my case, the Ninja rank, I use the Ninja rank, I'm looking at a 23 Ninja rank chart, but I want to see a 15-minute EMA on there, and I want to use that as my EMA. You can do that. You just click it to an EMA, or I'm sorry, a minute chart. You put in your, you know, 15 minutes or whatever you're looking for, and it'll show up on that particular screen, even though it's representing a synthetic data series. Group D is additional options. I guess everybody has additional options. You know, you got your pause button. Those buttons, those manual buttons, you could kind of move those around. You've got your pause if you hit your goal. It just won't automatically trade anymore. You can manually trade, but automatically it's just going to stop after you hit your goal. Same with your drawdown. if you have a drawdown pause of, you know, whatever your dollars is, and you've gone down that far, it'll stop trading and stop taking more. You got the auto pause if there's some consecutive losses, depending on whatever size they are. You determine the size, not Ninja. Ninja, a penny, a negative penny is a loss in Ninja. So, but that may not be the case. You might be in a winning trade and it goes to break even, and you get out at, you know, less commission, so you get out at a, you know, -1 cent. Well, that to me is not really a losing trade. So I have a negative number in there. And then obviously your start times for, you know, times you want the market to go on. And my defaults are 9:35 because I trade NASDAQ. So I want to get away from that morning open. And if you wanted to throw news in there, you could throw news in there. So that's pretty simple, standard stuff. Group E is audibles. You know, in a strategy, usually you just get the standard, you know, order canceled or order filled kind of thing. But I wanted, you know, the targets and the mostly I wanted the cha-ching, you know, the auto trail, cha-ching, cha-ching, cha-ching. So anytime it goes up or down, it'll do that for you. And then statistical data, obviously I'm analytical kind of guy, so I have a reporting system in there. It'll do the statistical data for you. You could mark your grade, anything greater than or equal to something, X ticks. We'll give you an A trade, B trade, anything less than that, I'll give you an F. It's like a report card. So, you know, it's A, B, C, D, F, just like a report card, and it will grade. And then that way, when you look at your files and you look at your statistics later, you could say, okay, I only want to see the A trades. And what's the DNA of the A trades and what made that work? You know, all the rules are the same. So if you're putting on your settings and you say go and it takes a bunch of trades, they're all the same. Why are some losing and some not? Well, it's the DNA. You know, things happen. Just because you got in a trade doesn't mean it has to go to fruition. So therefore, you know, you want to find out what happened, and you can look at these and say, okay. And in addition to that, I have, you know, for people that are interested or that know about the MFE and MAE, I've even taken it one step further and did E's. It threw an E on the end of it. So I have MAEE and MFEE, which just stands for extensions. So even though I'm out and Ninja stopped recording it, I want to know what the market did. And that's really how I found out many, many years ago with crude. I had my stop on there, and I started looking at the statistics only to realize the majority of my stops are getting stopped out by just a few ticks. Well, that was simple, you know, so you could do a little bit more of an offset, or you could just make your stop a few ticks longer. And so by looking at that, because again, Ninja stops recording once you get out of the trade, but I want to know what happened after the trade. And so if I'm getting my target and I'm getting B trades, but the market is always getting A trades, it's like, well, wait a minute, maybe I could, you know, take a little bit more meat off that bone and, you know, do that. So that's all analytical things. So now here, group G is the setups. Right now we have setup 1 and 2, setup 3, setup 4, which is kind of a unique thing for external executions, and then setup 9. We jumped to that one because it was supposedly easier, but it turned out to be 6 months. But in any event, so we could add, and we have others in the background that we're going to be doing and adding in here. But you know, right now I'm really concentrated. My favorite is the 3, which I wanted to do long ago and been working on it now. And my next one that I want to do is the reversal, because I love the reversals. But needless to say is so you know, pick your setup. Now each one has its own rules, and you know, you kind of gotta see which one you want. Then you could even make your own with your own to a point. It's some limitations. If there's certain things that you needed to do to trigger, then that might have to be custom put in there. And if there's indicators that you require for a particular setup, then that would just be, you know, setup 5, setup 6, whatever it might be, and we could just add those parameters in there and say, okay, when all these rules and everything aligns, take the order. All the other things are done. All the trade management, that's done. The backgrounds, well, that must be a market call. So anyway, those must be you know, logically put in there as far as when the setup is going to take. But everything else is done. You know, background color, when do you want the background color to change? All done, all the setups are done. So it's relatively easier. It's become easier to do it. But right now, that's where we're at with the, you know, the whole beta testing part of it, because we're at a point where we have, as I said, there's some people already using it, and we're starting, you know, we've had a few things that I would have never found on my own, that because I don't trade like that. And so with those scenarios, if we could duplicate it, if you could say, hey, that's that, so you pointed out to me, let me see your settings, and I get your settings and I duplicate it, well, we can fix that. That's easy. So that's kind of where we're at right now with that. You know, as I say, this has been out for, I've been using this in the manual mode for well over a year, in the manual mode, and now it's been in the auto mode for quite some time, and we're doing that now. But anyway, this is the one thing that's not in there yet. As you can say, it says coming soon to a theater near you. It's somewhat in there in the settings, but it's not working yet. And that's the chop box. You know, we've looked at the RSI, the ATR, the ABC, whatever, all these things, and it's just really needs to kind of be custom. You know, you can take a little bit of this and a little bit of that, but we really kind of customize it. And not only are you required to execute an order in the proper place, but it's more important when not to take a trade. And for anybody who's been trading for a while, you know, you end up getting the bored trade, or you know, you're sitting around and you're like, oh my God, I just want to do it, I'm just bored. So you take a trade because it's just not set up, whatever. But there are times when you don't want to take the trade. And if we could highlight those and see them, and I could see them all the time, we want to stay away from that and just wait for the break. And then eventually it will, you know, just some markets, well, I don't trade ES, but ES, you might wait a day, but needless to say, at least with NASDAQ, just wait a few minutes and it'll change. So, but you just don't, you can get butchered during that chop time. So we're working on that one next, that's coming. Some of the other indicators that are available that I've had made long ago, some of the target zone, I mentioned earlier about the discipline manager, status box, I think I saw a picture of that one there. There's supply and resistance line, there's volume slur, there's more. Basically, all these indicators that over the years that I have made for myself. Remember, I'm just like you, I'm just a trader. That's it. I don't have employees, none of that. I just myself in my little trading cave, and I just go in here, and that's why we have the trade group. We got social hour, you know, because it is a lonely game. So you guys are more than welcome to join that. There's no cost in that, and you can just come in and check it out and find that you're just like-minded people that are doing the same thing that you're doing, but instead of doing it by yourself, you're able to you know, conversate with other people. Now, when it gets busy, especially in the trade room, you know, we're all busy, and a lot of times, you know, probably 80% of the time we're on mic silent. But when it's slow and you got questions, you just unmute yourself and you can chit chat. And if you have technical issues, if it's appropriate, I can kind of help you out there. Social hour, I'm really trying to kind of get geared for technical issues. I try to be on there as much as possible, just for answering questions and technicals, just brainstorming, that kind of thing. So all these indicators, I was saying, all these indicators that I've made, and most of them are free. You know, target zones is a very cool one. You check the video out on that one. Status box is becoming my favorite. I really like that because I'm looking at it constantly. The support and resistance lines I have on both, again, those are free too. You can download them. I have a lot of people use them. I have the ATR projections on there that was an indicator, which then turned into a strategy. So I have both. If you want to just find out where your ATRs are, you can put that on. And if you want the strategy to do it, I don't use that strategy anymore. It's years old. I haven't updated it or anything. I just, as I said, some of these, like, you know, I may at some point in time maybe incorporate that into Helix and even the support and resistance lines, because I do look at those regularly. But right now they're independent indicators, and I haven't, so I don't know if they will be incorporated or not. But you're more than welcome to go grab them if they're a tool that is something for you. And basically the biggest thing, as I said earlier, is where I started was just for me, and that was the discipline manager. It's nothing more than protecting yourself. You know, protect yourself from you, because you're your own worst enemy, you know. And everybody, like the trader was just talking to me, or talking, you know, in the presentation before me, the mentor kind of thing. So we're all in the same game together, you know, and sometimes you need somebody on the back of the shoulder to say, hey, you know what, it's not your day today, so let's you know, let's just come back tomorrow, kind of thing. So that's available now. That one is not a free one, but that's like the #1. That's where Ninja really got me started. So getting started. So if this is something that you want to toy around with and play with and kind of see where it goes, all you got to do is download it from the Helix tab and start playing. And it will automatically, you know, start a free trial. So there's 10-day free trial, and just start doing it. And you go, obviously I would suggest watching some videos so you kind of have an idea of what's going on. You'll get a grasp of what's happening. Nothing is needed with the free trial. You don't need to do anything. It just starts automatically. All you have to do is just go to the tools section of the web page, and then from there just click on the Helix site. And those are all those other ones I was telling you about. If you want to go watch, I think they all have videos. There's that APR projections indicator, and then there's the strategy. But this one, Helix, you just go into there, and then there's the file. And now, with this latest business with you know, Ninja's upgrades and whatnot. So if you're using the web version, this one's not available yet. It's the same file. It's just that there's one line of code in there that identifies the 2 different versions. So if you're using it, you know, on a phone or on the web version where you have to log in onto the web and then it gets you into there's no license key. It's all on your dashboard, if you will. So that's that version, which I haven't exported yet. And I will. I think their deadline's coming up soon. And this one here is the desktop version. Now, I work off a desktop, and I have been for, you know, like I said, 15 years. So I couldn't imagine trading on a 3-inch phone, but you know, whatever. So this is the one that's available right now, and that's the latest version is the 8.028, and then this web version, the latest one is 8.116. So anyway, you make sure you do the right one. If you want the NinjaTrader downloads, those are the newest files if you want to get a shortcut right to them. And then there's an older version if you, I think that'll probably be going off pretty soon. I think the deadline is June 23rd, I want to say, when there's next week, actually, this will be switching over. So I'll probably take that off shortly thereafter. So anyway, just click on one of those, it'll download your file, and then off you go to the races. After your free trial, if you want, you know, if you like what you do and you want to keep playing around with it and you think you want to start beta testing and see if you can come up with some issues, then all you need to do is continue, is just, you know, go ahead and join on the community tab, and you can go into right there is a subscription option. And there's a contact form that you're going to need to do on, I'll need a third-party ID. It's a little different than the machine ID, but it's a unique identifier, basically. So what you would do is you go into the help under you know, control center help, and then third-party licensing. The vendor name would be Tremper, just like that, with a capital T. It has to be case sensitive. And then you put your unique ID in there. Now, I always recommend something that identifies your computer. So when you change computers or you add to different computers or whatever it is, you can differentiate what's what, other than a bunch of numbers. Like, you know, this is how it comes out with a bunch of numbers. So it doesn't mean anything. So if you enable it, you know, HP laptop, bedroom, home office, whatever, Commodore 64 or Tandy 1000 for your older folks, you know, that kind of thing. But you can put anything you want in there. It doesn't really matter. You just don't want to put double machine IDs, you know, except that one. So it'll look like that, and just go ahead and put that in the contact form. There's a spot where it'll say third-party ID. And then once we have that ID, then any other thing that you download thereafter, you've already got your ID. You don't need to do it again, and just let us know that, hey, I installed something, and you know, let me have it. It's free, you know, so I'll just turn it on. So what is the beta tester special? The strategy, nothing, absolutely nothing. And that's one of the things as a beta tester that I'll be asking of you, and that would be is, you know, I'm trying to come up with the price point. Now I know, again, this is for me and strictly for me. It was never really designed to be out into the public. I don't have a problem with it being out there, but on the other hand, it's not what's originally intended to, because as I say, I'm just a trader. So the strategy doesn't really have a price point right now, so you could actually get it for free. But I do have a little maintenance fee on there just to, and there's reasons for that. But the point of it is that it's through PayPal, and you can, stop it if you want it for a few months, play around with it, find out that, not for you. You just turn it off. You just go to your PayPal account, you say, and cancel, cancel subscription, and that's the end of it. No more. That's said and done. And that's really about it. So now I will say that once canceled, that the original price, so if you get in at $19.95 and this goes up, which it has already gone up, they can't get that price back again. So if you cancel, and then a month later, 2 months later, maybe I come out with a new edition and you're like, oh, I want to get it now, that price may not be the same price, and I can't go back to that price. So that is subject to change. I have absolutely no clue where it's going. I can guarantee it's not going to be $19.95 a month. Eventually what will happen is we'll dump this whole part. I'm thinking we'll just dump this all together and there'll be a price there. And what that is, I do not know at this point. So if you're that kind of person that can, want to play around but keep in mind that there are going to be some hiccups. So, it's still in beta, so we have discovered some issues. So you have to have a little patience with, getting things fixed if you did discover something. And again, this is great for sim, playback, get it, especially with all the settings. I would definitely recommend sim and playback, because otherwise you're going to be, if you're going live, things are going to happen. And I just wouldn't recommend it. You have to feel comfortable, as I suppose with any strategy or indicator, whatever. You have to feel comfortable with it and know what it means and know what it does. So anyway, so as I mentioned earlier, we have the trade room, we have Discord, we got Skype, just a bunch of traders, just talk. It's good to know if you have any questions, like, hey, does anybody know of an indicator that does this, that, or the other? Or, hey, I can't get my, Ninja's not loading correctly, whatever. There's always, it's a nice little community to have in there. It's under the community tab, all those. Now, Discord is relatively new to me. I frankly don't even know what I'm doing. Skype has been around a lot longer. We've got over 100 people in that group. And so some are just, hanging out, and some are more active, obviously, as like anything. And but Skype is definitely more active. Discord, as I say, it's still kind of new, so it's not as active, but I guess it is coming with the younger generation. And then the trade room is where I like to be available just for helping other people if they have any questions. And then obviously I try to share my screens the best I can. I change things around. I'm changing, matter of fact, somebody in the room the other day talked about UB. Well, I've never traded the bonds before, so I'm like, yeah, sure, why not? So we threw it on and just watched it, and so we're gonna check it out. And then the platinum was the other one, and we're like, surprisingly enough, I like platinum. It's you looked at the tick value, you looked at it, you looked at some past history on it, you talk about it a little bit, you say, well, let's check it out. So I threw it on, and now I'm just getting a little bit more statistics on it, because I gotta find out. It only trades for a small period of time, but who cares, because it's just going on in a little corner of your chart. And if it only takes one trade, then okay, so what? As long as at the end of the month you're making some money, it doesn't matter. That's what the game's about. And then, of course, as I said, social hours is more for chit chat and things like that. So I don't know if anybody has any questions. I guess now would be a time. How do I go through this? Is Marina's not working. The contact form is not working. That's interesting. I'll have to look into that. I'll do it right now. Contact. That's working fine for me. Don't know what to say. I will just do it right now. Anyway, if anybody has any questions, or Rob, do you have any questions?
I don't have any questions. I was actually just going to your website to click the contact button and paste it.
I just did it, and it works fine.
Because I noticed the gentleman has a typo where he, put that in. So there is the contact page link in the chat box. If
Yeah, if
Mr.
you
Tran
start
would
at
like to
Tremper,
click on it from the
yeah,
chat box.
yeah. Okay, tremper.com, and then the contact form is on the right side of it. Or if you're on a phone, it's a little drop down menu or something. But yeah, I just did it, so it's working. So in any event, going back to, so here's the target zones. Now there's no target on here, so you're not going to see it, but this is the target zone, this is the status box, and this one here, this one isn't available yet. This row actually is moved. We moved it up to here, but here's all your stats. You can turn any of these on or off as you please. I kind of like to see them, trade time, how long you've been in a trade, position, that kind of thing. If your spouse is nearby, you can hide your financials if you don't want them to see that. It tells you about unrealized, and this is more for, because everybody's getting into those prop firms now. And actually, if you go under referrals on the web page, and you go to referrals, there's a page there for discounts, discount code. And there's a lot of, every time somebody's throwing discounts out there, I'll advertise it in there, and so you can kind of see. But seeing that everybody's kind of doing those prop firms for money, you really got to know the rules. And this is your account peak, and this is how much you got to play with. And that's not going to go up until you hit your goal. So even though your account peak might go up to 51,000 or whatever, this is still going to be 25, because you can't go past until you get up to a certain level of whatever it is. And I have it defaulted to that, but you can change it once it's finalized. And then, but when it goes down, when you lose a trade, then you see this starting to go down until you go down and down until you bust your account. So it gives you an idea of where you are, real time, face, right in your face kind of thing. You can see Helix is timed off right now. Actually, if I played it again, it'll go back on again. So anyway, these are the charts, and this is, look how clean it is. I had really kind of chuckled when Trader Chick said about, getting rid of the indicators, because it was just me. It's exactly what I did. Is I got rid of all my indicators. So this is it. This is that little 20-second thing again. I wish I could do this every day, but I just figured if I'm going to make a video, let's do it on the last week, because it was beautiful. So you can see, like, at 8 minutes, it's 9:43 right there, 9:43, and it goes on at 9:35. That's my timer set. You can change it, of course, but I have it set. And these are the entry zones, things like that. These are touches, and this is just particular. This happens to be setup 3 that I'm working on, and that's what I'm using. But I'm not even showing. There's the setup 9. That's different procedure. It doesn't take as many trades, and setup 1 and 2. And so anyway, that's really about it. So that's all I got. So I think I'm actually on time, so I probably can. What time does Helix?
Steve, you're very on time. You have a couple more questions about how many PCs can someone install it on, like a licensing issue.
I do,
and you have a video tutorial about how to install it and whatnot.
Yeah, I see it right there. How many PCs can you install? I just have it one. Well, you can install as many as you want, but it's one subscription per third-party ID, license ID. There's reasons for that, but I don't have time for that. Do you have a tutorial? Yes. I would, I would start with going back to the Helix page itself and going to, if I could do this really quickly here. Let's do this here, if I could do it fast enough here. So go Tools, Helix, and then all down in the videos. There's a 20-second video you just saw. There's a little introduction, which maybe 5-minute video. And this one here is that index. So if you watch the full video, plan on 2 hours. But if you're interested in just seeing, hey, what is what is the higher time frame? You just click on that. It'll just go right to that spot. Or if you want to know what the pivot trailing stop is, this is like a 5-minute video specifically designed for that. It's a little supplement. And I'll add to this as time goes on. But that's what that is. And then are you working on a scalping? Well, scalping, I've really never been a scalping kind of guy, only because I don't like just taking 2 ticks and then seeing the thing go to 100. It kind of feel that I lost out. A lot of time I don't even have a target. I don't use targets. My stop is my target. So I'll just who are you to say where it's going to stop at? Nobody knows. So, I mean, I get to find the risk very easily. I can just put my stop there and that's the risk. But how can you really tell where it's going to go? So, sorry, in any event, it can be done. Yeah, just put your target at 2 ticks or whatever and do it all day long, I suppose. You just change your settings and that's easy to do. But yeah, I mean, it's all doable and it works on all that. Yeah, I've tried 60, I've done 60. You've only got so much screen space. So yeah, ES I don't do because it's like watching molasses drip out of a jar. I don't like that. I like ADD on steroids, and that's NASDAQ because the things move. So hopefully those answer your questions, and respecting time, I'll turn it over to you, Rob.
Hey, appreciate you, Steve. Just a heads up, I sent you my personal email address in the admin chat. There's a couple of questions I have that are unrelated, but we thank you for being here. The Helix sounds great. Ladies and gentlemen, this is Mr. Steven Tremper of Tremper.com. He has a great new piece of software, and he is a great programmer. The new software is called the Helix. If you're interested in becoming a beta trader, you can learn more by clicking the link below that I put in the chat box when we had that contact issue. His tools have been a game changer for so many traders struggling with over trading, the emotional issues, things that traders commonly face. Thanks again for being here, Steve, and making such a generous offer to our audience today. I hope you have a great weekend, and if applicable, a happy Father's Day.
Thanks.
Be well. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders to bring you the most credible and qualified to participate on our shows. Our next presenter has been trading futures for the past 10 years and specializes in news and event-based trading. He's currently the trading director and the trade room moderator for 10minutetrades.com, and he's designed many courses and setups over the years, trading real-time market-moving events such as job reports, bond auctions, and bank rate statements, just to name a few. He's been hosting and trading with a live account in trade rooms for the last 7 years, and if I can make him the presenter, I have to click something, excuse me. I'm happy to give you Mr. Leigh Goldstein of 10minutetrades.com. Welcome back to Traders Corner, Leigh.
Hi, Rob. Can you see my screens? I'm just getting set up. I just got your little link here so I can show my screen.
Swap screens. I got your presentation up. We can obviously hear you. You're welcome to take the reins and show us what you got again. I know. Okay. I always love it. And hey, let me tell you, when the offer you made with the trial in the room, I was in there a day or two, and what I saw was pretty amazing.
Well, I'm sorry I didn't realize you were there. You should have told me you were there.
Hey, I'm a full-time dad of a 2-year-old that's a stay-at-home kid and just starting school in another week or two. So, I don't make a lot of noise when he consumes me, but thank you.
So you can hear me and see, because I'm not seeing the questions from people, and I'm not seeing who's in the room. So just a heads up, maybe at the end you can.
My fault, you can see it now.
Everything. So give me 2 seconds just to get everything set up so I can see everyone's questions, and I'll get going. Okay. Thank you for that. Okay. So everybody, I want to thank you for spending time with me today. My name is Leigh Goldstein. I'm the trading director, and I guess I'm the education director also at 10 Minute Trades, and we're really excited. It's coming into July 4th. It's almost here. Every July 4th, we have a fantastic promotion, or we do something exciting for 10 Minute Trades, and we're doing something totally different this year. We're going to have what we call our 5-day ABT Freedom Challenge. It's going to start July 10th, but we are getting started today, and get into all the ins and outs of it. But the first thing I want to do is just explain the whole concept of what we do. ABT is appointment-based trading. The whole point of what we do is we make an appointment with the market. We don't sit at our computer all day long. We trade at a specific time. We're using NinjaTrader as our trading platform, and we are trading futures, so keep that in mind if you want to get involved. That's the best thing that you could be doing. Obviously, if you're new and you want to see what it's all about, it doesn't matter what platform then, it's a fantastic learning experience. But I just want to show you 2 trades that we took this week to give you a total idea what I mean specifically about appointment-based trading. So if you know, it's a fancy way also of saying news trading. So this week, there was some very important news. We had the FOMC statement, of course, and we do trade that. And in fact, I can show you that, what happened. And we also traded US retail news, which was a very interesting collection of news events. It was US retail news. It was Thursday jobless claims, or the unemployment claims they call them. It was also Philly Fed, which is a Fed report that covers the Philadelphia area for manufacturing and other economic conditions. And also the Empire State Manufacturing, which is another Fed report that covers the New York area. And we trade all that. We have software that lets us set up a trade. Let me show you exactly what happened. I just want to make sure everybody understands totally what I'm talking about, appointment-based trading. So the end of the week, let me just make sure I get the right video. So bear with me. I have so many videos in my file. I'll tell you what. So US retail, I hope I can find it. I gotta have it. Give me 2 seconds, because it's one of the most important videos that we traded all week. And I think I grabbed the wrong video. Here we go. All right. So once again, it was US retail news. It was unemployment. And you can see one of the things we do in our trade room, we show all the events that we're looking at. We use a lot of free tools and we use a few paid tools, but it was continuous jobless claims, New York Empire State, Philly Fed, and US retail. And it was 8:30, June 15th. And this is exactly what happened in our trade room. We were trading live money. We have a setup that puts orders above the current market. Those are the X's. We put our orders below the current market. And the idea is we study events. We figure out the best way to trade the event. It might be a reversal type trade. It might be a breakout type trade, but we put our orders on the chart. We're trading before, we're putting our orders on the chart most often before the event, before the news is released, and then we get pulled into the market. The way that we trade US retail news, we know that that news more often than not is going to move in multiple directions at the exact moment that the news gets released. So we put orders above the current price, but we're actually selling the market if the market goes up, and we're going to buy the market if the market goes down, because for us, this is a specialized reversal trade. 5 seconds before the US retail news came out, our orders were on the chart. You could see that the price whipsawed up and down. 3 seconds, I had a profit of $710. That was 3 seconds. That was US retail news. I wanted to show you one other thing, and I could also show you one of our members traded along with us, and he also sent me his video, and I could show you that real quickly. I believe I can. Let's see if that'll work. He sent me a very unusual file. It was using Camtasia. So let's see, I could show you. It's very small. So you know what? I don't know if you'll be able to see it. You'll have to trust me. He sent me his retail trade. He was our trader of the week. He made $800 on US retail trading live. And he trades a collection of, he has a trade copier, he trades prop accounts, he trades live money, does a lot of different things. And he had a profit of $800 on US retail news. And then we had an interesting situation where we traded the FOMC. The FOMC is probably known as one of the most volatile events, and in some ways you could say possibly one of the most risky events because of that. And we have a setup for trading the FOMC. It took place at 2 o'clock. Our orders went on the chart. In this particular event, I'm looking for a breakout, and what that means is I'm looking to trade in the direction of the move of the market, not a specialized reversal trade. And I'm trading the NQ futures. On retail news, we were trading the gold futures. All right, so 2 o'clock on Wednesday, the FOMC did their thing. They didn't raise rates. It's still almost always, no matter what they do, it has an effect on the market. Something fascinating happened, though. Look at what happened here. The price blasts through my orders and it didn't fill me because of liquidity issues, which sometimes happens right before an event trade. Orders can dry up, it's possible. So our software had put our orders on the chart. I was getting ready to cancel the trade. I watched very carefully. I just had a delayed fill, and I managed my way out of the trade by protecting my first target, which was 40 ticks, pretty big target for a first target. And on that trade, it took 15 seconds. We made $240. And it was an unusual event. That actually was our trade of the week. We have 2 videos we make every week, members trade of the week and our trade of the week. With our trade of the week video, we try to show the public, because we emailed this video to everybody we know that's on our list. And the trade of the week, the idea is obviously a really good money maker, something unusual, a good lesson, a good trading lesson. And this was a good lesson about, just keeping your wits about you. If something unexpected happens while you're trading, always keep your wits about you, because you never know what the market's going to do. Especially when you're trading news events, you want to be aware that the unexpected can sometimes happen. The unexpected was I didn't get filled, but I didn't worry. I knew that my software was still set up, and I just usually, when you don't get filled, you don't get filled. In this particular case, we were lucky. The market kept moving in our direction, and we had a nice fill short and were able to hit our first target. So what's the point of everything I just did? I showed you, I'm teaching you, if you don't already know, what appointment-based trading is. Every week we make a schedule. We know in advance what we're going to do, and we create that schedule. And that schedule, our 5-day appointment-based freedom challenge, and we're using the whole vernacular freedom, July 4th freedom from sitting at your charts all day. Hopefully the freedom to make extra money if you're a full-time trader or you just use us part-time. The idea is to get some freedom in your life by making extra money. And that's the whole point of our 5-day ABT Freedom Challenge. It starts July 10th. And also the whole idea of the challenge, we're going to walk you step by step. Our whole mantra, how to make more money trading in just 10 minutes a day without wasting countless hours, praying for setups that never happen. That's been our mantra for years. We have been the same in what we do for years. We've just added more and more different types of trade setups over the years as we've updated our software. Almost every year we have a major software update, adding new features, new setups. And it's been a long ride for me. I've been with 10-minute trades for 7 years now. That's a long time. Just the usual disclaimer, always keep in mind everything we discuss, educational purposes. Keep in mind you can lose money trading. Don't risk money you can't afford to lose, please. So trade smart and use common sense. Read all the disclaimers so you know what's going on when you're trading. Okay, so the ABT challenge, we're going to take you step by step, learning how to make money and also how to spend just 10 minutes a day in the market. If you noticed, both my trades were no more than 20 seconds long. Many of our trades take place in a very short period of time. We believe that trading should give you the freedom to live life on your own terms. And that doesn't always mean just that you're going to make money. It also means that you're going to have your time back. And that's a gigantic feature of our trading system. We don't sit in front of the computer all day long every day, because we know exactly when each day we're going to be in our trade room. We know the exact time, and that's how we set up our week. So no more sitting in front of charts for hours and hours every day. Now, I will answer any questions that come in. I'll answer them at the end of the presentation, so feel free to type them in and I'll be happy to answer everything. So the challenge goals are important, because a lot of people, what we have found over the years, we've been presenting at Traders Corner for years. We almost always sell something. I am not selling a single thing today. What I'm offering is going to be completely free, no gimmicks. We're not charging for you to take the challenge. But here's what I noticed, no matter what, no matter all the years I've been doing this, all the offers we've made to people, a very tiny amount of people ever use what we sell. Very few people trade. Very few people take advantage. And we've discovered that when we do these challenges, we get people involved. And our goal is to have you take your first appointment-based trade, get into a momentum so you start to trade consistently. And the idea is to help you transition into live trading if you haven't been. I have just seen so often, I've seen people in our trading room for years never take a live trade. And since we've started doing these challenges, and they're 5 days long, we had a 21-day challenge. The point is tremendous education throughout the challenge. By the end of the challenge, you are going to be able to take your first trade if you never did it. You're going to know enough about appointment-based trading to get involved. And it's just a fantastic experience from an educational standpoint to learn something completely new if you've never traded this way. No charge. You're going to learn all the ins and outs of our trading system for free. And that's what we're doing July 4th. So it's called, we call it, in the old days, we used to just call it news trading. Just to give you an idea of how it's going to work, what the 5 days are going to include. You'll learn how to set up your futures trading account, how to choose the broker. Actually, with NinjaTrader, our software uses NinjaTrader. You don't really have a lot of choices in brokers these days. If you want to use NinjaTrader, you have to use the NinjaTrader brokerage, but that's okay. They do a pretty good job. We also go over the free trading tools that we like the best. We go over NinjaTrader Essentials, setting up your charts, all the basic things that a person needs to get started. You'll learn how to find the events that move the markets. In other words, how do we come up with the schedule? We're going to teach you how we come up with the schedules. We'll teach you about using the various economic calendars. We have our daily trade reports. In other words, after we create a schedule, we then have our DMMs, we call them, daily market mover reports. That's a report that goes over many of the trades that we're going to be taking in the trade room. For instance, that FOMC trade, we had a daily trade report that our members can look at the day before the FOMC, because we send our daily reports the day before the event, and it shows people how we're going to possibly, and I say possibly, trade that event in our trade room. The only reason I use the word possibly is because if you are a trader, nowadays, you know how volatile these markets can be. There's a war going on. We've got the Fed raising rates, not raising rates. That creates volatility. So, sometimes we will modify at the last second because of market volatility the moment before a trade. We might make changes to the way we're going to use our setups. That's why being a trade room member is very important, why coming into our trade room before an event is very important in terms of being able to be up on the last second knowledge of how to trade news events in these volatile times. Also, we're going to teach all about using our software. Our software is called JOBB version 10. It's a suite of 2 strategies. And like I said, our software has been around for 7 years. It also is a standalone discretionary software tool. If you're not a news trader, you could still use our software to help manage. It's a super ATM program, and it can be used with NinjaTrader whether you trade news or not. So that's another element of what we're going to be doing. And again, this is a 5-day challenge. Okay, that's the first 2 days. Day 3, we're going to go through the fundamentals of the software so you can practice bracket trading in sim, or breakout trading, we call it. We're going to teach about our trap trade setup. That was the setup that I was using on the US retail news. So we have multiple setups. We also have a pro trade room. So let me just backtrack a little bit. So theoretically, we're here in day 3. Day 1, you're going over the basics. Broker, finding the broker, setting up your brokerage account, getting your charts, downloading the platform, all the stuff people often need help with and don't know where to get the help. And then day 2, we're going over, finding the trades, how to use the calendars. Day 3, we're starting to get into the real nuts and bolts, the software, specific setups, the pro trade room. All of those events are taking place 1 hour a day of education, 5 days in a row. That's the basic premise behind the challenge. And if you're interested, you could go right now to www.5dayabc.com. You can read through some of the info while I'm presenting here. Like I said, free. We are not charging a penny. Then we get into day 4 and we start talking about something that we call family money trades. So we have trades that when I was in the trade room a couple of years ago, I'm always texting my daughter and just telling her, hey, we had an awesome trade today. You should have been here. This is a trade I would have traded my family's money on. I would trade your money on this trade. And we came up with the moniker, hey, let's come up with the best of the best of the best trade setups, and we'll call that a family money trade. So we now have what we break out some of our trades from the main collection of trades. They're the best of the best. We call them family money trades. And we explain how to use those, how to trade them. We have special setups for them. Now, keep in mind, we're on day 4 here. We also have something quite unusual that we came up with, I would say about 4 years ago, maybe 5 years ago by now. We realized that we were noticing we had a lot of afternoon trades. There's an oil trade in the afternoon on Tuesdays called the API report. We've been trading that for years, and we noticed certain times of the year that the NQ in particular was moving really dramatically. And we put 2 and 2 together. We realized, what, we've got earnings trades coming out during a lot of the times when we were trading in the afternoon. We also used to have an end of the day trade that was being affected by market earning trades. And we realized we could come up with some setups using our software to trade futures on earnings. That's a whole collection of other trades that we do in our trade room, trading earnings with futures. And in fact, let me give you an example of a video. So one of the big ones this last quarter, now keep in mind earnings trades are quarterly. When we first started doing earnings trades, the idea was we were just doing what then was called the FANG reports. Facebook, Apple, Amazon, Netflix, and Google, or Alphabet, really, it was Alphabet. And then Facebook kind of, ruined it for us by changing their name. So we can't really call it it's the MANG now, Meta. It's not Facebook, it's Meta. So I'm still calling it the FANG stocks. Everybody still calls it the FANG stocks. They'll always be Facebook to me. But just to give you an example, so we discovered that these events, these earnings trades were, depending on the stock, were moving, in particular the NQ, like crazy. I mean like crazy. I mean gigantic moves, not 10 tick moves, not 30 tick moves, but 100 tick moves, 150 tick moves. Let me show you a couple of earnings trades because they're I find them fascinating. Apple, one of our favorites. This was last quarter, so it was a few weeks ago. Apple was May 4th. Our software, we came up with a breakout trade. So let me explain what I mean by a breakout trade. Very simply, when we say we're doing a breakout trade, we put a bracket on the chart above and below the current price. Here you have a long, here you have the current market price, here you have an order to go short. So we've got a bracket to the downside, we've got a bracket to the upside, and when the news comes out and the market moves, as you're going to now see on this Apple earnings trade. So we study and find out, when does Apple release their earnings? Is it at a reliable time regularly? And it is, and we can put our orders on the chart at a specific time of day. There's our orders. Apple releases their earnings. Watch the price, it just explodes the NQ. Last quarter, it took a few seconds. It shoots up. It didn't quite make it to my third target. That was a $735 Apple earnings trade, and that was less than 15 seconds. The same quarter, we traded Facebook's earnings, but you know what? Look, I made money on Facebook's earnings. I made over $1,000. Everybody that traded it with us in our trade room made a significant amount of money trading Facebook. But I wanted to show you Home Depot, because as time has passed, we've expanded the way we trade earnings, and it's part of the challenge. One of the days in the challenge, we do significant education on trading earnings with futures, the way that we do it. Home Depot, they don't move the NASDAQ. They're not a NASDAQ stock. You know, Home Depot is a Dow stock. They're also, so when you look at Home Depot doing their earnings, it's a whole different ballgame. We have to trade a different instrument. So we decided, let's test the YM. They're a Dow stock. They also could move the ES futures. And Home Depot this last quarter, first time we ever traded it. Now, we didn't trade it blind. I did my homework and I went back a couple of years and tried to find when Home Depot released their earnings. Was it at a reliable time every quarter? Not always. So we had to come up with a viable setup, a safe setup, using our software to trade Home Depot earnings. So Home Depot earnings, it's not a breakout and it's not a trap trade reversal trade, it's a range trade. With Home Depot, we are trading around a certain time. They release their earnings very early in the morning, 6 o'clock. So we get up, we go into our trade room, and we create a range based around time. And that range then, after a 30-second time frame, puts our orders on the chart above and below the range. When Home Depot released their earnings last quarter, watch what happened. It pulled me into the market short. It pulled back a little bit. Now, if you notice, we're using various tools. I'm actually watching Home Depot stock, and I'll get into that in our challenge and in the class, how we do this stuff and integrate it into our whole setup. But now you notice Home Depot pulled us in short, and I'm now trailing my stop because I don't know if the price is going to reverse, if it's going to keep going down. It turns out it hits my target. First time we ever traded Home Depot, that was a $250 profit in about 23 seconds. So that was exciting because that was the first time we ever traded Home Depot. And it was great. You know, it worked out great. NVIDIA was a home run this quarter. NVIDIA, you know, with AI being the catchword, NVIDIA, you know, does all this AI stuff. Nice thing about NVIDIA, they have a reliable time that they release their earnings lately. It's not a guarantee that they're going to keep releasing their earnings at the same time. It's one of the differences between trading earnings, say, and trading jobs reports or US government news or bank reports from overseas governments. Those reports are very reliable in the way they're released, given the time that they release them. Earnings are different. They're not regulated. And we have to do the research and find the companies that release their earnings regularly around a certain time. Otherwise, it's almost impossible to come up with a setup. But because remember, we're not trading the earnings stock. We're not trading Apple stock. I'm not trading Home Depot stock. I'm not trading NVIDIA stock. I'm trading the NQ on NVIDIA because that's an NQ stock, and I'm trading the YM on Home Depot. But NVIDIA was awesome. Last quarter, they were crazy. It was 5 minutes late. We missed the trade. This quarter, look at the candle on that move. It just exploded in an instant to the upside, hit all my targets. That was a $760 trade. That was about a 4-second trade, if that. So look, I've showed you a whole bunch of appointment-based trades. Those are appointment-based trades. We know in advance when those events are taking place. I don't have to sit around the whole day waiting for it to happen. We go into our trade room sometimes 15 minutes before an event, most times half an hour before an event, and we study the previous events. We talk, we chat, we listen to music, we do all sorts of things. We trade, and we go through that whole experience together in our trade room, and it's fantastic. And that's what we're covering in the challenge. We're now finished with our 3rd day. The 4th day, I'm sorry, that was our 3rd and 4th day. On day 5, we're going to cross the line, the finish line, hopefully get you to start trading with us using our software. And we cover risk management, trading micros, bankroll management. We talk about prop trading companies as well. And that's the whole idea of a challenge. The idea of a challenge, to just make it short, sweet, and simple, once again, is to teach you as much as we can possibly cover, which is a lot, in our 5-day challenge, so that you learn and can trade appointment-based trading as a new style of trading. If it's something new for you, if you've been a member before, this is an incredible refresh. A lot of people were members, they leave, they come back, they leave, they come back. All the trade room folks like us know that that's the case. People, they like to try all different things. And also, so the challenge is free. We are not charging. www.5dayabc.com. We are all about over delivering. So we have, it's also fun. The whole thing about a challenge, it's fun. You can win the challenge. There's cash prizes. In other words, hey, maybe you're going to take part the most. Maybe you're going to give your ideas. You're going to participate, and you're going to be one of the best people in the trade room who has great ideas, who cares, who tries to help other people. You could win the challenge. And then also the idea is, when the challenge is done, we want this to be a meaningful experience for you. We want it to be a transforming trading experience, so that it changes the way you trade or offers you a whole new method of trading. We're not saying to you, hey, this is the only way that you should trade, but we are saying to you, this is one method that you should put in your back pocket and keep it as one of the methods that you use in your trading arsenal. And that's the whole point. So we have cash bonuses. We've got hats and mouse pads. It's free. We've got a appointment-based trading workbook. The workbook is an overview of the challenge. It's got exercises, daily action items, so you stay focused and take part in what we're doing. And it's the lesson plan for each of the challenge days. The book is free. The workbook is free. Bonus 2 is daily live coaching. Those are the training sessions every day for 5 days. It's going to be for 60 to 90 minutes, okay? And you could trade in sim. You don't have to trade live if you're already a ninja trader. But we're going to do at least minimum 60 minutes a day for 5 days of the challenge. Most of our sessions, I'm not sure we've totally decided what time we're going to start our training in this particular challenge. We've either done noon or 3 p.m. Eastern time. We'll see. And so that's bonus number 2, daily live coaching. Bonus 3 is we will set up a private live Facebook group that'll be live through the whole challenge. And actually, we will keep it live probably about 30 days so people can ask questions, be engaged, download documents, download trade setups. I know that there's always a few people that don't like Facebook. They don't use social media. I don't know what to tell you. It's like, I don't watch TV, whatever. then you can't really take advantage of all the bonuses that are going to take place in the Facebook group. I'm not Mr. Facebook, but it's just a technique. It's just something we can use to communicate. So it is absolutely worthwhile. We have great sessions. We also stream live all of our sessions. We stream live on Facebook, and we also have a special, usually a go-to webinar room where we're giving the lessons. And when appropriate, we'll do some of the lessons in our trade room. But that private Facebook group is a great place to get information and to get help when you need it, when we're not live with the teaching. So that's why it's great. And then finally, we have our live graduation ceremony. How to get started with a small account is the lesson we'll be giving in the live graduation. And the live graduation, we talk about how to actually win the challenge. There is actually specific things you can do. We do have, like I said, our first prize is $250 and 1 month of mentoring in our trade room. The second prize is $150 cash and an hour of mentoring in the trade room. And then the third prize is $100 cash and also an hour of mentoring. These are real cash prizes. It's part of the challenge experience. The key is education. That is the absolute key in the challenge. So once again, here's everything that you get. And folks, it's free. We are not charging you. It's www.5dayabc.com. We are starting July 10th. You want to sign up now. We will not take 1,000 people. We will put a cap on how many people we take. So if you sign up now, you'll guarantee your spot. And again, there's no charge for taking the challenge. You'll get the 5 days learning how to trade using our system, okay, which is not sitting in front of your computer all day long, but trading on a schedule. And obviously that means trading on your schedule, okay? Not trading just on my schedule. You can pick and choose the reports, the events that you want to trade, and then all the bonuses, the private Facebook group, the daily coaching in the lessons, the appointment-based trading, the challenge workbook. Myself and Eric, one of our founders, will also, I'm the educator. I'll be teaching all 5 of the 5-day challenge classes, and Eric has bonus classes throughout the challenge. We had so much fun in our previous challenges. I'm not kidding. I mean, I'm really serious. Our first challenge was unbelievable. I had been hit by a car riding my scooter in the city, and I had to do a 21-day challenge. Frankly, I don't remember how I did it, but if it wasn't for the challenge, I don't know if I would have survived my injuries. It got me focused on forgetting how badly hurt I got, and we had the most fantastic 21-day challenge. Then we did another challenge. Recently, we've had what the heck was it? A 7-day challenge that we finished up a couple of months ago. It was a fantastic experience. A lot of members are now members of our trade room. So it's just a fantastic way to do it, but there's a big bonus also. So to join the challenge for free, www.5dayabc.com. I want to make sure I get through all my slides. That was all my slides. So let me now go through the questions, because I know that people are saying, well, 5 days, there's no way I could learn to do it. So we have set up a special bonus that you could take part in. If you want to actually get started today, go through the registration process, and there will be a way to come in and join our trade room prior to the challenge. You could get warmed up, see the way things go. Yeah, it's a lot of time. In other words, it's a small amount of time to learn a lot. So someone is saying, I'm concerned that there's too much to learn in 5 days. Do we make things bite-sized for students? So Ed, that's what Ed is asking. It's all about how we teach it. And like I said, this is not our first time. We're on our 4th challenge. I've got the education down to a very nice presentation. Very honestly, when we do a challenge, I don't look at the clock. If everybody's questions aren't answered, we stay and we get everybody's questions answered. So I will tell you this, Ed, it's never been an issue that somebody could not learn how to do it. And it has never been an issue at all that people can't deal with it because the amount of time is too short. So I will say that it's not an issue. Peter, the Tremper link is totally different, just so you know. Steve has his own setup, the Helix system. So that's a different thing. Let me go through a lot of questions. So give me 2 seconds, folks. How is trading the news different than, say, trading earnings? Both risky binary events. Okay, David H. Let's be honest, David H. Trading, risky, right? The concept with trading is make your trading as safe as possible. So yeah, all trading is risky. Trading earnings, trading events, no more risky than other trading, as long as you're using the right tools to help you do it the right way. So that's the key, using the right tools, trading the right events, knowing when not to trade. You know, I couldn't help hearing Steve in the previous presentation. He's a smart guy. He's been doing this a long time. We know because we've been doing this for years. The less you trade, the more you make. Remember that and make that your mantra. The less you trade, the more you make. How much do you need in your trading account? Lawrence asks. So that's different for everybody, Lawrence. If you want to trade full-size contracts, if you want to trade real cash money, then I would recommend, you know, $7,500 to $10,000 in a normal futures trading account if you really want to trade. You know, one of the things that frustrates me, I think the right question is, what's the most I can put in my account? Not what's the least. Think what's the most you can do. Think what's the biggest you could do. What's the most you could achieve? When you do something with the least amount, you're limiting your ability. You're worried about money. If you only fund your account with the bare minimum, you're always going to be worried about never having enough money to trade. So think of it the other way. Now, yes, of course, you need to know how much you need to trade with, but you could trade micros on almost all of our setups. You could have 2,500 bucks in your account. And if you use certain prop companies, I'm not a giant prop company fan. I'm not going to get into my rants on prop companies, but if you insist on using prop companies, you could use any company that allows news trading, and it's up to you to read the rules carefully. Apex does not let you trade news. They're not going to pay you. So make sure you know which prop account, which company you're using. Prop trading accounts are awesome, especially if you don't have a NinjaTrader account and you want to get started. It's one of the best ways to get started for incredibly reasonable prices. That's where, in my opinion, the prop companies excel in offering the platform and live data. But there are issues with all of their data feeds in terms of trading fast-moving events, whether it's non-news or just a fast-moving event. You need to know the truth, so you know the truth. We tell the truth at 10-minute trades, but prop accounts are viable. You just have to know what you're doing. Does the trade close once it hits your target? It depends how you set up the trade, Lawrence, but if that's your last target, yes, normally it will. Steve S., who's a good friend, he's known us for years, making the comment, these guys are for real. He knows them for years. Thank you, Steve, for saying that. The challenge can be a paper account, Lawrence. We're not going to force you to trade real money. You could absolutely trade using SIM. And then I'm just a couple of questions, and then I'm done. At the conclusion of the 5-day challenge, will we be able to subscribe to your software trade room? Absolutely, Edward, without a doubt. I work during the day, very important. Can the challenge work for me? Many events that we trade are after hours. We do sometimes have evening reports. Obviously, the bulk of the events are during that 8:30 to 5 time frame, but there are quite a few events that you can set up and trade after hours. So absolutely you can, okay? NinjaTrader, fill issues there. Anytime you trade anything fast, Hunter, NinjaTrader has no more difficulty with fills than any other trading platform. And anybody who says they do, they don't know what they're talking about. It's just not true. You do have to use Ninja Trader because that's what our software uses. Matt says the link isn't working. Matt, send me an email, help@10minutetrades.com. Folks, Rob, if you'll give me 1 second just to check the link for everybody before you throw me off here. Let me make
Leigh,
sure this.
take your time.
Yeah. Okay.
And I want to go back to something you've said previously, not what is the minimum amount, but what is the correct amount.
Exactly. So give me 1 second. I want to make sure our link is okay. The link is working okay. So make sure you typed it in properly. I'll tell you what I'll do. For you, Matt, I'm throwing in a link right now. You could use that to get to our page. Okay. Anybody has any issues, any problems joining the challenge, just email me at help@10minutetrades.com. And then I think, Rob, I just have one more question. Can you use this inside of a self-directed IRA? Absolutely, Edward, as long as you're allowed to set up trades. You know, I had self-directed IRAs and traded news for years. Absolutely, you can do it. It's the rules of the broker. So folks, thank you so much. I'm 1 minute over. Rob, thanks for being patient with me. www.5dayabc.com. I'd love to see everybody there. It's free, but you could also start now, go through the whole registration period, and you can figure out, you'll see what you can do. Thank you, Rob. Did you want to ask me something?
Oh, no, just thank you so much, Leigh. You know, happy Father's Day, if applicable to you. You know,
Yep.
Every time we hear your presentation, you know, I love it even more. The brackets are fascinating and awesome, and how you trade futures using earning reports on stocks as a catalyst to drive price up and down, and leverage your software to automatically enter the trade on the right side via your proprietary bracket strategy. You know, it's just awesome, and, you know, removes all the room for error. Incredible. Thank you for joining us today. Thank you for inviting your audience to your room. Ladies and gentlemen, Mr. Leigh Goldstein of 10 Minute Trades, and we hope you have a great weekend.
Thanks, Rob. I'll see you next time.
You're very welcome. We are going to keep the ball rolling and move right along to our next presenter, who you may have seen on Fox News, Fox Business Network, RT America, Cheddar TV, CBS News, or many other stations. She's an expert stock market analyst and the founder and owner of an international education company where she teaches people how to successfully trade the stock market. Her trading methodology is based on a strategy called Golden Gaps, which pinpoints institutional money in the stock market. Here to present Make Fast Profits Trading in 30 minutes a day is Miss Melissa Armo of the Stock Swoosh. Welcome back to Traders Corner, Melissa.
Thank you so much for having me. Great to be here on a Saturday afternoon.
Hey, likewise, and, you know, happy everything to you too. I can't wish you a Father's Day, but you know.
My father just left this morning. He came yesterday to spend 2 days with me in New York, and he's going home right now. He's driving back to PA, and we had a wonderful, wonderful 2 days. And happy Father's Day to all the Father's Days out there for tomorrow. It's a great, beautiful weekend here in New York City. Great weather. So luckily, some people came here today to listen to the different speakers and hear everyone talk and get some ideas. You know, if you're a father or a grandfather or a pop-up and you have extra time and you want to trade or make money on the side, trading is something that you can do that doesn't involve trading for 40 hours a week or even the 6.5 hours a day that the market is open. You can trade a selective time period and make money, or you could trade options where you put the trade on and then after you take the trade, you put a sell order and you don't have to watch or babysit the trade all day. So trading is something that everyone could do from every walk of life. Actually, you have to learn how to trade before you risk money in the market. And obviously you need the money for an account, to open an account, a brokerage account. But it's something that everyone can learn. And again, I get this question all the time. People say, well, I'm too old to trade, I'm too old to learn something new. That's absolutely, absolutely not the case. No matter how young you are or how old you are, you can still become successful trading the stock market. And I think once people get the bitten by the market bug and they want to trade, they kind of never lose sight of that dream. They always want to do it. They may take a break. They may, come back to it, take a break, come back to it. But I think the commitment is really such a big part of some of the success I've seen with clients that I've taught over the years. People that stick with it have a higher chance of success because they don't take a break and step back. They're fully committed to doing it and they just push forward. And sometimes that's the best thing you could do. It's like if you're walking up a mountain or you're on a hike or you're going through some kind of thing where you're training for a marathon or any physical exercise that seems grueling, the best thing you can do sometimes is just push forward and push through it. So welcome everyone. Thanks for having me. We're going to talk today about how to make fast profits shorting. We're going to focus on shorting in just 30 minutes a day. And anyone that has any questions, you can plop them in the question section there. I can look at them and see them as we're going along. This is me. If you've seen me, you may have seen me on TV. Again, I'm here on all national news networks. I talk about the stock market and I also talk about the economy, which is very interesting because the economy and what happens, the fundamentals of the economy don't always match up to the market reactions. So the way that I trade is based on technical analysis. Now, sometimes the fundamentals do match up with the technicals, but not always. Anyways, if you're interested in more information after today, you can feel free to call me at 929-3200-GAP. You can follow me on Twitter, Facebook, YouTube, or Skype. And you can also email me at melissa@thestockswoosh.com. And you can see me on TV too if you follow me on Twitter. I try to post my hits when I'm going to be on there. So I took this picture, actually, it doesn't even look real. It looks like a postcard. I took this picture walking in Central Park. I live in New York. I've lived in New York for quite a while, but I recently moved in the last 7 months to Central Park. And the quality of my life has changed dramatically since I've moved to a different section, even in the same city, even in the same town. And what I've realized coming near the park is that more than ever, the quality of life is very, very important. I sort of knew that years ago when I did mortgages, which is how I transitioned into becoming a trader. I wanted a new career. I was working 7 days a week, far too many hours every single weekend as a mortgage broker because, of course, realtors were showing people houses. I felt like I had no quality of life. I think the last straw for me was it was Christmas Day, and I was with my family, and I actually had a client, not even a realtor, but a client was calling me and texting me about an investment property that he wanted to buy on Christmas Day. And that was it for me. I knew I needed a new career. And at that time, I had no idea about trading the market. I didn't know that you could trade the market. I didn't know anything about anything at all. And then lo and behold, I decided to look into it, and it was just happened by chance. And sometimes things happen by chance. But one thing I've learned over the years, and again, moving brought me closer to this as well, that working less hours and having the ability to stop trading in the morning, go out and walk in the park, having the quality of life where you're not working weekends really, really makes a big difference. First of all, it keeps you young, okay, and youthful. You're less stressed the less hours that you work. So yes, sometimes it is about the money. The more money that you make, obviously, sometimes you can have a better quality of life and less stress. But I know a lot of people in New York, actually, that make a lot of money and they're extremely stressed and they have no free time and they have a horrible quality of life. So money is a part of it. It's a part of it, but time is important too. And yeah, I'm sure everyone's heard time is money. So the most money you can make, the most money you can make in the shortest amount of time actually is where you want to be. So I developed the system over the years. It took me about 3 years to develop a system where I take fast trades. I get in and out quick in the morning, and that's how I make money, and then I have the rest of the day to myself. So I think this is an important question since we're talking about it here. Again, it's a Saturday. How would you rate the quality of your life? And again, you don't have to answer in the chat. You can, but really on a scale of 1 to 10, being the best life you could live, 1 being not so much, where does your life currently stand? Someone is bringing up health. Well, obviously, that's obvious, the quality of your life. You can't have a good quality of life if you're not healthy. Obviously, Arthur is bringing that up too. So if you have good health, if you can pay your bills, and good health means physical health and also financial health. But again, part of having good health is to be able to get out, exercise, be out, not sit at your desk all day, 40, 50, 60 hours a week, which people are still doing, by the way. Yes, people are not going into the office, but they're working 40, 50 hours from home behind a desk now. So again, and you know what? People are having less socialization. So I've seen a change even in New York, in the city, where people still aren't coming into the offices. At least when people came out to the office, they had socialization. They bebopped out at lunch, breakfast, got a sandwich. Now people are stuck inside their homes so much, still working. So quality of life is very, very important, no matter how you look at it. Some people want to trade the stock market for a living to make more money. Some people want to trade the stock market for a living to work from home. I work from home. I live in my apartment in New York. Some people want to trade the stock market for a living to be their own boss, which is if you trade for yourself, you're trading your own money, you are your own boss, okay? You're making the decisions how much money you want to risk and where you want to get out of the trade and what trades you want to do, okay? Some people want to trade the stock market for a living to have an unlimited income potential. That was also one of the reasons that I decided to do this, because when I was doing mortgages, again, how hard I worked and how many loans I did had to do with the commission that I made. And so one of the things I liked about trading the stock market was I still had an unlimited amount of income that I could make. Again, depends how many trades I take, depends how the market's doing that year, depends on how many good trades I take, depends on how much I risk, okay? Same thing for you. Some people want to trade the stock market for a living to work less hours than a normal job would require. And again, this is really important, especially if you have a family, if you have kids, okay? And or if you have hobbies, like my father loves to golf. You want to do things in the afternoon or on your weekends. But while all of those are good reasons to want to trade the stock market for a living, what it really boils down to, no matter what it is to having a better quality of life, okay? When you think about the number of hours that you spend working your career, whatever your chosen field is, whatever your job is, your career is, whatever you've spent the last 20, 25 years doing, or depending how young you are or old you are, could be even more than that. You spent a huge chunk of your life working your job, okay? So again, if you're absolutely in love with what you do, you might be fine working 50 hours a week. But if you're not, that's a different question. And I think, again, as the years go on, the world changes, which we saw since COVID, people are really questioning, wait a minute, do I really like this career? Is this what I want to do with my life? Where do I want to go? Is this my dream job? That kind of thing. Again, money is a vehicle. So trading may or may not be your dream job. It's my dream job for me because of the freedom that I have and the money I can make, and the fact that I can work from home, and the fact that I can live in Manhattan, which is a fabulous place. So for you, your dream job may be something else, but again, money is the vehicle. So if you can make $1,500 in 5 minutes, you have the rest of your day to yourself to pursue something else. It could be the arts, it could be painting, okay? It could be sports, it could be music, something else in your life, writing a book, okay, that you couldn't pursue if you weren't making money trading, and that you'd have the time to pursue, more so than if you had a 40, 50-hour week job. But if you can learn to successfully trade the stock market for a living, you can have a better quality of life. You can have all the things above and more, okay, that I just talked about. Sure, if you're successful, you can get rich, and many, many people want to, and that was, again, one of the reasons I decided to trade, was because I have the unlimited income potential. But it's not just that, and as the years goes on, I realize more and more of that more money really means you have more time for yourself. You have more freedom in your life, and the quality of your life is important, okay? And the older you get, the more important the quality of your life becomes. And you can relate it to health, as Arthur was bringing up health. You can relate it to that. Again, if you're less stressed, you're going to have probably better health, okay? Because stress deteriorates you, it ages you faster than otherwise. And a lot of times people have stress at their jobs when they're working a lot of hours, or just dealing with the corporate America. Now, what do I mean? You realize that there are things in your life you don't want to waste your time doing anymore, and you realize there are people in your life you don't want to waste your spend your time with anymore, or just things that you're like, why am I worried about this? You say to yourself, there's just things that are not worth stressing out over, and you get a perspective, okay? And if anything, everyone should have a different perspective about the world and life since COVID. Again, we're 3 years outside of that, but the world has changed. You want to make a lot of money for sure, but you also want to realize the quality of the time that you're taking to earn that money. If you break it down, and again, when I was doing mortgages, if I broke it down, the number of hours that I worked divided by the money I was making on each loan, it was probably less than minimum wage, because I was spending so much time with each client and so much time with each real estate agent. But anyways, that's one of the reasons why I like the fast trades. If I trade fast and earn money, then fast trading means I have freedom and I have the time to do what I want, okay? Whether it's walking in the park, seeing the animals, the turtles, anything else I want to do, it's very calming for me to go out and walk in the park. And I made a lot of sacrifices to get to this point in my life, to even be here, to even be where I'm at today. And it was, again, for many people, I find as teaching people over the years, I've had the stock swoosh business for going on 11 years now. It's a lot of people want everything right away, yesterday, today, this second, okay? It's the sacrifices. So it's the short-term sacrifice for the long-term benefit of getting to the point where you want with your trading, where you want with your life, where you want to be, where your goals are, how much money you want to make. And again, whether that's taking a class or paying for a class or investing your time in learning how to become a good trader, your life will improve. And what I found, again, I have a business where I teach people my method, and I also traded every day in the live room. I found that many people they've shifted where they really don't have an interest in learning as much as when I started the business years ago. Everybody just wants to take trades. They just want to trade and make money. Well, again, if you learn what to do, you're going to make more money and you're going to trade a lot better. And also, it's important to learn what to do, because if I ever stop trading or teaching this class, if I ever decide to retire and not do this, then how are you going to know what I do when I'm calling the good trades that I'm calling? Learning and understanding is one of the reasons why I'm very good at what I do, because I developed a system myself, and I've been doing nothing but my gap rating system since I started trading, which is about 15 years ago. So we are going to talk about my system here today. But the point I want to make, just to right off the bat, is to set the tone that review and revamp and think about your goals and your quality of life and what you're spending your time doing. Because I think a lot of people don't think about that, and time goes so quickly. Look at it, it's June. It's less than 2 weeks. It's going to be, today's the 17th. It's almost July 4th. Can you believe it? The summer is halfway through. That's nuts to me. Before you know it, it's going to be Halloween, Christmas, the holidays. This year has flown by. So when you think about it, can you want to live in the stock market as a professional trader? The answer is yes. You absolutely, absolutely, absolutely can. But a lot of people, as I said, just do not have the right focus. They don't have the right strategy, and you need that. Now, I put here the results for last month in our live trading room. Again, I run a live trading where I call the day trades. These are day trades. These are equity trades. The average risk for this is $2,800 per trade for these results. You can take less risk. You could take more risk, okay? So again, I have the winners in here and the losers in parentheses, 59,912 for the month of May. We had a good month. I'm mostly short. So we will talk about shorts today. And the reason I prefer to short is that stocks fall faster than they rally. That's just a fact. So again, you saw that even in Friday, okay? Things fell Friday. Adobe reported. Adobe started to fall. It's a market stock. I pulled the market down on Friday. We also had some data, but the market fell pretty fast on Friday. So stocks and the market tend to fall faster than they rally. I also put in here the stats for just to show me an entire year. This is, again, an average risk per trade of $2,800 per trade. These are equity trades, which you would trade on margin. All calls I made to the room. The results for one full year, which was 651,079. We had a good year. The market fell a lot last year, but I short in a bullish market or a bearish market. You can't deny that at this point now in 2023, June, where we're at, we are actually in a bullish market. We've done shorts, we've done longs, we've done both, but I prefer to short. So that's what we're going to talk about here today. So every day I get up in the morning and I go to find the best short. If I can't find the best short, I will go long. So for example, actually, it's kind of funny looking at how it closed. We went long to video on Friday. We were in and out really, really quick, really, really fast. We made money going long to video, even though it closed red on Friday. Because again, I'm trading in the morning between 9:30 and 10 a.m. Eastern time very fast. And my focus is that I'm trying to find a bullseye, hit a bullseye every single day in one trade, in one stock, in one pick. Having a strategy to focus on daily is very important, and no distractions. And trading is a real job if you take it seriously. The problem is, like I said, a lot of people don't. Now, I also do options. We will discuss some options trades in here. I risk more money in my options trades because I want to take expensive picks, some things that are expensive stocks, okay? And I also want to hold overnight and take larger positions. So the results are higher for the options results for 2022 because I was risking $8,000 per trade. You don't have to do that. You can risk one contract. If you have a cash account, if you do not have a margin account, or if you have a retirement account, and you can only buy calls and sell calls or buy puts and sell puts, if you cannot short, if you do not have a margin account, you can do options, okay? So this was over $3 million a year for 2022 for the results, but part of it is my risk was higher, okay? You can take less of a risk, like I said. And again, some of these were calls, some of these were puts. We will go over options today as well. But day trading is part-time hours with full-time pay. You've got to have an edge. For me, it's the fast trades. For me, it's also the shorts. And for me, it's the gap, which we're going to talk about. Now, as I was talking about earlier, the economic data, things that are coming out, you can understand that money controls the world. Institutional money controls the world. You saw what happened earlier this year, back in March, with some of the banks that were failing. Will there be more banks that fail between now and 2023? There could be. There absolutely could be. Would that change the direction currently of the stock market? Yes. Yes, it would. And you need to know that. You need to know that specifically if you are in long positions for the long term, swing trade positions or whatever, because if something happens, as it has been happening, when the banks have been going under, they've been always going under over a weekend. When the FDIC has taken over those banks and they've crashed, it's always happened on a Friday into the weekend. They plan that. And so it's very, very interesting because, again, institutional money controls the world. You saw interest rates bump up if you paid attention to it before the Fed meeting this week. No, the Fed didn't raise rates, but they signaled that they will raise at least 2 more times this year or more. And they also signaled that they're going to continue to keep rates high until 2025. That's a long time. So the market had a very mixed reaction to that. Positive in the sense that they halted raising rates this month, but not good because we're going to have higher interest rates for longer than people expected. Some people thought they'd lower rates this year. That's off the table as far as I'm concerned. I don't think they're going to do that whatsoever at all. They never gave an indication they would do that, and I didn't think that they would either, looking at how fast that they were raising rates. Someone's asking about alerts. Do you have to be in the trade room to get the options? The options are a daily newsletter. The trade room is a live trade room for equity trades, and you must be there. The options is a newsletter. They get sent to your email. If that's an alert, it gets sent to your email if that's what you mean. On your average options trades, what is your, I don't follow anything to do with those things. Whoever asked that, who is that person? David. I'm trading the gap on momentum, which again, we'll talk about here in a little bit. I know I started a little bit late here today, but I want to lose track of my time. So I'll go over more about the options in a minute. I think that was David. We're trading momentum, whether it's a day trade, whether it's an option, you're doing swing trades too. Momentum trading is one of the most profitable and fastest ways to make money trading because you get a big move. It could be up, could be down. Learn how to take a position in a stock in anticipation that the stock will have an explosive move. You get in before the move happens. Okay, that's how you make money, not chasing it. Momentum trading is very profitable. And again, that's how you can make big money in the market. Now here's, for example, one that we did. This was Disney. We did a couple trades in this, but this one here I have in here was Disney 522. So again, what is a gap? Let's talk about it. I said that I do gaps. A gap is when a stock, let's just look at this one. A gap is when a stock closes at one number. At 4 o'clock Eastern time, the US stock market closes every day at 4 and opens the next day at 9:30. It's when it closes at one price and opens at a different price. This was a gap down. You also have gap ups. This was a gap up. Market closed here at 4 and opened at a higher price the next day at 9:30, and then it rallied. This was a gap down. You cannot short every gap down. You cannot go long every gap up. That is why I developed the system to determine the direction of the gap so that I knew to play it. I do not trade the pre-market. I do not trade the post-market. I wait to do trades in the open. You cannot do options in the pre-market or post-market anyways, okay? So this was an option we did in Disney. I called it on 522. We'll go back and look at it. It was really cheap, 90 cents. Again, it depends how much you want to risk. Say you want to take 11 contracts, $990 is a very reasonable amount of money, and you could have made 1210. Return on investment, 122%. So I called the Disney $90 strike puts. This is a newsletter. If you want to sign up for this, I sent them out at 9:44 on the 22nd. This was a weekly. We're doing the weekly. So let's take a look at it. Here's the 22nd. Boom and boom. There it goes. So that was a put. So you see how the stock fell. It went boom and it went down. So again, we're trading momentum. In this case here, we had a gap down and the one like that. It went down. Okay, it sold off. And so we did a put. Okay, so the newsletter looks like this, where you would buy the put, the $90 put. But I'm looking for institutional money. Who is selling it? Who is buying it? What's happening right now in the overall market? You've seen quite a bit of buying in the last few days. Okay, you can go over the reasons, this thing, that thing. where it's going to go, but right now you're getting some buying coming into this market. We're also been looking for things like selling. We shorted Target, for example. That was a nice short. If you look up that chart, if you pulled it up, I have that here in the lecture. Target fell, okay? But I'm looking for big money when I'm making my trading decisions and I'm honing it down. One trade a day, if that. I might put a few options on if I'm seeing that somebody's going to go in the same direction as the market, again, whether they're calls or puts, when I'm taking a trade. But I'm always looking for who is in charge. So I told you that we did NVIDIA. Actually, this was not Friday's bar, but NVIDIA broke out here. I did a call in NVIDIA that ran up here this week as well, which was an options trade. We did the 395 calls. It was a nice trade. I actually got out of it a little bit early because I wanted to get out of it before the Fed meeting because I didn't know the reaction of that meeting. So I was conservative, took my profits. I was up, I got out because if the market had fallen after the Fed meeting, that my trade would have reversed. But in reference to NVIDIA, again, I'm looking for momentum. In this case here, closed here, gapped up. Boom. This had a movement to the upside. And again, it was a call in the options newsletter, which was a long, and you could have gone long the stock. And like I said, we did go long the stock actually on Friday. So you're always asking yourself, who's in charge? The bulls or the bears? If the bulls are in charge, you want to go long. If the bears are in charge, you want to short because you've got to make more money. You've got to make money in more winners than losers, meaning you have to have a high win ratio when you trade. So whether you're risking $100 a trade or $500 a trade or $2,000 a trade, if you're not having more winners than losers, you're not going to make it in this game. You're just not, okay? So again, people talk about small accounts, big accounts, medium accounts, whatever is comfortable for you has to be where you're at financially. Again, whether you can trade options or do day trades on margin, that's up to you. But the bottom line is you still need more winners. You need more winners and losers. And like I just got done telling you, I got out of NVIDIA a little early, but it was a winner. You can't let winners turn into losers, and certainly not in this market. The market is bullish, okay, but I would say for the first better part of the beginning of the 2023, the market was choppy and it was in a range for a while. Whether we hold this uptrend or not, or whether we break off remains to be seen. Again, we still have 6.5 months left in the year. But if you're booking money constantly, day after day after day after day, you shouldn't be worried about where we are long term in August, September, December of 2023. The bottom line is that you need to be consistently booking money, okay? And if you're consistently booking money, okay, then that's what you have to do. You have to keep going. Somebody's saying something. Yes, I do trade. I'm not sure why anyone's saying about that. Again, I've been trading since I started, but again, I didn't develop my system. It took about 3 years. So I started trading in 2008. It's 2023. But when I first started trading, I wasn't doing this. I took one class, and then after that, I realized that I didn't know how to make money in that class. If somebody's on a webcam, what that person was. There was just a little pop in person there. That was funny. Anyways, I took about 3 years from 2008 to 2012 to develop my system. So when I first started trading, I was not making money, but then I did start making money. And actually, I was in a trading room where I was talking in the room, and I was actually kind of calling trades in the room. And then somebody said, you should start to do videos. So then I started to do videos on YouTube. And then somebody said, oh my gosh, you have a really good system. You should teach people this. And then I just kind of fell into it. So it was not like when I first started trading that I ever planned to actually teach my system to anyone. But I think one of the reasons that my system is such a good system is because I developed it for myself, not for anybody else. So the one class that I did take actually cost more money than my class right now, even though that was like 15 years ago. It taught me a basics of technical analysis. It didn't teach me how to make money. And so there's a lot of classes out there, and I think as you go along over the years, you have to make your own decision. Does this person seem like they know what they're talking about? Go and do a trading room trial. you know, and follow the person for a while. I have people that are following me. I have a guy that just signed up for the class, actually. He's doing the class next weekend. He's been following me for 3 years. 3 years it took him to make up his mind. Now that's a very, very long time, actually. But at the end of the day, whatever is comfortable for you, that you feel like you can be comfortable with the person. Again, I think that there's so many people out there, you have to kind of use common sense when you're making the decisions for yourself, who you want to go and learn from. Also, this time of the day has to work for you. I'm training between 9:30 and 10 a.m. Eastern time. If you're working or you can't do that, then you can't trade in my live room. And also, you have to be able to do options or have an options account if you want to do options. But you can open up an options account with a broker as little as $2,000. So, I mean, it's whatever works for you, whatever person seems to connect with you or resonate for you. And that's what you have to do. But yes, I do trade, and I've been trading for a long time. And I didn't start out doing options. So I started out doing day trades. I probably started doing options it was like 2014, 2015. And actually, my broker was the one that encouraged me to look into doing options. She noticed and saw my trades, and she would see that some of the trades would actually continue the second day. She's the one that said, Melissa, you should start to look into this, start to do it. And then I kind of just started doing them. And then I started applying my gap method to options too. And one of the things that's so profitable about doing options, it's not just that you can trade high cost stocks for less money, but also that you can capture overnight moves. So if you, for example, buy a call and the stock gaps down the next day, it could be way through the money. Or you could buy or gaps up the next day, it could be way through the money in a call. Or you buy a put and the stock gaps down the next day, and you could be up a lot of money if it's down if you bought the put the day before. That does not happen in every trade I take, okay? But that does happen in some trades, which make them very profitable. So you're capturing overnight moves without the risk of having a swing trade. When you take a swing trade, I don't want to get too off topic here, but when you take a swing trade, you're still on margin 2-to-1 or cash. When you have an options account to capture the overnight move, you have a fixed risk. So for example, if I risk $8,000, I can't lose any more than that. Even if I would short the market and then we would gap up on Tuesday morning, Monday the market's closed for Juneteenth, I would only lose $8,000 if the whole trade would go bust, for example. So you have a fixed risk, which is like the insurance. And that's the other reason why trading options is also advantageous. Let me see here. I check volume? Someone's asking about option flow. I check volume. I don't check anything that's not volume. No, I'm not upset at all, except for the fact that somebody's window came up, somebody's picture came up, which is actually kind of funny because that was not me, just so you know. I don't have my webcam up, but my office is not totally organized yet. One day I will be totally organized and totally unpacked in my new apartment, and then you can see my beautiful home. But right now I'm still situated that. Let's get back to what we were saying. Institutional money is in charge of the stock market at all times. A big flow of money going in a certain direction is what moves the market. Stocks, creates momentum, and sets the trend in charts. When you're looking for institutional money, you're really reading the side of the power in a stock. You want to be on the side of power in order for you to make money trading. Institutional money is in charge of market and stocks at all times. Now, I was talking earlier about Target. Actually, I didn't do this move here. So this fell. Again, I talk on TV. Everyone was talking on TV. It was on Newsmax talking about Target. You know, we didn't do this, okay? We ended up doing a later trade in this here. It worked. It fell, okay? But, you know, you could have gotten this here. You know, this wasn't on my radar. Again, this was not an earnings gap. It was a news gap. I talked about this in Newsmax, how people were boycotting Target. They were upset about some of the pride displays. Anyways, we did some options in this, and we did some day trades in this. This was 612, right here, that little bar. We entered it here at 126.50. Shares was 3,500. Risk was 31.50. Exit was 125.55. Profit was 33.25. This is a trade on margin. If you cannot trade on margin, you could have bought the 125 puts, okay? Or you buy as close as the strike as you can, which would have been the 125s to get it down. And again, you could have made money. And again, I'm doing the weeklies, okay? Oh, here's the 1 minute. So again, this is 612. And again, in the trading room, I'm live in the room. If you want a trial to the room, you can email me. I call the trades live in the room. You must be there to get them. The options is a newsletter that you just get them to your email. Okay. So anyways, this closed here, gap down, fell, rallied, we shorted it, got the drop. Again, nice trade, beautiful trade, got the drop right in here. Again, in and out quick. Depends how much size you are taking. I don't think this is crazy expensive. This is probably medium priced in Target. Then we also did Mu. Again, we were talking about institutional buying and institutional selling. What's happening in Mu? It sold off. So the entry was 65.50, shares was 4,000, risk was 3,200, exit was 64.48. Again, I'm looking for $1. Whatever I risk, whatever my position size is, I'm looking to make 1-to-1. And I did. So 4,080 was the profit with a $3,200 risk on Mu. You could have taken 1,000 shares. You would have made a little over $1,000. Again, when I'm in the live room, I'm calling the trade when I'm doing it. You must learn how to do this, but I do offer trials where I call to get in first, to stop, and then I call where I'm getting out. You do not have to get out where I get out. You can hold longer. Like I said, NVIDIA kept going. So there are trades where I will take the faster exit and they still continue to go, okay? This was the Mu here from 6.8. Stock closed here, gap down, fell. So that was the day that we shorted it. And again, this is a bearish gap. And again, this is the 1 minute. It's got to watch my time here. So again, it's all about institutional money. Just talking about here, what is a gap? A stock gap to the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. So in the case of Mu, again, it closed at 4 o'clock, gap down here at 9:30 and fell like that. So again, it fell quickly and fast. That's what you're looking for. That's what you want to do each and every single solitary day. Same thing with Target. Target, again, was institutional selling. Again, whether you did it here, whether you did it here, you had selling and you had shorts. Institutional money was selling off the stock. So there's one thing that's in charge of the market at all times. It's power money. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which there's a lot of in the market. And I think it's very difficult for traders because, again, many traders want to do things that are tricky. What I do actually makes perfect sense. It's common sense. People want to do things that are tricky because they think that's how they're going to make a lot of money. Again, it's not about that. It's about being consistent and having more wins and more winners than losers. If you have more winners than losers, you are going to make money overall. You have to risk the same amount or close to the same amount in every trade that you take. That's how you can be consistent, okay? Because what if you took one trade, say for example, and you risked $1,000 and then you took 5 trades and you risked $200? Well, you could have one bad trade and then 5 good trades and be break even or even upside down. So the point is that your risk has to be consistent and you also need more winners than losers. But everything I focus on is based on gaps. Gaps happen every day in the market on a regular basis. However, some gaps are better than others. And I'm always looking for the big move. This is another one we did. This was 524. Again, this was a gap down in the SPY. Closed here, gap down, fell, boom. Profit was 3,450. And again, this was the SPY. This was this day here. We shorted it, got the drop. So you need a foundation to trade. You need an infrastructure. For me, it is gaps, okay? And the thing is that a lot of people are buying the dips right now in the market. It is working because the market has rallied, like I said, for the last couple of days and the last couple of weeks. That's not going to continue all year. So whether the market's bullish or whether the market's bearish, I'm always looking each day for something different to do. Some days I do the market. Some days I do something different. But a stock is most there's gaps every day. Whether I'm finding a good gap or a gap that's not good is up to me when I look at the rating system when I'm analyzing something. And the reason I prefer to short and I'm focusing on bearish institutional money is because short moves happen very fast and very quickly. And again, you know, we've done the market, but the market's been rallying quite a bit lately. So, I mean, there's times where we'll do the market, but there's times where we're looking for very specific stocks like Target, or even we did Foot Locker. This was one we did. Funny to look at this here now in the SPY. I did the 415 puts. Again, this is crazy to think about now. This was a month ago. It was before Memorial Day weekend, May 23rd. I bought a put in the SPY. I'll go show you the chart in a minute. I mean, to think about where the market's at right now, this is crazy, but this was pretty reasonably priced. $3.25 cost 7,500. So again, my average risk is $8,000 per option trade. Again, I have been trading options now for over 8 years. If you're someone that is new to options trading, I would say keep your risk under $500, okay, or under $300. Even $1,000 is a good risk. So you could have made $1,500 with a $1,200 risk, 125% investment on this trade. Let's look at it. This was 8:36 in the morning. I sent it out, the 415 puts. Here was the day. Again, SPY closed here, gap down, take it over, fell through into the strike, gap down again here, fell through. See it? I don't know if somebody's phone is ringing. Somebody's phone is ringing.
Hey, Harry Boxer again.
Can you hear me? Anyways, the time of the day is so important to make money. And
Melissa, I apologize. One of the other presenters got unmuted somehow.
That's why I was like, okay. I've been popping in and out all day. I'm like kind of laughing at it. Just, as long as you can hear me, I'll just keep talking through it. This is like live TV, where something happens like in live TV, which has happened before. One time I was on Newsmax, to tell you really quick, on live TV, and the feed cut off of the anchor. I couldn't hear what the anchor was asking me, but I knew what the topic was. I said, I can't hear what you're saying, but I'm just going to talk. Talking because it was through Skype. It was on a Skype hit. Anyways, getting back to trading, once you learn how to do it, it's really, really not hard. Does it mean that you never have hard days? No. I have had some hard days. Over even the last month, I've had some hard days where I'm in a trade, it doesn't go as fast as I want, it doesn't go as quick as I want, you know, and again, or it doesn't go in the direction that I want it to. You know, with options, you have to get the timing right. So yeah, you can take a trade and it may go, you could buy a call, for example, and it might go up. But if I don't get the momentum in that call before my expiration date, preferably before the expiration or on the expiration date, then I could lose in the trade, but be right in the direction that the stock might be higher. So it's not that you're never gonna have bad days once you become successful and making money. It's that you have way more good days than bad days. It's that you're up week over week, month over month, and year over year. And again, how good of a week or a month you have depends on the quality of your picks. And it also depends on how much money you're risking. But you can't risk a lot of money until you learn what to do. So when I first started trading options, like I said, it was around 2014, 2015. I was only risking $1,000 in my options trades. It was enough that if it worked and I had like a 200% return investment trade, I made $2 grand and was happy. And while I was still trying to develop my whole system doing it with the options way, then I only lost $1,000. So again, if you're new to options, I say keep it under 500. But you know, you can start with 1,000, but that's a good enough amount that if you lose in it, it's not the end of the world, you know. But again, I've been doing options now for over 8 years and trading for 15, day trading. Whether you want to day trade or whether you want to do options, it's totally, totally up to you, which depends on whether you have a margin account or an options account. But you need a daily focus, and it's about having a high probability, like I talked about, which I teach in my class, which is a 26-point rating system. So I teach a class, it's once a month. Sometimes I get busy, I don't do a class 1 month, I'm too busy with TV and trading, but I try to do a class once a month. The next class is June 24th and 25th, and I teach my 26-point Golden Gap rating system. It helps you pick which stock to trade each day. It's a checklist. This is what you will learn in my class. You will also learn how to raise institutional money. You will learn the entries, you will learn the exits, you will learn targets. And again, it's a full weekend class. It's 9 a.m. to 5 p.m. Eastern time. The class is online, and it teaches you how to enter the stock each day. But it is about empowering yourself, like I talked about at the beginning, to make money in the market, and you need a system to do that. My class is called the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class is online. It's $69.99 for the class. Class is June 24th and 25th, 9 a.m. to 5 p.m. Eastern time. And again, if you'd like a trial of the live room, I trade in the room live Monday through Friday. You can email me for a trial, but you cannot join the room until after you do the course. The course is a prerequisite for actually joining the room. The room opens at 9 a.m. I trade between 9:30 and 10, 10:15. Maybe I might trade till 10:30. And again, you can go to YouTube. I have tons and tons of videos on YouTube, some of the live room, which you can watch to see what we do. Now I'm doing a hawk special. Look at that. This hawk is on my roof. This hawk lives on my roof. So I went up to the roof like about a month ago and I saw him. It was unbelievable. This hawk is huge. He was so close. I've taken a bunch of friends up there. In fact, if you go to my YouTube, I have some videos of him. Amazing, amazing creatures. I mean, to see a hawk this size up so close, again, I live right on Central Park. I mean, so it's crazy, crazy to see something this size, this close. I mean, it was an unbelievable sight. It was an unbelievable sight. Actually, I took my father up there this morning. We didn't see him. He probably was out hunting this morning, but I'm sure he's up there at some point today. Anyways, I'm doing a special really quickly for the class. If you sign up by next Friday, the class again is starting on Sunday. You get the training room and the options newsletter free through the end of this year and 5 one-hour mentoring sessions with you. So the class is $69.99. Everyone pays the same. I'm offering these bonuses, the Hawk Special bonus. Let me just see what people are saying. Hawks hunt pigeons. Well, they hunt a lot of things. They'll eat small dogs, a hawk that size. Should be at least 10K. You know what? I feel like I'm trying to support people. I'm trying to support people. Some people think the class is underpriced. When they see the class, some people think it's overpriced when they paid for classes that are $1,000. You get what you pay for with me. You are going to learn my system. You're going to get my mentoring. You're going to get my help. You're going to get the trades. You know, I'm trying to make it reasonable so people can put it on a credit card and pay. But at the end of the day, it is up to you if this sounds like something that you want to do. And again, you can feel free to call me if you have questions. I think people have to sift through what's out there. But again, the level of commitment that's necessary to be successful must be there or you won't be successful. And so again, it's how much do you value your time, what you want to do, and do you want to make it? You know, like I said, there's plenty of time left in the year to make money. Even if you've not been making money the first part of this year, you will be successful if you learn what to do. Okay, great. Thanks so much. I think I'm, am I good with time?
You're fine. If I'm happy to let anybody run a minute or two over, usually the next presenter understands, but if you want to end it here, you know, we'll thank you. We'll ask any further questions to be directed to you through email or by calling your number. And that's it. You know, your topic, how to make fast trading in 30 minutes a day, had me on the edge of my seat. I love your Golden Gaps course. I'm curious what the criteria is and think I might want to learn it too.
Yeah, 26 things is a lot. These, before I go really quick, I took these pictures too in Central Park. Look at those turtles. I've become a nature girl. I tell you, this has done wonders for me living by the park. And again, think about the takeaway out before I go is think about the quality of your life. You do not have to work 40, 50, 60 hours a week to have everything you want. You can earn a good income and still have free time. So have a wonderful Father's Day weekend, everyone.
Thank you, Melissa. Thank you for being on the show, making such a generous offer to our audience. It's always great to have you on Traders Corner. Ladies and gentlemen, Miss Melissa Armo of the Stock Swoosh. And if you're interested in making fast profits and trading just 30 minutes a day, you can find Melissa's special offer in our chat box and at thestockswoosh.com. Have a great weekend, Melissa. And just for argument's sake, just over the border of 95, less than an hour away. I might have to find you in the park one day. Ladies and gentlemen, our next presenter is a 50-year trading veteran and technical analyst. He's the author of the highly acclaimed Profitable Day in Swing Trading, which was named the 2015 Best Investment Book of the Year by Stock Traders Almanac. He's a renowned leader in technical analysis and a featured guest on many financial programs and sites, including CNBC, CBS Market Watch, Winning on Wall Street, Stockhouse, Decision Point, and more. Today, he continues to educate traders through the Tech Trader, an online platform that allows members exclusive real-time access to his buy and sell recommendations, market commentary, and in-depth research and analysis. Here to present Mastering Technical Analysis for Successful Day Trading is Mr. Harry Boxer of the Tech Trader. Welcome back to Trader's Corner, Harry. Harry is still with us? I see your screen, but I don't hear you. Would you check your mute button? Harry, can you hear us? Is anybody else hearing Harry, or am I the only one? All right, stand by. I'm going to see if I can get in contact with him outside of the webinar platform.
Okay, folks, can you hear me now?
We can hear you now.
Yeah, you had me muted and I was unable to unmute it.
I apologize. You had accidentally gotten unmuted during the unmuted during the previous presenter's presentation.
Yeah, no, I get it. Anyway, folks, hi, I'm Harry Boxer. Thanks for being here. Today, we're going to talk about mastering technical analysis for successful day trading. I'm a big believer in intraday pattern recognition, trend analysis, and I do live webinars all day nonstop with my traders. I give them specific buy and sell recommendations. I give them targets and stops on every buy alert. I spend a couple hours every morning pre-market going over charts. And I think the three things I want to emphasize today. Number one, preparation. In the pre-market, you have to look for movers. You have to create a focus list. And that's what I do every morning. One of the ways I do that, people are always asking me, well, where do you go to get your ideas? Well, in addition to what I'm getting, and I hope you can see the screen here. These are the stockmarketwatch.com presents a pre-market list every morning of stocks that are gapping up and or running, and they give you their percent gainers. Are you able to see this?
Yes, sir.
Okay, good. So from that list and from the list of several of my top traders who create focus lists even before I get on. Now I'm in Los Angeles. I got on on my site just before 4 a.m. in the morning, 7 a.m. Eastern. And between 7 a.m. and 9 a.m. I am doing, well, actually make it 8:15. For an hour and 15 minutes, I'm going over dozens and dozens of charts, creating a focus list, looking at those patterns. I'm drawing my lines, I'm doing my targets and stops, and I'm creating a list of stocks that I feel anywhere between 8 and 15 stocks that day, they may be trend runners. That's what I call it. The most important thing to do is once you get a focus list is to focus on a minimal amount. In other words, I want you to only be looking at 6 to 8 to 10 stocks during the day and scrolling back and forth and keeping an eye on their patterns. But that's what I do for you. When I'm on in the pre-market, I spend an hour and 15 minutes before the opening going over all the patterns and charts and issuing buy alerts. And after the opening, within 10, 15 minutes, I'm on live to show you the early patterns, how they're developing, which of those stocks might be acting really well and looking like they're going to trend that day, or which ones are failing quickly and are being stopped out. That's the key to trading, to know when to move out of a stock, or at least, if you're not an accomplished trader, to wait till the trend develops. In the early action, the markets will show you which stocks are going to trend and which ones aren't. And I think the problem is recognizing that. And that's one of my over 55 years of experience in analyzing intraday chart patterns and doing pattern recognition have afforded me. I wrote a book called Profitable Day in Swing Trading, and it was designated as the best new investment book of the year by the Traders Almanac. And I'm pretty proud of it because I took a year to write it. I wanted to write it in layman's terms. So if you get a chance to read it, it'll explain all my philosophies about day trading and technical analysis. One of the things we do early on is we look for patterns. So I'm going to show you some examples today of stocks from yesterday, and it was a difficult trading day. These are some of the stocks that we went into early in the morning, and some of them that were trades. Now, I noted in the early part of the action that pattern setups were great, but that the market itself wasn't, and that as soon as the market started coming down, I was emphasizing to everybody, you need to have stops. You cannot trade. If you want to be a successful trader, you have to have stop losses. The problem is most people don't know where to put them in, and I'm always emphasizing putting stops in under key levels, such as in the case of AAOI. In the pre-market, the stock popped and formed a wedge pattern. Now, when the market opened, it popped and pulled back and then popped again. But the problem is the double top with the market coming down and the rest of the day it coiled. Now, I would consider that pretty good action, but it wasn't really an opportunity to make a lot of money. If you got it anywhere in the 4.5, 460 range, you were able to get out about 497, 499 was the high. So in other words, you had about a 10% trade. Not too bad if you're quick. And that's the thing about the day trades. Sometimes they're very quick in the first 10 or 15 minutes. A lot of times, and I emphasize this to people who are not seasoned traders, if you're a newbie or you want to learn more about trading, you come into my room and you spend several weeks doing paper trading. I've been told that a couple months in my room is like 2 years in the classroom, because it's live actionable picks and live technical analysis and updates moment by moment. In the case of the stock actually technically was never stopped out, but it was hard to watch it go sideways all day. Nevertheless, most stocks were coming down off the early peaks. Let me show you a couple examples of stocks that didn't work. Here's one. In the pre-market, ENVX exploded, formed a wedge. Now, I had given this to my people because I'm a big proponent of wait for the pop and then look for the first consolidation. Now, in pre-market, it's much more dangerous, but stocks tend to move in 5 ways pre-market anyway when they do move, and in the regular session. And in this case, ENVX exploded from 13 and change all the way up to almost 15, and then formed a really tight wedge. And now you can't see the volume here. I guess this is more money stream. You can't really see the volume because volume's lighter in pre-market. But when I see a wedge breakout, I gave a buy alert right there at about 1470. And even before the market opened, by 8:30, it was 1560, 90-cent trade. Why was it a sell there? Because number one, I had a line going across there that was my target line, and it was 1, 2, 3, 4, 5 waves up. That's a basic Elliott wave analysis. I incorporate Elliott wave, Fibonacci, measure moves, and I do a lot of analytical work on every move the stock makes to give you the best possible setup and the best possible targets and stops. Now, in the case of where would you stop this, once the stock broke out, my stop was right there. And when it popped, pulled back and started to run again, you raised my stop to there. It broke out, it pulled back, I raised my stop to there, and note that it came down quickly and broke the 15.25 range and was stopped out. Now, most of the traders in my room did what I asked them to, and that was to sell the 5th wave. And we got out about, I think it was 1539.40. We got to 1568 and then plunged all the way down to 13 and change. This is how you trade. You have to stop every position that you're in. You never know when you're going to get a plunge like that, particularly after a strong pre-market. A lot of stocks will gap early on, right at the opening, like this did, and then plunge. I'll show you a couple more examples of stocks that didn't work, just to give you a flair for how we do it at techtrader.com. Now, here's the stock that ran up and formed a wedge. And I really like this. This, by the way, is the TechTrader swing. I want to show you this. When this stock, and I know this company inside and out, they're an Israeli imaging company, and they got FDA approval for their non-X-ray, non-radiation imaging system, which is fabulous. Just when they went public, the stock went from 25 to about 90 and change, just based on the new technology, but they didn't have FDA approval. And over the course of the bear market, you can see that this thing went from 90 all the way down to 5. But when I saw this breakaway pop and pull back, and was holding and then started to move at 9 3/4, I put a TechTrader swing on, and we had targets of 13 and 15, and lo and behold, if you kept it, 2269 only in 2 weeks. So a move from under 10 to 2269 in 2 weeks, one of the better moves we've seen this year. And based on this pattern, I don't think it's done yet. But more importantly, on an intraday basis, when I saw NNOX pop and form a wedge, I said to my traders, and this is what I tell you every day in my room, do not make a trade in advance of your signal, meaning this stock wasn't ready. I told everybody, wait for the breakout. In other words, you draw a line across here, you want to see this above 1950-60. We never got the breakout. Therefore, don't make the trade. You anticipate buying somewhere in this range, this is what happens. If the breakout doesn't occur. Now, anyone who had that trade or took the trade anyway, because I did say wait for the breakout, was stopped out here at about 19. And then the stock went down, of course, to 18.25 and bounced back. I love this company. I love the chart. And I think longer term, this stock is headed to the high 20s, low to mid 30s, maybe more. This stock was substantially higher at one point. But the point I'm making is that in pre-market, you come in, we're looking for stocks that are moving. And I want stocks that are moving between 5 and 10 times normal volume, and a stock that are thrusting anywhere between 5 and 20% at least. Some of them are up as much as 50 or 100% pre-market, but that doesn't mean they're not buys even then and there, because the offer will go up double and triple from there. When we see a stock that's running in the techtrader.com, we're involved. In other words, when there's a stock that's off to the races, even if we're late, if the chart pattern is strong and it's telling me this is going higher, we'll just stick with it. And then often you'll see a stock that went from 4 to 10, we're buying it at 8 or 9, and the stock goes to 15 or 20. It happens a lot. Now here's a good example of a stock that broke out of a beautiful base here. We had a swing on it, and it went from 3 to 5. But more importantly, yesterday on its day trade, it opened, popped, and coiled. ABCM is another perfect example of a stock that popped in a pre-market, formed a beautiful bull coil. Why is it a bull coil, folks? Because when you have a stock that runs up and gets very quiet and narrow, real quiet, and then you see the volume gets really quiet in here. Let's go back. This is the best way to look at this is by doing this. Go back to before that thing broke out. Take a look at the pattern. Right there, we have what I would call a perfect pop and wedge, pop and coil, whatever you want to call it. Note that the volume was coming in and building up even before it broke out. And that's when I put a day trade out for my traders. Pop, pop, and exploded. Literally went from 19.75 to 20.84 in about 10 to 15 minutes. And so, you know, when I see it, I always tell my people, when a stock, if you measure this move from top to bottom here, 19.75 to about 20.30, we're talking about 45, 50 cents, and add that to here, you got about 20.80, 85, and that was a perfect measured move. So there, that was my target number one. Normally I'll give you 2 targets, and there's target number 2. Secondary measure move brought this up to 21.5. My target, I think, was 21.5. We fell just short at 21.44 or something like that. And then the rest of the day, this is what happened. It went even higher to 22 and change, and then formed a coil and went even higher. And at the end of the day, it was 22.68. There was no point in any point during the session where the stock broke support. What I will do is when I see a stock break out, I will put a stop right there. And when the stock ran up and pulled back, I put a stop there. And when it ran up and pulled back and started to go again, our stop was right there. Notice this never got stopped out. It afforded you the opportunity to stay with the trade all day from 1990 to about 22.5. Beautiful day trade on ABCM. And that was just yesterday. What we want to emphasize during the day is following, again, several stocks closely, but not too many. And be disciplined, meaning every time I give you stops and targets, please adhere to them. Too many people don't put the stop in hard. I want you to put in a hard stop. When I tell you to stop something, or when I tell you to raise your stop to a certain level, because all day I'm updating you and I'm showing you new patterns, I'm drawing new lines and trends, I'm adjusting those trend lines, I'm showing you how things are changing their angle of ascent perhaps. And so you get a better feel for where you might put your stop. Here was a clear stop under 21.20. Even though it got close a couple times, it held it and moved up. And that's how you stay in the trade. The number one question I get every day just about is, you know, that was a great trade, Harry, and I bought it and I sold it too soon. Why? Because you get anxious, you get anxiety, you basically don't want to give back a profit when you see you bought a stock and it's up about 3 or 4 or 5%, you want to take the quick profit. But invariably, if we get a runner and it's up 15, 20, 30, 40% in the day or more, you know, it kills you to see the stock continue to go up. Well, how do you stay in the trade? The number one philosophy I have is you never have to enter a trade 100%. If you have, for example, a $100,000 portfolio, I recommend 20 to 25,000 per trade per stock, and no more than 3 or 4 stocks ever. Always keep some cash too for the opportunity. You don't want to have to sell a stock to buy something else that just broke out. But the way to stay in the stock is to buy it in tranches, in steps and levels. For example, you could have bought 30-year position there. When it broke out and pulled back and went, you could have bought another third. It broke out and pulled back and started to coil. Broke out again. You could have bought another third and sold the whole thing at the end of the day for a nice profit. How do you get out when you stop a position? You stop it there. Stop it there. In other words, when a stock breaks 2 layers of support, this is support because it's a prior high. This is support because it's a pullback low. That zone of support is key. If it breaks that, then the stock fades or fails. This stock didn't do that all day. Let's look at some other examples. BT. In the morning, the stock didn't do anything, and then it coiled. By noon, it suddenly broke out. I didn't really get active with this stock until it broke through that prior high. There is where I put out a day trade at 328. Look how this stair stepped its way higher. Little flag, another little pennant, another one there, mini one there, and a pop out. But notice the stocks never broke a support level. So what you could have done is raise your stop, raise your stop, raise your stop, raise your stop. Here's a head and shoulder pattern. It broke. That's where you're stopped at 340. But after a 1, 2, 3, 4, 5 wave move, most of my people sold that 5th wave at about 348.50. The high, 354. Your entry, about 320. You got in 320, out at 350, in at 30 cents on the $3 stock is 10%. Beautiful day trade. And you were disciplined, you were focused, you were following the trend, or I was following it for you. And like nonstop all day, I'm looking at these patterns and I'm redrawing the trend, or changing the angle, or I feel maybe more parallel and I'll do that. But you can see how it broke down from the channel, it snapped back, and technically, when I see a channel break and it's followed by this, that looks like a rising wedge. And I get that rising wedge with lower volume, like here, without a lot of energy behind it, and the underlying technicals flat out. This did not look good to me. I told anybody who did not get stopped out or sell at the peak to sell this rally at the shoulder line. That's cool. This is a left shoulder, head, right shoulder. When you get that kind, you could even go short. You can see at the end of the day, it was down to 330 something. Not that I like shorting $3 stocks, because I don't. CRNC, that beautiful pop, falling wedge, and then it popped again. I did not enter this stock until I saw this. Breakout, came right down to the apex of the, how often do I see that? A lot, when a stock has a wedge, breaks out, and then retests the apex of the wedge right there. When that held and popped, I then raised my stop to there. It broke out, pulled back and bounced, raised my stop to here. Again, it bounced, it went up, I kept raising my stop. When a stock's trending, it should never break a prior low. Raise your stop to there. Raise it to there. At the end of the day, this stock is 35 from where we got in at 32.5. Very nice day trade. And that's what we look for at techtrader.com. Stocks that pop, coil, wedge, pennant, form a continuation pattern. The number one thing in technical analysis for me is if you identify a trend intraday and you identify the continuation patterns such as bull flags, bull pennants, bull coils, any of the patterns that are standard patterns that you can read in any book. By the way, if anyone out there that really wants to learn more about technical analysis, the number one book, and generally considered the Bible of technical analysis, is a book called Technical Analysis of Stock Trends. The authors are Edwards and McGee. I've read that book 8 or 10 times. It was originally written in 1948. It's one of the best books on trading in terms of technical trading I've ever seen, and it's been upgraded. It's been updated with new editions 11 times since 1948. It's must reading, and if you're a technical analyst, it's not boring at all. So just to repeat, we're looking in the pre-market for certain patterns. We want to identify patterns for the focus list by using technical analysis of stocks that are popping, coiling, trending, and forming continuation patterns. Secondly, what we look for early on are continuation patterns, the same kind of patterns, but after the market opens. We call that continuation patterns. In the early sessions, the ones that work best and most reliable, again, are the pennant stick coils and the flags. I've been showing you example after example. Again, these aren't picks. These are Friday's. This is Friday's action. I'm not cherry picking anything. No matter how bad the market is, you get stocks like this, or you get stocks that do that kind of work. ETHE popped, coiled, nothing doing yet, right? But here, right there, and again, it's the best way to look at it is to go back and see the pattern as it's breaking out right there. So at 7:54, we went in. And this is what happened the rest of the day. Formed a little bull coil or pennant. Love it. Stay in it. Pop, pop, and pop again. My target was 790. We hit 805 and started to come down. And formed what? Another bull coil? Yeah, this may be a good setup for Monday. I always look at intraday patterns, but people, you have to look at the daily charts to see where overhead resistance is. That's how you set targets and stops as well. I might do this all day. I may look at the pattern, draw my lines, and say, okay, if I'm going to consider a swing on the stock, it would be to 9 3/4 and 11 1/4. Those are my targets. But first, I want to see the falling wedge. This pattern, it's a very tight little falling wedge, break to the upside. So I'm going to get involved if it gets over, let's say about 860. If you see 860 on this stock on Monday, for example, across here, you break out above price and 50, this is a 50-period moving average. By the way, for those who are interested, I use 10, 21, and 50-day and 50-period moving averages. So this falling wedge breaks out and gets above 862. It's on its way to 10 and 11.5. Those are targets for this one in particular on a swing basis. But intraday is what I'm considering and what I want to see. I want to see little flags, and I can continue to draw these for you. Watch. This is a bull flag. This is a little mini bull pennant. All of these are continuation patterns. Flag or coil flag pennant. Up she goes. FNGR. Now this is stock, by the way, that I am just put a swing on. I believe that a similar move is coming. We saw this explode and went in the $2 range and watched this go to $10 in about a week. It was phenomenal. I'm not saying the same move's happening, but I do think you're going to get a retracement back up near 4 1/4, 4 1/2. The stock can double from here quickly. I don't know if it does it, but on a day trade, I watched that stock run up, pull back in a falling wedge, and broke out here. I put it when I saw it form a little consolidation and start to move. It was about 222 when I put out a day trade, scalp trade. Literally, it popped, wedged, and popped and got up to 246. Not a big trade, but hey, 10% when you're looking at $2 stock. GBTC, now this is a Bitcoin trust, Grayscale. What would you have done when you saw this? What I did is waited for a pop. There you go. We went long at about 1368 and watched the stock continue to press until I got to 15. My secondary target, first target is 14 1/4. Second target is 15. The high, 1501.02. Yeah. And a great day trade there. And look what it did after hours. So at detectrader.com, we identify stocks that are #1 moving in pre-market. Yours truly analyzes those stocks for potential patterns in pre-market that have the high probability of extending into the day trade. Many people don't trade pre-market. When they see what's going on in the pre-market on the opening, they may chase it or jump on it. And sometimes it works a lot. Sometimes it pops and drops, like I talk about all the time. But that's the beauty of stops. You have to know where to put your stops in. In the case of GBTC, the pullback low here, 1345. Underneath that, that was my stop. When it ran up, pulled back and started to go, I raised my stop to there. And I raised it to there, I raised it to there. There was no point in session where I needed to stop out. I just sold it at my targets, which were 14 1/4 there, and then I think it was 15 or 14.75. Anyway, we got a nice trade out of this one too. Corning glass exploded and pulled back in a falling wedge. And when it broke out above the VWAP, this is the volume weighted average price, we went long. Now, it took a while, but it moved from 34.90 to 35.45, and then eventually got up to 36.07. So it was again, a 3% trade, something like that on a larger cap stock. That's very, very doable for day traders. So Huya, Chinese play, popped and flagged. When I see that kind of, the first thing I'm going to look for is a breakout. Let's look back. The beauty of this is these are not, again, I want to emphasize, these are just stocks from Friday. When I do a webinar, I'm always showing examples from the day before because it's relevant. So stock sitting at 390, once it goes to 396, it was a trade right there. What did it do? Well, we know it broke out, right? You saw it. About 396 to 414 and up to 423, and then didn't do much the rest of the day. But it was also a 1, 2, 3, 4, 5 wave move. The fifth wave was truncated or shortened, didn't quite get to my target. So where were we stopped if we weren't selling it? Right there. Stop didn't come until later when it came down, because look, a falling wedge here might have been bullish. It might have broken out and ripped out of there. Instead, it broke down and kept drifting lower. This is a nothing trade in the afternoon, but it was a nice little scalp during the course of the morning. LABD, I trade LABU and LABD all day. These are the bear and bull ETFs for biotech industry. So 9:30 came, the stock popped and pulled back, popped again and pulled back. This is where we bought it. When it formed a little flag here, falling flag, and broke out, it went long at 11.94, and an hour later it was 12.45. Good, and look where it was at the end of the day. It never broke there or there or there, so you could have stayed in the trade until the end of the day and sold it right at the close. We like trading that, and I also like trading natural gas ETFs, KOLD short and UNG long. Here's an example of a stock that did not work. That's why I emphasize to you, when I see a strong surge and it backs and fills and forms a coil, I alert my people to a possible buy. I also tell them that if it breaks this pattern and the volume weighted average price, which is VWAP, so where do I put my stop? I put it right there. So if you're stopped out at 350 and watch it go down to 330 and just sit there and do nothing, that's the beauty of stops. You're in, you're out. Here's another one that didn't work, because I want to make sure that you're all aware that 7 out of 10 trades at TheTechTrader.com work, 30% don't, or 3 out of 10. And those 3 out of 10, we usually take small short losses and move on. Because the beauty of trading is that you live to trade another day because you preserve your capital with stop losses. Look at this spike in coil pre-market. Now, when it started to move right here, I thought, boy, if this thing gets up through here, that line about above 6, it's going to rip. And I told everybody, buy above 6 on heavy volume only. Stop under this pullback low. That would be 550.55. We got stopped out the second the market opened and went pop and drop. So this is why I'm emphasizing that seasoned traders need to wait for a trend to develop and then jump on it. Plenty of money to be made on a stock. Here's another one that didn't work. It popped coil and it broke down and got stopped. That's okay. That's what we look for. Here's a third example. A pop and wedge, and the market really put a lot of stocks down. As a matter of fact, in this case, I saw that rising bear flag, and I said, and it came on a little bit lower volume. So I said, if it doesn't get back up to 320.22 and starts to roll over, sell it. Well, it had a hard bar right down and went down 28 cents in a minute on 234,000 shares and broke right there. So most of us got stopped out in that 290, 295 range, and subsequently dropped to 250 and slipped. The key, folks, is that at TheTechTrader.com, we use several tools. I use Elliott Wave, Fibonacci, measure moves. I look for overhead resistance. I draw channels. I pay attention to moving averages. And when you call all of those technical, all of that technical data, you can come up with a line, an area where there's resistance, and I will draw that line and say, this is our target number 1, target number 2, this is where you're stopping it, that type of thing. So I think the best thing to do when you come to the techtrader.com is pay attention. If you don't know what to do, you can always ask. The people in my room are phenomenal mentors. They have been around for 20, 30 years, 40 years trading. A lot of them have been with me since I started the site in 2001, 22 years ago. It's a fun place. People have a good sense of humor. There are no egos in the room, and that's one of the things I like the best about it. But getting back to why we're here. Why we're here is you need to learn how to recognize these patterns, how and where to draw the trend lines, your support and resistance lines, and how to set targets and where to place stops. And I do that for you at thetechtrader.com. But the way to master technical analysis and be successful at day trading is by analyzing the intraday patterns and the trends for maximum profit using the patterns that are widely recognized as the best patterns for trading. So again, to reemphasize, preparation, focus, and discipline are the key. In preparing every morning, you have to find the pre-market movers, create a focus list. I do it for you, but you may want to create your own as well. Focus on a minimum amount of stocks, half a dozen or so during the day, and trade 2 to 3 of them, no more than that. Must be disciplined with stops and targets. It's number 1, 100% maximum have to be. You have to trade with focus and with preparation, focus, and discipline. If you have those 3, you'll be successful in day trading. If you come to thetechtrader.com, I want to tell you this morning that come to thetechtrader.com, click on start your free 10-day trial, free. All you need to do is put your email, your first and last name, and a phone number. That's it. Create a password and you're in. No credit card required. You'll be in there for 10 days, and I guarantee you that if you are a good trader, then you'll probably make enough money to cover a year's worth of subscriptions, which is $239 a month. Peanuts. It's about $8 a day trading. That's it. You think about it. There's 22 trading days in a month, something like that. It's less than $10 a day. It's about $1.25 an hour. That's all it is. So start your free 10-day trial at thetechtrader.com and come in and learn about how we do it, what we do. Improve your technical analysis skills. And most importantly, stop chasing stocks and access the ultimate technical market analysis service out there. We were the first in 2001 day trading room. That's what I've been told. That basically we're one of the first, if not the first. And we're still around, and I still love doing this. And I get up every morning with energy at 3:40 in the morning, and I'm on the site by 4 a.m. to serve you guys and give you the best possible day trade ideas. So come to thetechtrader.com and join us. If there's any questions, I'd like to answer them. We have a few minutes here. If not, we'll call it good today. Is there anybody out there with a question?
If there's any extra questions or time, I'd love to ask one.
Sure, go.
What is the correct way to draw a trend line?
Well, it's amazing. It's so easy for me that when people ask me that question, it's like, seriously? But no, I understand because I get questions all the time. You need to connect at least 2 tops and 2 bottoms. For example, I drew this trend line from there to there, and I connected 3 or 4 trend lines. This isn't quite connected because when I'm drawing it, it'll probably be there. When I'm drawing this one, it'll be there. But then you have to adjust your trend lines during the course of the day. So when you see a peak and a pullback, that's when I do that. And then when I see a pop and a breakdown, this is when I do that. But in essence, most channels are 45-degree angles up and down. They go in this angle from corner to corner, from top to bottom. But always draw lines under trading ranges. You can also draw lines at line weighted average price if you want to get resistance. and then, you're always adjusting. And people want to, Mike Thompson from TC2000, which is this software program I'm using, was blown away the first time I did a presentation for them because, I would come in, show him a chart, and go to a daily chart, and he'll look at it and he'll go, where are the, like, he sees these lines, where are they coming from? Well, these lines are in there for a reason because this was a prior high. I'll always look at prior highs and prior lows and draw lines across because they may be support and resistance. So I hope that answers.
No, it did, and I was always curious, and I know it's a really commonly asked question and something there's some controversy and argument around, but I absolutely appreciate your take on it and saying yes, you do have to adjust them, during the course of the day as more highs and lows are made. I think that's extraordinary, like monumental, and might help myself and a lot of our audience, in drawing a trend line to determine, when something is broken and when it's time to get out.
Now, for example, I want to emphasize that there's something that Tom DeMark, I consider Tom DeMark one of the most brilliant technical analysts that ever lived, and he's one of the most respected as well. But in a conversation I had with him, he said to me, never draw a trend line off a spike low because the angle is too steep and it always changes. But for example, in this case, it would have worked, but in many cases it doesn't because the angle changes. For example, see this trend line? This looks like a trend line break. It looks like a trend line break, doesn't it? But at the same time, it's not a trend line break for me until it breaks support. This technically hasn't broken it, maybe by a penny or two. But I always say give yourself some leeway too. Don't put a stop 1 cent underneath the support level because you're going to get stopped out. And the reason you're going to get stopped out is because market makers know where your stops are and they come and get you because they want stock, they want inventory. I call it an inventory run. A lot of times the angle that a stock starts out on is not the angle it's going to go during the course of a trading day. Let me see if I can get a better example. Now, this one was a beautiful trend and trended all day. A lot of times they'll start off with a pop and then they'll go higher. Let's see. Yeah, the angle often will change. For example, if I drew this angle here off of there, I probably would have been stopped out there, which is fine, but it did go higher. I'm just saying that you have to adjust your lines. But again, if you're at thetechtrader.com, I'm doing this all day and I'm changing lines so you can see me doing it and you can adjust your own lines as well.
Oh, it's brilliant, Harry. Thank you so much.
You're welcome. Any other questions?
Are you familiar with the questions box? Did you check in there? Because
yeah, you know what? I'm looking for
in the control box. There's a lot of topics. If you click the down arrow next to the one that says questions, there's a few in there. I'm happy to ask them if you want me to.
Yeah, go ahead and do that if you wouldn't mind.
On a $100,000 account, if you have 4 stocks and even with a few extra cash, what are the 4 symbols you'd recommend?
What do you mean? What are the 4 symbols I recommend now?
If somebody were to have a $100,000 account and want to watch 4 symbols to get familiar with, which 4 would you give them?
Problem is, it's every morning I find new symbols because we're day traders, and every morning those symbols come from the pre-market action. So to give you something now when the market's closed, it would be fruitless. I mean, there are several stocks that I like that I think are about to take off, if that's what you mean. I would keep an eye on, now these aren't day trades, on a couple of low price stocks. One is FNGR. Another one is MLSS, Milestone Scientific. I think that's about to have a big quarter. And that's about $1 stock, and I think it can go to 4 or 5. But if you're a low price fan, that's fine. There's a lot of stocks. I have a swing list, the techtrader.com swings that are phenomenal. Some of the stocks, the other one is NNOX. Like I said a little while ago, look at that chart and look at the rising pattern on it. This is something I keep my eyes on because I think from 19 you could see 25 to 28 in the next month. Everything depends on the market.
Larry's asking if you have a preferred broker. Is that something that you can disclose, or?
Yeah. I like Charles Schwab's Street Smart Edge. In all the years I've been using it, I've never had a problem with execution. And it's quick, fast, and I've had problems with TradeStation, with IBK. I've had problems with every broker I've ever, but never had a problem with Charles Schwab. And the customer service group is great. So I use Charles Schwab, and particular Street Smart Edge, that program.
Hunter asks if you trade news and events like the FOMC.
You know what? It's interesting. I trade stuff in. I don't. Okay. Everybody, I'm really good at market timing, and during the day, I will show you patterns where the market is breaking out or breaking down. And I will also say, put your rally caps on. We're about to rally, because I can see when the market's oversold to a point where it's got to snap back. But I don't trade indices. I don't trade SPYs. I don't trade options. I trade stocks. I'm good at it. I've been doing it for 58 years. And people say to me, if it ain't broke, don't fix it. Well, you know, I'm not going to, I don't use, as you can see, I don't use candlesticks, although I know them. I just prefer everyday bar charts and the patterns that form in those bar charts, but it's got to be a combination of price and volume. I coined the phrase many years ago, the price volume surge, a combination of a stock moving with heavy volume in kind of a trend changer. When I see that, it's not just a pop. Like in the case of Nanox, that day here, check this out. It gapped, opened at 880, went to 1168 from a close of 6. So it almost doubled, and then it pulled back and I put a swing on it, and it then went to double, almost triple from there. So if you catch momentum and look at the volume difference there, that one day from a volume that wasn't averaging much at all, it traded 32 million shares. That's what we call a massive breakaway gap. That's where I want to be involved with a stock when I see momentum changing. I did the same thing with NVIDIA 4 or 5 years ago at $39. The stock, as you know, is a home run and then some.
Oh, $39. NVIDIA, I know, is in the 400s. I've been day trading it. With respect to time,
and that's after a split.
Exactly. But with respect to time, the last question is about using the VWAP.
Well, let me tell you something. It's interesting that because people in my room insisted on it, because many of them use it, I started using it a few years ago. I never used VWAP before. But the reason I use it, and the reason I use any indicator, is when I know, and this is important, folks, well, I have a lot of institutional clients and a lot of the senior traders in those firms that trade their company's accounts and brokerage firms and things like that. They all tell me that they use 50-day moving, 50-period moving averages, and they use a VWAP, volume weighted average price, because it's amazing how often a stock will go to a VWAP and then just turn right around and go the other way. For example, in this case, it went up to it, couldn't get through. When it popped through it and pulled back to it and consolidated along it, that's when it started to make a move. And you see that a lot on VWAPs. Stocks will hold the VWAP. Yeah.
In my own experience, I have noticed that absolutely holds true. You know, not to share too much of myself, but I mainly trade the SPY, and it runs in one direction until about 11:30, and then almost without fail, we'll have a retracement to the VWAP.
Isn't that amazing?
But,
it really is.
Yeah. But Harry, with respect to the next presenter, I want to thank you for being here. After listening to your presentation, I see why you've been so successful during your 50-year career. You really do have an amazing story and are a master at technical analysis. I'm curious to check out your platform. You might find me in your free trial. Ladies and gentlemen, if you want to learn more about how to access Harry Boxer's online platform and have instant access to his online recommendations and in-depth research and analysis, you can click on the link I put in the chat box, www.thetechtrader.com. Thanks again, Harry. Your 50 years of experience is incredible. We hope to have you back here on Traders Corner. Happy Father's Day, if applicable, sir.
And to you as well. I do have 2 daughters. And everybody have a great 3-day weekend. Remember, we're closed on Mondays, so enjoy the rest of your weekend. Bye, everybody.
Thank you, Harry. Be well.
Yep.
Ladies and gentlemen, our next presenter joining us on Traders Corner for the first time is certainly not new to trading. His trading systems have consistently outperformed international markets over the last 18 years with dramatically reduced risk. He trades across US, Australian, and international stock markets, and even the cryptocurrency markets. His focus is on building portfolios of profitable, stable, and robust long-term trading systems to beat market returns with high-risk adjusted returns. Here from Australia to present how to evolve as a trader to maximize opportunity and manage risk in an uncertain world is the founder and trading coach at Enlightened Stock Trading, Mr. Adrian Reid. Welcome to Traders Corner, Adrian.
Thank you so much. Thanks for having me. How was your day so far?
My day is wonderful. How's your evening over there down under?
Well, it's 5 a.m. here, and so my day's just getting started. I'm not usually awake at this time. My trading style is slightly different, so yeah, usually I'll be in bed for another 3 or 4 hours before before I get moving, but we're here, so I'm excited and looking forward to this.
Hey, take it away. I'm looking forward to seeing your presentation for the first time.
Okay, awesome. So you can see my screen, right? We're all good?
Yes, sir. Looks like a PowerPoint and maybe a little hairier version of you.
Yeah, that's right. I did lose a little hair recently, but that's okay. It's still the same dude and same experience. So my name's Adrian Reid, and I'm the founder of Enlightened Stock Trading. Today I'm here to talk to you about how to maximize profits and manage risk in an uncertain world. I want to apologize for my voice. I've been sick the last couple of weeks. I'm just coming out of it, but that's why I'm still a little croaky. So I hope that's coming through loud and clear. Before we go any further, I just want to just remind everyone this the information today is general educational information only. It may or may not be applicable to your personal circumstances. I don't know you. I don't know your situation. So please consider whether this is right for you before taking any action. So I want to ask this for everyone in the audience. Do you want to make money more consistently no matter what the market or no matter what the economy is doing? If the answer is yes, then you're in the right place, because I'm going to show you some techniques that really smooth your returns, regardless of whether we're in a bull market or a bear market or in a transitional period. And look, we've had some pretty wild swings in the last few years or last decade of trading. And I want to make sure everyone is really prepared for that, because if you're going to trade long term, you really need to make sure that you can survive each of those different long-term market states. It's not about just trading now, it's about surviving for the next 10, 20, 30 years. And so hopefully the tools I share with you today are going to make a big difference for that. Before I go any further, I haven't been on this show before, so I want to share a little bit about me and my background, just so that you know who you're listening to. I've been trading stocks for over 20 years, actually about 25 years now. In my stock trading journey, or as a result of my stock trading journey, I paid off all my debts. I built a 7-figure trading account. And in 2012, I walked away from the corporate world because I was making more money trading in 20 or 30 minutes a day than I was working 12, 14 hours a day in my day job. So I made the easy decision to leave the corporate world and just trade full time. That's a whole journey, and I won't say that the entire journey was perfect and fun. But pretty soon after I left to trade full time, trading was going fine, but I was bored and lonely and on my own at home. And I didn't know any other traders, and I didn't have anyone to talk to about the thing that I loved, which was trading. And so I started coaching and mentoring because I wanted to talk to traders. And so now I coach and mentor hundreds of traders to profitability a year through Enlightened Stock Trading. My own trading now is fully automated. So it takes sort of 5 to 10 minutes a day of monitoring, and that's it. The computer does the rest. I just monitor the algorithms. And this approach allowed me to travel the world. In 2019 with my family, we basically took the kids out of school and just went traveling. My wife and I, we love that lifestyle. We would do that forever. But after the kids being in 7 schools, they said that was enough, and they wanted to settle in one town. So we've settled for a couple of years until the kids finish school, and then we're going again. So that's my results and where I've sort of come from. But what do I want for you? In this presentation today, I've got a couple of goals for you as the participant, and here they are. First one, I want to ensure that no change or shock to the global economy puts you at material risk of loss. So it doesn't matter what happens, it shouldn't put you at material risk of loss. Second goal is I want to ensure that no change or shock to the local economy puts you at material risk of loss. So your local economy, wherever you are. And third one is no instrument-specific shock should cause your portfolio harm. So it doesn't matter what happens, a stock bankruptcy, a sudden profit announcement, an unexpected profit announcement, or bad news, or anything like that. No stock-specific news or shock should cause your portfolio harm. And fourthly, no strategy drawdown, no change in efficacy of any approach to your trading should cause you irreparable harm. If you could achieve or meet these 4 goals, then you could survive as a trader long term, because if you avoid anything wiping you out and you've got a positive expectation or positive expectancy approach, then you're going to survive long term and you're going to be able to grow your account. So these are the 4 goals I've got for you as the participant today. How are we going to do that? Well, we're going to talk about diversification. I'm going to talk about it in a way that you've probably not heard before. So you've heard the saying, most likely, that diversification is the only free lunch in the markets. And it's absolutely true. And I've got a picture here of a buffet or a smorgasbord or whatever you call it when you're where you are, where you go into a restaurant and you just choose whichever dishes you want. You can get a bit of this and a bit of that and so on. And you can really have a very diverse meal when you go to a restaurant like that, right? And the markets and trading is very similar. There's lots of markets, lots of stocks, lots of strategies, lots of time frames that we can trade. But the trouble is, most traders just don't do a very good job at taking advantage of the diversification opportunities. Maybe they trade one stock, maybe they trade one style. So what I want you to do is ask yourself, how diverse is your trading? How many different strategies, how many different markets are you actually trading? And think about this. When I say how many markets are you trading, like the US stock market is sort of, there's a few sub-markets there, but let's just call the US stock market one market. Let's call the Australian stock market one market. I'm in Australia. Let's call the Hong Kong stock market one market. Now, most people don't diversify offshore at all. They just trade their home market, or they just trade the US market because it's the biggest. And that's fine, right? There's some diversification opportunities within that one market. But when I think about diversification, it's a little broader, right? Markets as in Australia, Canada, US, Hong Kong, some of the European markets like the German market and so on. Then strategies, trend following, mean reversion, short selling, and rotational trading. And then time frames, intraday, daily, weekly, monthly. If you think about all of those different combinations, how diversified are you really? Most traders don't diversify enough. And what I want to do is show you the reason why. Here is a model which I use to share my sort of information insights around trading with the Enlightened stock trading family. It's called the Trader Acceleration Model. And in order to survive as a trader long-term and to profit, you've got to do 3 things, really. You've got to protect your capital, you've got to systemize your decision-making, and you've got to diversify your time frame, your trading approaches. If you protect your capital and you systemize, but you don't diversify, you're going to make money in some market conditions, but not others. And there's going to be periods where you're going to be losing money, and there's periods where you can't make money. If you protect your money and you diversify, but you don't systemize, what happens is trading takes a lot of time, energy, and effort. My trading is systemized, which means there's absolute rules that define when I buy and when I sell. And that's quite different to looking at a chart, doing trend analysis and so on. You can do that, and that can work, but it takes time to sit and look at the markets. The systematic approach is where you have absolute rules that tell you when to get in and when to get out. If A and B and C happen, you buy. If D or E happen, you sell. And a simple example, I'll show you a few simple examples later on today in this presentation. But if you've got objective rules like that, you can codify those rules into some trading software, and the trading software will find your signals for you. It'll tell you what stocks are buy and what stocks are sell, which dramatically shrinks the time that you've got to spend trading. And when I did this, I took my trading time from about 4 to 5 hours a night to find my signals for the next day, down to 20 to 30 minutes a night to find my signals for the next day, because they're systemized and objective. You know exactly what you're looking for. So when you do systemize, you shrink the time, which gives you more ability to diversify more broadly. And that's what we're talking about here, diversifying with strategies, markets, and timeframes, so you can make money under different market conditions. So the first stage of diversification for systemized traders is usually strategies. Let's talk about trading strategies and how that can help. I want to talk about 2 common strategies and the advantages and disadvantages of trading them individually. I'll give you some examples and the benefits of combining them together. So first one, trend following. What is trend following? Trend following is buying something when it's going up and holding it until it starts going down. Not rocket science, right? But if you buy stocks that are smoothly trending up and you hold them for the long term until they start trending down and break their primary uptrend, you make very good returns with very little effort because you're just sitting and waiting. You're making money by waiting. And then short selling, so making money on the short side from declining markets. Short selling can be trend following, momentum, or mean reversion. Basically, you're selling when it's high and you're buying it back when it's low. And I just want to ask you, I don't know how you're trading right now. I'd love to hear how many of you are trend following. If you do, in the chat box, I'd love to hear you just see you just write a T. And how many of you are short selling? Just write an S, so I know what sort of mix of audience we've got there. So if you can write that, that'd be great. Okay, cool. I can see a few answers there. Thanks, thanks, Matt. Thanks, William. Trend following and short selling. Let's cover each of them individually. Start with trend following. Here's a really simple strategy that actually works, okay? And this is on daily charts. So I'm not talking about day trading or intraday trading, just daily charts. And the reason I use daily charts is because they don't take much time. I don't have to sit in front of the screen all day. I don't need to do my analysis continuously throughout the day. It's just once a day. You can look at what's going on the chart, the system makes a decision, and you place the trade. So here's a strategy that works. Select low volatility, highly liquid stocks. Buy a stock that's near its 200 bar highest close. So highest close at its 200 bar highest close. So the stock is breaking out. It's moving up in the long term. You're going to hold that stock and sell it if it closes below a 20% trailing stop. And you're going to hold 20 positions. 5% of equity goes into each of those 20 trades. When a trade closes out, you search for another stock that's at its 200 bar highest close. It's a dead simple system. It takes a couple of minutes a day to run, maximum. It's not exciting. You spend a lot of time waiting, but here's the thing, it works. I backtested this system on the Australian stock market, the ASX, including a pretty generous allowance for slippage and commissions since 1990. And you can see on the chart here, the results that you would have had in your portfolio had you followed these rules. These are objective rules. I mean, obviously I haven't given you exactly the code or the precise definition of low volatility and so on, but you know, if you were using the same rules that I was using, we would have got the same results. We would have had the same trades. And this is one of the great things about systematic trading. If you use the same system, you get the same results. There's no judgment involved. So when I share a system with you, you can run the system just as well as I can run the system, even though I invented it and you're borrowing it. You don't have to get up to speed or worry about that. So simple trend following system that actually works and has made money over 30 plus years. But there are some problems. What are the problems with trend following? Now, if you've ever been a trend follower in stocks, you would know that it can get a bit ugly at times. I mean, you only have to zoom in and look at the chart here during 2008, again during 2020, during COVID, and to see that there's a few lumps and bumps, which is a bit of a challenge. So the problems with trend following are this. When the bull market ends, there's a lot of give back because you're holding stocks long with a long-term system, with a long-term exit, waiting for a big change in trend before you get out. So there's a lot of give back. There's also flat spots during a bear market. So alongside trend following system will hold all the way up the bull market. When the market turns, it'll start to unload and get out, then it'll go to cash. And if the bear market lasts a long period of time, it'll just sit in cash for a period of time. It won't generate any trades. So patience is required because of those flat spots, and also because there's not a lot of activity in the portfolio. You're holding 20 stocks, you're waiting for a 20% retracement in a long-term uptrend. You don't have to do very much. So if you're a hyperactive sort of person and you want to, trade 50 times a day, you're going to have to sit back and really relax, learn to sit on your hands and do nothing, which is great if you've got a day job. You can put your trades on and go to work, or you can put your trades on and spend time with your family. But if you want to trade throughout the day, it's a bit of a problem. The other challenge, and the last one here, is that you can miss part of the recovery while you're waiting for confirmation for the market to resume into the next bull phase. So you want confirmation because you're looking for that 200-day high. You want a stock to get all the way up there. Why? Why wait so long? Why not get up when it starts to move? Well, you're looking for proven long-term uptrends. We're not looking for little wiggles and waggles, in this strategy. So you've got to wait for that confirmation, the new 200-day high, and then you get in. And then you know the stock is really moving in a primary uptrend. So you can hold it for weeks and months and expect to generate a profit. So there are some problems if you just trade the trend following strategy. So what happens if you combine it? Well, let's first look at short side trend following on its own. And I'll give you an example of a strategy that works. And this is a strategy I trade in my own portfolio as well. So the simple strategy is you short stocks that are trending down when the index turns down. So again, daily charts. So let's say the index closes below a long-term moving average, let's say 50 or 200-day moving average, the index closes below that. That means the index has really started an accelerated downward trend. Then you find stocks that are trending down, so stocks that are already moving down. You want high volatility, very, very liquid stocks. High volatility is important because on the short side, high volatility stocks tend to collapse faster, and that's what you want to generate your profits. Liquid stocks is important because you don't want to get stuck in a short squeeze. So you've got to have a stock that's trading several million dollars of volume a day, $1 million of turnover a day rather, because that way you can get in and get out easily and you're not going to have a lot of slippage and you're not going to get stuck in a short squeeze, hopefully. Once you're in short, what you're looking for is to capitalize on the accelerated momentum down. So you set a profit target in the market, let's say 30% below your entry price. Anywhere between 20 and 50% works well, but 30% is a bit of a sweet spot. And so what you're doing is you're shorting these stocks, you're putting a profit target 30% down, and you're waiting for the profit target to get hit, which will usually take somewhere between a few days and a week or two. So you just sit and wait, and if the profit target gets hit, you're out. Or if the stock turns around and starts moving up in the short term, or the index turns around and starts moving up in the short term, you get out. Now, what does that signal? That's like a short-term moving average. So let's say a 15-day moving average, the stock or the index closes above that, that's a signal to get out because the short-term trend has changed. And the reason you want to get out quickly like that is because the rallies in a bear market are pretty vicious. So you probably would have noticed that when the market is going down, it tends to pop and run really hard for a couple of days before turning around and collapsing again. That's because optimism is a really powerful force. So we want to make sure we get out quickly if we're on the short side so that we don't get sort of impaled on that temporary change in trend. This system uses a stop loss, obviously, to protect your capital. And the stop loss is pretty wide. It's 30 or 40% wide, depending on how you set it up. And the reason for that is it's sort of a disaster stop, right? We're not trying to day trade here with tiny little moves. We're looking for big moves. We're trying to catch 30% declines in these stocks in over several days or a week or two. And we trade 30 equally sized positions in this strategy. We trade 30 because diversification is really important. You don't want to get stuck in a short squeeze with a large chunk of your capital. If there's a rally in one stock, you don't want to get hurt by that. You want to spread your risk really, really broad because that's what smooths the returns. So this chart that you can see here is the back-tested equity curve of one of my strategies, again, over 30 years. And you can see that in each of the bear markets, it made great returns. And then it basically sat in cash and waited in between times. And then compare that with the trend following strategy, which makes pretty good returns most of the time, but then has some drawdown. When you combine these two, there's going to be some benefit because you're going to make money in the bull markets, you're going to make money in the bear markets. Obviously, it's going to smooth your whole portfolio out. And this is the benefit of the strategy diversification that we've been talking about. But there's some problems with short side trading, right? What are the problems? The problems are there's not that many great opportunities because there's not that many big bear markets. We've had a couple recently, but if you've only been trading, a couple of months or a couple of years, you don't get to have a lot of experience with this. And when I talk about big bear markets, I'm talking about, the dot-com bubble burst. I'm talking about the 2008 financial crisis. I'm talking about COVID and the COVID crash. It's that sort of ilk of big down move. There's not that many. So it's hard to get short exposure that's really profitable all the time. And so you got to wait for confirmation. Sometimes you can't take all short signals because there's no stock to borrow. That depends on your broker, obviously, and the volume you're trying to trade. You need patience because there's long periods where the strategy does nothing. If you let's say you were trading the strategy and you were in the tech bubble burst, you made good returns, and then the market started trending up, and you got several years where the strategy just literally generates no trades, and then it starts suddenly signaling again, and you make money in the next bear market. You've got to have the patience and the tenacity to see that through. But the good thing is, if you combine it with other strategies, it doesn't matter so much because other strategies are signaling when this one's not. So when you combine long and short strategies like this, what problems does it solve and what problems remain? What do you think? Well, there's a couple of problems that it solves for sure, and there's one or two problems that remain. The problems that it solves is it reduces the flat spots in your equity, because you make money when there's a bull market, you make money when there's a bear market, you don't have to wait. You've always got something that works. It builds equity during the bear market. So if you're a position trader or a swing trader and you're sort of sitting out of the market because you're waiting for some decent trends, then combining that with the short selling strategy really helps. And it can reduce your drawdown a lot because and over the long term, because you're making money in the two big market cycles. But the problem that remains is that you still get a drawdown at market transitions from bull to bear and bear to bull. And that's the reason is it takes a little while for your long side systems to get out of the market as the market turns, and you have a little bit of a drawdown, and then it takes a little while for the bear market to get proven and you start making profits on the short side. So that transition is still a problem. So how are we going to solve that? Combining long short systems like this, here's the issue, right? This red line is the short side equity curve that I just showed you. This equity curve here, I've just redrawn it as a line on this chart so I can overlay it with the long side curve. The green one is the long side, the trend following equity curve. Okay, so what's the problem? It's out of the short selling system is out of the market, and then here in 2008 it turned on and started making money. The long side system is in the market making money, and then it peaks and starts losing money. The problem is that the long side often gives back some profits faster than the short side makes it initially. At the beginning, at the turn of the trend, the short side takes a little while to get in. The initial downtrend makes you some profit, but not enough necessarily to offset your long side strategy. And then over time, the bear market accelerates and the short side strategy catches up and overtakes the long side drawdown. So your portfolio is in profit. It's this lag that is the problem. And this is the market transition problem from bull to bear and bear to bull. So making money in bull markets with a strategy like long-term trend following is easy. Making money in bear markets with a strategy like short side trend following, like I've showed you, is also relatively easy. The problem is in the market transitions. And this is where more diversification than most traders ever think about becomes really, really helpful. So let's talk about diversifying markets and how that can solve this market transition problem for you. Okay, here's this exact same trend following system applied to the Australian stock market, the Canadian stock market, the US stock market, the Hong Kong stock market, European, the CETA exchange, and London. Okay, pretty much exactly the same rules. A couple of slight tweaks for the different indices in each of these markets. But if you trade those same rules in any of those global stock markets, these are the results that you get. You can see 30+ years of positive expectancy returns. Now, each one of these individually is not perfect. There's no laser sharp equity curve here because that frankly doesn't exist in the trading world. You can't make money in an absolute straight line day after day, week after week, unless you've got some tail risk that's hiding, lurking somewhere that's going to eventually really come and bite you in the backside. So this is the same strategy in 6 different markets, and it works in many others as well. So there's value or potential for global diversification. On the short side, exactly the same thing. Same strategy works on Australia, the Canadian market, the US market, and the Hong Kong market. These are global markets where stocks are easy to short. In the US, shorting is really easy. In many other markets, it's not. These are some of the big markets where you can short stocks. pretty well. And the strategy works across all of those markets. So how does this help us? What does this actually do? In the market transitions, the advantage is that these markets transition from bull to bear and bear to bull at slightly different times. Let me show you. Here is, again, I've taken the equity curves, the back tests from these systems, and I've put them on a line chart so you can see the timing. In the beginning of 2021, my Hong Kong long side system peaked on the 17th of February 2020. And then it started going, it went into drawdown, and then it went to cash. But my Australian long side system, which I've already showed you what the system is, that didn't peak until 11th of November 2021, and then it went into some drawdown. If I add the short side systems that I've already shown you, the Hong Kong short side system entered mid-November on the short side and started making money. Before that, it was in cash. And then the Australian short side system entered January 2021. And the US systems, long and short, entered at different times as well. So how does this help? Well, when you have a portfolio long and short across multiple markets like this, the transition is smooth because part of your portfolio goes from bull to bear at one point, and then another part of it goes from bull to bear, and then another part of it, they transition at different times, so it smooths the journey. And so when the global markets rise and fall, your portfolio is gradually going from long to short and then short to long in stages, and it's a much smoother ride. And that smoothness is what reduces your drawdown, it's what keeps your equity curve growing steadily, and it keeps you in the game. So none of those shocks cause you a problem. When the US market started cratering a little while back in COVID, before that happened in the US, before I went short in the US, I was already short in Hong Kong. Why? Because Hong Kong was much closer to the center of the COVID crisis. So the Hong Kong stocks reacted more quickly than the US stocks did, and more quickly than the Australian stocks did. So that global diversification really starts to become helpful. So the less correlated the markets are, the better. So when you add something like crypto to the mix, it's even more powerful. So if you're on the left-hand side here, I've got an Australian long side system, and you can see the pullbacks in that system in 2020 and in 2022 rather. And then at the same time though, in crypto, the market's having rallies. Because they're not correlated markets, you're trading different markets that move to the beat of a different drum. That really even more powerful in smoothing the performance of the portfolio. So it's not just about diversifying across several different stocks in the portfolio, it's several different strategies and several different markets. And all of that helps you in these big transition phases to smooth out your results. Hope that makes sense. Okay, so the more you diversify long and short across different markets and the lower the strategy correlation between those markets, the less the market transitions will hurt your portfolio. So I'm sure you knew this at some level, right? Yeah, I mean, give me a yes or a no in the chat. If you kind of intuitively knew this, type yes. If you'd never heard this before, type a no. But you know, in my experience, many traders sort of know, okay, yeah, I should diversify. But really, do we do it enough? Have we diversified across multiple markets, across multiple directions, across multiple strategies in our portfolio? Or are we just trading the same one strategy in our own home market, hoping for long-term profits over 10, 20 years through multiple different cycles with that one strategy? Diversification will really help build that sustainable trading career. So how many markets are you trading long and short? And if you can, type it in the chat, but really just think about that. If you're only trading one market, US stocks or Australian stocks or Canadian stocks or whatever it is, then you're really putting yourself at risk during these market transitions. If you want a portfolio of strategies that will work through bull cycles and bear cycles and transition cycles, then you need to have more diversification than what you've probably got. So how can we improve this even further with deeper diversification? Let's talk about timeframes, okay? Because everything I've showed you so far has been on daily charts, not day trading, just looking at the charts once a day, making a decision or having your system make a decision and implementing that decision the next day. So let's talk about timeframes. What happens if we trade multiple time frames? Let's say we trade on weekly charts, and we trade on daily charts, and we trade on intraday charts. The benefit that you get is that the turning points for different trends are obvious at different times on each of these different charts, intraday, daily, and weekly. So if you have different time frames, strategies that work on different time frames, you diversify against the risk of trend changes even further, because your portfolio is divided up between those time frames. You know, you might get long and short much more quickly on an intraday time frame. On a daily time frame, it'll take a little longer. On weekly, you'll wait for even more confirmation, so your portfolio is smoothed again. And those shocks aren't going to hurt you. And a fake out won't hurt you, because some of your portfolio is slow to adjust, some of your portfolio is fast to adjust. Let's do a specific example. Here is an intraday mean reversion strategy that works. The strategy is you find very liquid stocks. It's intraday. It has to have a lot of liquidity. You wait for the stock. Sorry, the stock has to be in an uptrend. So again, simple rules is what works best here. So the stock's got to be above the 200-day moving average, so it's trending up in the long term. Okay. Wait for that stock to drop into oversold territory. You can define that in many different ways. It could be a 2-day RSI below 10. It could be 5 down days in a row, or something like that. So we're looking for a stock that's in an uptrend, it's in it, and then it's gone into a temporary down move. Once you find the stock that's having that in the middle of that temporary correction, you place a good for day limit order on that stock. So the previous day it's closed down. You place a limit order well below the previous day's close. Let's say 5%, 10%, depending on the volatility of the stock. It's usually linked to the average true range of the stock. That limit order should be good for day only. So if it gets hit during the day, you get in long. And then you're going to hold that stock until the end of the day, where you're going to get out, market on close. Now, why does this work? Well, and you can see here it works because I back tested this strategy, including slippage and commissions, since 1990, and it makes money pretty consistently. It doesn't take a huge number of trades because you're looking for a big intraday stretch. You know, you're looking for an uptrending stock, has a temporary correction. You place a limit order a long way down, 5–10% down, and you wait for it to hit, and then you typically it bounces by the close and you get out. It works because at some point during the day, there's a period of maximum pessimism, maximum fear. And often that fear subsides before the market closes. Doesn't mean the downtrend is over or the correction is over. It just means that there's intraday fear because, oh my God, there's momentum down, stops are getting hit, the stock is accelerating downwards. And then if you buy during that fear, you can capitalize on the fact that fear is generally an overreaction. And by the time that the market closes, everyone's calmed down and realized that the world is not ending for that stock. And so the stock's bounced a little bit and you get out. So how does this help your portfolio, right? We've already smoothed our portfolio with long and short across multiple markets. If we add intraday mean reversion like this, we can really improve our results even further. Now, this is a day trade system, but I want to emphasize here, you don't have to look at the market during the day at all. You can have a day job. You can not look at the markets. Why? Because you're looking at the daily chart to find your setup. As soon as you find the stock that you're gonna buy, you're placing a limit order good for day, and then you're waiting till that gets filled. And if that gets filled, you have an automatic market on close exit. So you don't actually have to be there during the day. You just let this thing play out, which is great for me because I don't like staring at the screen all day. I like to just set my trades up and then walk away and do something else. So how does this help? Well, it's intraday. You're only using the capital during the day, so it doesn't tie up capital that is required for your longer term strategies like the trend following that I talked about earlier. It has a low drawdown because there's no overnight risk. So there's minimal extra catastrophic risk that you add to your portfolio. It also is an instant off strategy. You know, where trend following, you've got to wait for several days for the trend to change, for the strategy to turn off. Because it's a day trade strategy and you're flat overnight, if the next day is not a long side trading day, you don't take any positions. So it's instant off. So you don't have this market regime change drawdown that we saw on some of the earlier charts. It also makes money when the short side is in cash and trend following is still in drawdown. So again, it's about strategy diversification, making money in different market conditions. What you can do with this sort of strategy is take capital that's not deployed in your long-term long side and short side systems that are daily or weekly, and allocate it intraday. Or you can preserve some capital strictly for intraday and also trade some daily and weekly strategies as well. So here's a solution to consistent, stable returns regardless of what the market is doing, regardless of the economy, regardless of the global economy, regardless of your local economy, regardless of what happens in individual stocks. All you have to do to reduce the impact of market uncertainty is trade multiple strategies, long and short. You can't go just long, you can't go just short, got to be both. Across multiple markets, not just your home market, because that leaves you vulnerable to your home economy, and multiple time frames, not just one time frame, because market transitions affect you too much if you're trading just one time frame. Multiple strategies, multiple markets, multiple time frames. But that sounds like a lot of work, Adrian. I don't want to spend 45 hours a day doing my trading, right? I don't. I want to spend 5 minutes. So how are we going to do that? Well, the point is you've got to evolve towards this as a trader. What most traders do when they come into the markets is pick stocks. And then eventually they discover technical analysis, and they start looking at charts and indicators and drawing lines and finding those entries in a discretionary way, which takes a truckload of work. And then they move to trading systems, which is if A and B and C are true, I buy. If D or E is true, I sell. Once you've discovered trading systems, the next evolution is a portfolio of systems. I'll trade several different systems so I can make money in more market conditions. And then eventually, a portfolio of trading systems across different strategies, markets, timeframes. This is the ultimate evolution, because then you can make money in no matter what is happening in the global economy. So here are the key messages as I start to wrap up. Most traders are not diversified anywhere near broadly enough to survive 20 or 30 years in the markets. You can diversify much more broadly if you trade systematically than you can if you trade with discretionary approaches, technical analysis, and so on. The systematic allows you to do this because you don't have to spend hours finding your trades. The software will find the trades for you. The critical goal is to reduce the impact of transitions in the market, bull to bear and bear to bull. Because if you can survive those and you've got good strategies for those primary trends, then you can survive long term. People usually get impaled on the trend change. Diversification is important in several areas. Most traders miss this. Different strategies, different markets, different timeframes. Do all of that and it really smooths your portfolio through those transitions. And then intraday trading doesn't mean you have to be a day trader, because you can have an intraday strategy like I showed you, makes good money, but you don't have to stare at the screen. So, do you want to know how to do this in 30 minutes a day? Yeah? Okay, great, let's do it. First of all, step 1, eliminate all discretionary trading from your life. Step 2, build a portfolio of trading strategies and systems like what I've showed you. And I've given you the rules in words. You just need those rules in indicator speak, and you've got the trading strategies, trading system that you can use. So you need a portfolio of those across different strategies, markets, timeframes. Use portfolio backtesting software. You can use things like Amy Broker, Real Test, Multi-Charts. There's software that does the trick. There's software, not brokers, right? The software is separate from the broker. And you need end-of-day data from Norgate or Metastock or a variety of other sources. That allows you to find your signals. You allocate capital between those systems and strategies to meet your risk objectives and goals. I can show you how to do that. And then you find your signals by backtesting your strategies each day. That takes about 30 seconds per system. To take one of those sets of rules that I showed you and backtest it over 30 years of data, over thousands of stocks, literally takes about a minute, 30 seconds if you've got a fast computer. So that's why systematic trading saves you so much time. You don't have to spend time looking at charts, you just run the backtest and it tells you what stocks met your criteria today. And then finally, you place your trades with the broker. This takes about 30 minutes a day across several markets, several strategies, several timeframes in my world. But you can also automate a large chunk of this. My trading is now fully automated. I just released a stock automation engine which does all of that for me. So my job now as a trader is monitoring the automation. So this is basically fully algo-based trading on a portfolio of strategies across 3 or 4 different markets globally, several different strategies in several different timeframes. So remember, I want to make sure you don't overanalyze, don't procrastinate, don't make excuses. Any trader can do this, right? Everyone can do it. But the question is, are you going to take the step? Are you going to put in the effort to really make this work in your portfolio? I'd love to help you. And here's some next steps that you can take for free to start moving down this path. If you scan the QR code or go to bit.ly/EST acceleration, you're going to get this bundle of tools and training, which will really help for free. All you have to do is enter your name and email. Millionaire Trader Code training, which will show you more detail on this path. You'll get a trading system confidence ebook to show you how to build confidence in each of these trading strategies that I've showed you. You'll get a portfolio CPR cheat sheet, CPR as in resuscitation, because it'll show you how to resuscitate a broken portfolio and what to do to fix it if you've got some old stocks hanging around that are really hurting you and so on. A daily process cheat sheet, which shows you exactly how to do this each day. And a trading mistakes cheat sheet, which gives you the biggest mistakes that most traders make when that cause them to lose money. And if you can eliminate those mistakes, you've got a fighting chance of actually winning. So scan the link, scan the QR code, or go to that bit.ly/EST acceleration, enter your details, grab all of this for free. If any of this sounded interesting, fascinating for you, go do that, learn a little bit more, and learn about a different style of trading. My trading takes me about 5 minutes a day now. I'm just monitoring my strategies. The computer does the rest, and I get to have fun helping other people do the same thing or building new strategies for myself and adding that to my portfolio. So that's 45 minutes, bang on. Hope that was interesting, and hope to hear from you soon.
Thank you so much, Adrian. I can't tell you how brilliant just the general principle of wait for something to wick below the low of the day, buy it, and let it run in a trending market. You know, I imagine that makes your losers very small and will capture some significant winners when it triggers. And I'm so impressed. Great information. I want to thank you for sharing your professional insight and advice with our audience. And we look forward to maximizing our returns with as little risk as possible. The 3 levels of diversification makes a lot of sense to succeed in the long term. Thank you for joining us today from the land down under. Happy Father's Day if applicable. Ladies and gentlemen, if you want to learn more about the tricks to smoothing returns as the market transitions, you can click on Adrian's link in the chat box and find him at enlightenedstocktrading.com. Thanks again, Adrian. Please come back and see us again.
Thanks so much for having me.
It was a pleasure having you on Traders Corner.
Thank you.
Oh, ladies and gentlemen, that will bring us to our final presenter. Oh, I mentioned at the top of the show we had a great lineup, and I hope everyone is listening closely because our next presenter is a graduate of Syracuse University, has been trading the financial markets for the past 15 years, and he wears almost every hat over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical assistance, tech support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Hey, thank you, Rob. Thank you very much for that great introduction.
Hey, you're so welcome.
I just want to confirm that my my screen and my audio is working.
The fact that I'm replying means your audio is working, and I can see the, pretty much the presentation or start slide of your PowerPoint.
Okay, great. That's great news. Thank you. Well, what a great presentation today by Traders Corner. A lot of great speakers. And I just want to take a minute and I want to wish every father a very happy Father's Day. If you're celebrating Juneteenth, like we all should be, there's a lot to celebrate this weekend. Father's Day, Juneteenth, it's a great weekend. And there's a lot to be grateful for. With that being said, I'd like to just take a minute and share my 2 little girls. I've got a 3-month-old who was born on March 1st, and I've got a 4-year-old. And so I'm really excited about Father's Day. I had no idea, I'll tell you, I had no idea that being a father was, a 24/7, 365 days a year job. And it's just a really great journey, something that I'm so grateful to be able to experience. So I want to start with my presentation. Enough about Father's Day. I have a very exciting presentation on our AI auto trader. And man, what a week it had this week. And who is it for? That's one of the, excuse me, one of the first questions I get asked. Who is this good for? Well, let me say who it's not good for. Okay. This is not for you if right now you are crushing it. If whatever you're doing is working and you're making consistent money and you're satisfied with your trading result, then this is not for you. Don't change a thing. If you find something that's working, stick with it. However, I think most of us, um, that's not the case. And so everybody else, pay close attention. I've got something here that's working extremely well. It really takes very little to no experience. It's good for all trading levels, whether you're an experienced, seasoned veteran or brand new to the world of trading. Whether you're a prop trader or you trade a live account, this strategy is ideal for you. Okay. Before I get going, I just want to get the CFTC out of the way. Make the disclosure that this is for educational purposes only. I am not a licensed trade advisor. We highly recommend consulting with a licensed trade advisor prior to taking any trades due to the substantial amount of risk that's associated with trading. Okay. So I just want to take a few minutes because I think this is maybe one of the most important slides of my presentation. The team at Right Line Trading, I'm not here alone. I'm part of a very talented group of traders and software developers, and our team consists of a great variety of talent. And I'm just going to start, and I just want to introduce. Listen, if you decide to come aboard today, I think it's very important, or if you decide to take up one of the presenters' offers that presented prior to me, I think it's important to know a little bit about their team and their company. And you don't want to play games with your money. I know I don't want to play games with my money. I want to invest my money in something that makes sense, that works, that's proven, and is being offered by a company that I know I can trust. So just to briefly, and I know it's been a long event, and I'm going to go through this really quick because I want to get right to the charts. I've got a great replay of my trades at the so a great presentation to get through this. I really, it's important to know. My trade is filled with a talented group, an extraordinary staff. I want to start with our tech guys. Our tech guys are Sergio Rodriguez and Charles Sider. I've been working with Sergio for going on a decade now, and Sergio has a master's degree in computer science. He can make something come to life, regardless of what it is or how complicated it is. If we give it to him to bring to life on the computer, he can make it happen. We've added an additional developer to the team. His name is Charles Sider. Charles has over 30 years of experience. He has a bachelor's degree from UCLA in computer science and engineering. And after 30 years, he's got quite a bit of experience. He's also a trader. He trades stocks, options, and futures. And we're very pleased and proud to have Charles on the team as well. We just added two new employees of Right Line Trading. That's Jake Thomas at the bottom. I like to refer to Jacob as our AI prodigy. He might look young and he barely looks like he's able to shave yet, but when it comes to AI, he's pretty savvy. And right next to him, he's also a college student. They're both college students, Jacob and Brock Miller. Brock Miller, who is also new to the team, is working towards his computer science degree. He's developing his abilities in digital marketing, and he's also spent the last several years supporting customers at a fine dining restaurant. So we're very pleased to have Jacob and Brock join our team. And now I'd really like to emphasize the importance and value of our traders. Listen, our vision as software developers is we want to have the ability, our software, we want to develop software that helps predict the future direction of price. And in that same vein, we also needed to define risk. We don't want to get into a trade that's associated with a lot of risk. So we want to know which way the market's going to go, and we want to avoid those risky entries. And on the right edge of the market, on the right edge of the chart, every morning, we have 3 professional traders. What we do with our software, how we leverage that information on assessing the future direction of price, we use it to extract profits or money out of the financial markets. And David Kushner at the top right, he's our prop trader. David Kushner has 6 accounts that are performance accounts. They're funded accounts that he trades every morning in his live trading room. The prop firms have, really exploded onto the scene. It's opened the floodgates and allowed people who were never able to get into this trading game. It gives them the opportunity to trade without risking their own capital. Imagine being able to leverage $25,000 or $50,000 in the market and having 10 or 20, maybe having a couple hundred in your bank account. But that's the reality today, and I think it's really exciting to have such a huge participation now in the trading arena. So David Kushner is our prop trading pro. He's been doing it for, I think he's been trading the 6 accounts for about 2 years now, and he treats it like a business. He's very conservative. When he takes one trade, it goes into all 6 accounts, and he trades on a discretionary basis, and he also uses the auto trader. If you join him in his room, he adheres to the guidelines and all the rules and regulations that these prop firms honest. And he our sector and that is down here on the bottom left is Mr. Craig Emery. Craig lives in Sin City, Las Vegas, and he is by day a project design manager in Las Vegas, but he's been trading for 20 years. And let me tell you, I've had the good fortune of being able to talk to Craig on several occasions. And he's emphasized to me that it was a very frustrating experience, his journey. And I could share with that frustration. And I think a lot of you in the audience can share that. Listen, sometimes this can be very frustrating. We get into trades and they go against us. We exit a trade only to see it go in the direction of our profit targets. It's very frustrating. So Craig experienced a lot of that frustration, and he found a home with Right Line Trading. He's had tremendous success trading our software. And I have to say that there's not many other vendors that will trade the market on the right edge of a chart, trading their system. Maybe after the fact, kind of like a Monday morning quarterback, they might tell you how great they did, but you never really see it in real time. And I think that's really what sets us apart. And last but certainly not least, a very dear friend of mine on the bottom right is David Wise. David Wise is a professional trader. He does it full time. He's got a verified performance. If you're not familiar with Reddit is a tremendous community of traders, about 40,000 traders deep, that all share insights and trading strategies and educational articles. Well, David is in that community. He's a verified, if you look him up, his name is One Wise. He's a verified trader, meaning that they've looked at his track record and performance and regard him as a professional trader. He has the performance, the track record, the credentials that make him a verified professional trader. And David, funny story of probably 2.5 years ago, David had purchased our Compass trading system, and he was telling me on Skype, about his results. And I was like, wow, every time he'd put a trade in that Skype message box, I'd look it up on my chart, and man, I could see that this guy was something special. And lo and behold, and he opened his own room with us. And really, his performance over the last couple of years, he's maintained a 90% win rate trading options. And he doesn't guess which way the market's going to go. It's something that I've learned from David Wise. He waits until the technicals all line up before he enters a trade. And if you ever get a chance to check out his room and you like trading options, you're not going to find a better options trader with a 90% consistent win rate as David Wise. So the leader of our team, and I saved the most important and best for last. Just recently, Mark Miller, who's pictured right here at the top, purchased Right Line Trading from Mark Sachs. And let me tell you, Mark Miller brings to the table, first of all, he's a U.S. Army veteran. Okay. I don't know about you, but I'm very patriotic. I know military and being in the military. Listen, these are people that are instilled with good values, and the core values that they're instilled with are, honesty, integrity, transparency. Mark Miller fits the bill. He's a veteran of the U.S. Army. He's also a graduate of Cal State. He has his MBA. To me, most important, he's a man of God. And that's what I respect about him the most. So he's the new owner of Right Line Trading. Mark Sachs is not pictured here, but he definitely should be, because he is definitely a contributor to Right Line Trading. Mark Sachs is the pioneer and founder of Right Line Trading. Let me tell you, Mark Sachs is a walking encyclopedia. If you've never, heard him talk, you could throw anything at this guy. It doesn't matter what the topic or the subjects. Anywhere from medicine to trading to physics to mathematics. You're not going to catch him off guard. He's extremely sharp. He's a contributor on our team. He laid the foundation of this company, and he still runs a couple of option alert services as well. So that's our team at Right Line Trading. We are traders. We're not marketers. And making money and providing our members with powerful tools is really our top priority. So with that being said, I mentioned and I touched on that we've all experienced problems making money trading. It can be very frustrating, and I'm no different. I'm definitely not pointing the finger or sitting up in an ivory tower. Let me tell you, I've blown a lot of trading accounts. Most of it is the emotional aspect of trading, of revenge trading, of making impulsive decisions, over trading, just being inconsistent. I've bought many indicators that just don't work. And listen, I've been talking to traders for the last 10 years, probably close to 7 days a week. And listen, we all share the same problem. We've bought stuff that just doesn't work. We've been seduced into buying products that lag price. They don't have a proven track record, and they just don't work. Um, so all of this leads to the same thing. It's that frustration that I had opened up with, of our trading journey, and it's all part of the learning process. Unfortunately, it can be an expensive learning process. Well, let me tell you, it's been our team. It's not only been my commitment, but now I'm surrounded by a group of professionals, and it's all of our commitments, to really bring this to an end. And what I'm going to show you here is a strategy that I believe will bring this to an end, for you. So let's keep moving. This slide here is just showing the uncertainty. Monday morning, when the bell rings and the market opens, listen, we know that the opportunity's there. There's billions of dollars that are being traded, and our job is to extract some of that money, not have it extracted from us in our account. The uncertainty is knowing which way the market is going to go. Real funny, just an analogy that I like to make, and I'm going to make it brief. David Wise, he's our options trader. Maybe a few months back, the CPI report was getting ready to come out. Jerome Powell had just it was getting ready to raise the interest rates. I was almost sure of it. And just prior to the market open, the CPI report came out hot. I think it was like 8:30, and I asked David on Skype. David Wise is the options trader. I asked him, David, listen, the CPI report, it came out. I mean, I can't believe how high the inflation is. We know Jerome Powell's got to keep raising the interest rates. What should we do? Where should we place our trade? And the Skype little circle started spinning, and he was typing away and looking for some great words of wisdom, which I received. Where he said he didn't know. He didn't know which way the price was going to go. And me, I was 99. I was already placing my put on the SPY and the Qs because I was just sure that the market was going to go down. David said he didn't know, and that was the right answer because the market happened to go up that day. And had I not listened to him, he said he's going to wait until the technicals line up, and that's what he did. And thank God I asked him because that's what I did as well. So it just the uncertainty of knowing which way the market's going to go, and having the tools that will, you know, give us an indication accurately of where it's going to go is really priceless. So in order to be successful and to be consistently profitable, we do need to have these tools that will identify risk, as I had mentioned. And Adrian, right before me, he kind of caught me off guard because his presentation was, very, very knowledgeable guy. And at the end, he caught me off guard because he automated the whole thing. He automated it. Okay. And that's what these hedge funds do. That's what these banks do. They're not out there, pulling the trigger on a discretionary basis. It's all these days is all automated. And that's really the two keys that I think, in my case, will lead to profitable consistency. So why do we feel this is the most advanced auto trader we have ever developed? What I'm about to show you is an incredible equity curve that this system has performed. I'm also going to show you the back testing capabilities of this system. We all know that market conditions change. We may have purchased automated strategies in the past that worked for a week or a month, and then the market conditions change and it can't take a winning trade. Well, that's not the case here. With our back testing capabilities and our staff, we are always updating and optimizing our templates and sharing it with our members. Really, the secret sauce is the powerful proprietary indicators that the system leverages to help predict the future direction of price. And you'll see in just a few moments, let me tell you, it's not our win rate that's, creating this success for us. What's creating this success is our trade management. Listen, as futures traders, we know that the risk to reward is really so integral. How many times have you taken a couple of winners and you're feeling really confident, really good about the day, and then you take a loser and it wipes out 2 or 3 winners that you just made? Why? Because our risk to reward ratio is out of whack. One loser can potentially wipe you out of 2 or 3 winners. And we're taking 2 steps forward and then 3 steps back. And man, the frustration that causes. Well, we have an automated trading system that uses the trade management. It's a proprietary trailing stop. We have it trailing based on an EMA of an EMA, so which is really an assessment of momentum. But listen, I don't want to overcomplicate things. It keeps you in the trade to the maximum excursion, and it gets out of the trades when momentum wanes. So it gets the meat of the trade. It gets the majority of the profits in the move. And you'll see from the numbers I'm going to show you, and I'm really a numbers guy. I'm going to show you the numbers, and you'll see the average winning trade versus the average losing trade. And listen, Mark Sachs always said, it's not how many winners that we get. It's how many losers that we're able to avoid. So the benefits from using our automated system. And man, let me tell you, I'm somebody that needed this more than anybody. No more overthinking and no more hesitating. Okay. Overthinking and hesitating. For me personally, and I don't know if you can relate to this or not, but for me, it's, I got to admit it, it's a little embarrassing, but having money on the line and seeing a trade go against me, it kind of, it makes me nervous. I can't say it any better way. I want to exit a trade too early if it starts going against me. If the trade starts going in my direction, I'll exit too early, and it's very frustrating. So those emotions are eliminated. There's no more overthinking. I've talked to people that just can't pull the trigger, on their live account. On Sim, they could trade like a madman, but when it comes time, they switch it to their live account. They just can't click the mouse. Okay, that's not going to be the case with this. Where to put your stops, where to put your profit target, all of that is pre-configured for you right out of the box. If you ordered this AI auto trader today, you're going to get pre-formatted template that you'll load up and everything will be in place. Your ATM strategy, all of the inputs, everything. Okay, all of the heavy lifting has been done for you. Now, there's no more cutting your winners short. That's the one I love the most. and there's no more mismanaged trades or over trading. So let me go ahead and get right to the chart. I don't want to ramble on. I want to show you what the system looks like. When we get to this slide, what I like to do is just bring up a chart and let's go over what we're looking at. Listen, you know, these strategies are strategies that run in NinjaTrader 8, okay? If you're new, if you're a new trader, NinjaTrader 8 is a very powerful futures platform. You can't trade options with it, but it's designed specifically for trading futures. And it has the strategies component, which is just one of the features of their platform that allows you to make automated strategies or have conditions that must be met in order for the system to automatically trigger a trade. Okay, so those conditions that must be met are the indicators that we've developed, our proprietary, we call it our secret sauce. And number one, most important, Mark Sachs, I had mentioned in the beginning of my presentation that he was the pioneer. He built the foundation. He based the software based on mathematical modeling, with the premise being to follow in the direction of institutional money, which are really the ones who are creating the trend. It's not us as retail traders. It's the large institutions that are driving the price of the market either up or down. So our market internals is kind of like putting your thumb on the pulse of the market. What it's looking at is a disparity between uptick and downtick. It's looking at 16 indexes that look at uptick versus downtick, as well as some declining ratios. And when there is a large disparity, then you'll see up to the upside, you'll see these green triangles like you see on my chart up here. And that's telling us that there's a disparity of uptick versus downtick. So this is not a lagging indicator. This is something that in real time is telling us, hey, the institutions, the large money is driving the price of the NASDAQ up. And that's telling us we don't want to go short right now. There's only one direction to trade right now. Okay, so it's that uncertainty that we saw earlier of the big question mark, where are we going? That's giving us a real good indication of the future direction of price. Okay, the second proprietary indicator that's part of our secret sauce, you can see the colors in the background of my chart. What that is a multi-time frame assessment of trend. Before we had that indicator, what we would have to do is if we were trading a 1 minute or a 5 minute chart, we would have to have a second chart of a 15 or a 30 minute just to see what the overall trend was, to make sure that we were not taking a counter trend trade. So we want to enter a trade when the higher time frame is also aligned to the upside. And that's what that background color is telling us. It's telling us that on two higher time frames that it's also going headed up on the NASDAQ. So those are two of the conditions that must be met in order for our automated system to take a trade. The second is we're going into trade management. But before we go into the trade management, we also mentioned at the start that we have to define risk. We can't just jump into these trades because those two indicators are lined up. I'm sure we will get some winners, but the problem is we're going to pull in some losers. So in order to eliminate the losers, what we do is we look at a few different indicators to keep us out of high risk environments, high risk trades. And a couple of those indicators are on my chart, and I'll just point those out to you. This red dotted line is a pivot, an area of support or resistance. This thicker red line we call our volume zone, which is also kind of like a pivot, on a higher time frame. The black dotted line on the bottom is our VWAP. Okay, we never trade into our VWAP either. So the automated strategy will take into consideration whether or not we have the clearance to execute a trade and hit our profit target before entering into one of these areas of support or resistance. So the software really does an incredible job of defining risk. The other component of the system is our trade management. Part of the system, as I had mentioned earlier, we share with you where to place automatically. It places your stop and it places your profit targets. The trailing stop is tied to the 15 EMA. This dotted line on my chart right here is our 15 EMA. The solid line is our 50 EMA. So another component of the system, besides the trailing stop, let me just backtrack just a moment, is market structure. In order for us to take a long trade, our 15 must be on top of our 50 and sloped up. That means momentum is headed up, and our 15 EMA is also green and headed up. Okay, so our stop, let me go back to our stop, is tied to this 15 EMA. When you see these crosses come up on our chart, what that means is that all of the conditions of our strategy, which are listed here to the left, the ones in green on the right edge of my chart have been met. The ones that are listed in red have not been met. And when the market is open and you're on the right edge of the chart, those are dynamic inputs that you'll see flashing, waiting for everything to line up. And you're going to see in just a few minutes the speed. I mean, this system is extremely powerful. It could trade 5 or 10 strategies or different instruments or different time frames simultaneously, okay? Simultaneously, and do it with incredible accuracy. Excuse me. So I want to call probably one of the most important parts of our strategy, because listen, our win rate is about 50 to 55%. Okay, the system takes losers. The key of the system is that our winners are bigger than our losers. Okay, we're able to stay in these trades and profit and take in a lot of times the maximum excursion of these moves. Okay, so let's go ahead, and before I show you the results of our system, I just want to mention that what I'm going to show are backtest trade results. They are not 100% accurate. They are not the end all be all. However, we've just recently released an update. Let me tell you, our team, I'm part of a great team. Sergio and Charles, and with the help of Jacob as well, and Mark and myself with testing it. We've really spent hundreds of hours working on our backtester, on the strategy analyzer that Ninja does. What I mean by the strategy analyzer is the Ninja Trader has a backtesting tool called the strategy analyzer, where you can run a backtest maybe 30 days or 60 days or a year back and show the performance over 30 or 60 days and be able to play with the input and edit the inputs and get your best result over a series of tests to optimize your inputs and optimize the settings. And what it does is it gives us the performance. Well, we had found that they really weren't matching. They were a little bit off. However, in June, around June 1st, we released an update where, after hundreds of hours of improving our testing abilities, which meant redeveloping some of our indicators and our trade management strategy. And I'm telling you, a lot goes into it. But we're able to get it, I mean, extremely close. I'm not going to say identical because it'll never be identical. You know, in a perfect trading, in a perfect world, there's no slippage, there's no bid and ask spread, there's no pick differential, and you know, there's a market makers are, you know, in the game. So it's not going to be perfect ever. But let me tell you, we've spent hundreds of hours making it as close as perfect as possible. So what I'd like to show you is real quickly, and then we're going to see the system trade on the market, is the settings that go into our strategy. What we look at is the indicators that I had mentioned earlier. What the strategy has, and I think it's important to know because I recently got a strategy and I had no idea what it was even looking at. You know, I was, you know, asked to enable it. It's kind of, you know, we call it in the trading industry a black box system. A black box system is something you enable and you cross your fingers and toes and you pray to God that you get good results. And you really have no idea what, you know, who's taking the trades or why they're being executed. And that's not the case here. The indicators that I've just showed you all have input. And in the global parameters of our strategy, we have the optimized inputs. This is what our team does. We test hundreds of different variations, and NinjaTrader has an extremely powerful tool to help us optimize them, you know, in pretty short order. So as market conditions change, we're always updating the input. So this was a back test that I'm going to show you here of our, I believe this one is of our 15, yeah, this is of our 15-minute strategy. And you can see in the course of the month of May through June 16th, this system here running on a 15-minute on the NASDAQ brought in $7,000 in profit. You can see it took 58 trades. 50% of them were profitable. But the reason why this strategy was so successful is the average winning trade is $400, where the average losing trade is only 186. So the system only had to win 50% of its trade in order to make that type of equity, which is really something special. So the analysis, what our equity curve looked like, you could see here, we took a little bit of a drawdown, not much. If you're a prop trader, this is a strategy that really didn't take much of a drawdown. And over the course of a month and a half, it had a few peaks and valleys, but you could see if we smooth it out, it went straight up. Okay. And you can see if we go to our chart, it'll show you the trades that were executed. So this was on our 15-minute strategy, and it'll go back and it'll show you the entries that the system took. Now, I also want to show you a few different time frames. This is on our ES. We have a lot of traders that like to trade the ES, and we had a lot of requests to trade the E-mini. Listen, we're not dogmatic about which instrument we trade. It could be lean hogs for all we care. It doesn't matter. What does matter to us is we want to see profit, whether it be on lean hog, silver, the E-mini, the NASDAQ. It doesn't matter. We want consistent profits. We want to build our trading account with as little risk as possible. Well, the ES on a 5-minute has turned out to be one of our most profitable strategies. You could see from May 1st, and I just want to show you back on the 15, because I've had some people say, well, hey, that didn't look right. Let me run it again, and just so you can see, that these are real results. These aren't things that I'm making up or that I'm trying to pull the wool over your eyes. So I just want to run it in real time just so you can see. And while that's running, you can see in the background the results of my 5-minute ES strategy. And the ES strategy is a really great strategy because it doesn't take very many trades. Okay, here we go. In real time, this is the same exact result that I had just showed you. Okay. So on the ES, we had about a 56% win rate. Our average winner was $199. This is saying the average losing trade was 375, which doesn't look right. So let's rerun this one more time. Before I run it, let's look at the chart. You can see that the trades that it took. Beautiful trades on the E-mini. You can see where these text and markers are. These crosses is where everything lined up. And it's a very exciting system and you're going to be able to see it. It can really run up the score very quick. And the month of June, let me tell you, was probably the most profitable month that we've been running the system. So let me run this one more time because it doesn't appear the average losing trade could be that much higher than the winning trades. And then I'm going to show you which was our most profitable strategy, which really was a surprise to me because I didn't think the 1 minute would be as profitable as it was. But I mean, wait till you see the video I'm going to show you. This strategy in the month of June went on a tear. If you were trading it, you made a lot of money. And let me show you what the results were. We'll come back to the other one. This is the time frame that this was run was May 17th to June 16th. So this is a 30-day profit of $21,000. $21,000 on a 1-minute template. If you look at the equity graph, you could see it just goes straight up. In the month of June, especially from right around here, from the 31st to June 16th, it really crushed it. And if we look at the chart, we go to the chart, you can see why. This system thrives on the volatility. And the video I'm going to show you in just a few minutes is really going to emphasize the power that this system has. It's really remarkable. So the 1 minute just has been crushing it lately with this volatility. The markets, we were on a real rally here the last week or a week and a half. And our system sniffs out those, that institutional money and is all over it. So that was the 1 minute. And these are some short trades that it took as well. So you could see how accurate the system is. You could see that the results are really outstanding. And let's go back to the other one real quick just to see. So the average winning trade, largest winning, largest losing, average losing trade was 177. Average winning trade 205. That's on the 1 minute. And on the ES, on the 5 minute, oh, it's actually still running. Okay. So while that's running, now on my control center here, you can see that I have a number of strategies that we run during the live trading market. And if I open one of them up, for example, the ES, that's on a 15-minute. Let's open up the NASDAQ on a 15-minute. And you can see on the inputs of my strategy, just like on the strategy analyzer, it has all of the inputs that we're able to put in. We use an 89 range for our market internals and bias input, our volume zone input. Now, I know that this part of the presentation is probably only going to appeal to half of the traders out there. The other half of the traders really don't want to muss and fuss with this and get their hands dirty. And let me tell you, that's something that you don't have to do. The way these come to you out of the box are exactly what I'm showing you in my result. Okay. However, we do have the other half of our traders that like to get under the hood and play around with the inputs and create their own strategy. And this will absolutely give you the ability to do that. You can put these inputs and trade them for really any time frame, a daily time frame, a weekly time frame, a 1 minute time frame. You could trade them on tick bars, range bars, minute bars, Unorenko bars. It doesn't matter. We have all of the inputs here, so it could be really configured on any time frame, leveraging any type bar type. Another really nice feature, I talk to people all the time that just can't sit in front of their computer all day long. They might be seeing patients, or they might be a truck driver and they're driving their route, or whatever it might be. They just can't sit in front of the computer the whole day. Really, one of the nice benefits of this system is you can enable this strategy and walk away, and this will run entirely by itself. I think the first fear that comes to mind is, well, is it going to blow out my account? Well, in the parameters of the strategy, as you would be able to set your loss target. If you're trading a live account and you don't want to lose more than $200 for the trading day, then you could set $200 as your loss limit, and it will trade until you either hit your profit target or you hit your loss target, and then the system will automatically stop trading. Okay, so that's a really nice feature that's built into this strategy. Regardless of where you are around the world, if you live in Australia, or you live in California, or you live here on the East Coast in New York or Miami, this is coded. It's actually hard coded in Eastern time. So you would put your settings as if you were in Eastern time, but this will trade really in any time zone around the world. Okay. It will also trade aftermarket, pre-market, and overnight as well. I get a lot of questions. Can I trade the European session? Yes. So whatever session you'd like to trade, we could set this to trade 24 hours a day even, and it'll trade whenever you enable it and stop trading whenever you disable it. So we also have a feature called an entry on the same bar that you can, a lot of traders want to get into the trades earlier. Some want to wait for the bar to close and get a confirmation. So we do have a configuration that you can either enable that or disable it. And then we have the conditions of our strategy that I've mentioned earlier. If you hover your mouse over each one of the conditions, it tells you what each one does and looks at. So we're also have a PDF in our members area in our Discord chat group that also has a really good video and PDF of these different inputs. So just briefly, just so you could see the logic that the strategy has. We have our bias, which was that background color of the chart, the multi-time frame assessment of trend. We have a volume threshold, where if it's not trading 400 contracts per minute, the system won't fire a trade. Then we have our 15 and 50 signal. That's pertaining to the 15 and 50 moving averages. We want the 15 to be on top of the 50. We want we want them both sloping up, and we want the 50. We always want the price on a short trade to be below the 50 and the 15. So we have all of the market structure criteria here. We have our trend signal, MA diff. Our MA diff keeps us out of an overbought or an oversold trading environment. As software developers, we have to define risk. We don't want to get into trades that are in overbought or oversold environments. If the NASDAQ is headed straight up, we don't want to get in late to the party and get into a move that's already overbought. We'd like it to retrace back to the mean and continue up into the trend before we enter that trade. So we want to keep you out of the losing trade. And then, of course, it has our areas of support or resistance. We don't trade into pivots or volume zones, the VWAP. The system just won't trade into them. Coded right into our strategy, which I really haven't seen before. Sergio took the time to actually code the trade management right into the strategy parameters. So this is not something that you would need to pin to a chart. This strategy runs under your control center. It kind of lives alone. It doesn't depend on anything. And it will trade once it's enabled, it will trade for you without a chart or anything. So our trade management strategy on this one here, and why we're having so much success, on our 15-minute template, this one has a really large stop. It has a 75 tick stop. We're really giving it a lot of room. So with a 75 tick stop, we're going for 40 ticks on our first target, and then we're going for 200 on our second. And what we have enabled down here is there's a little box that says exit on line chain, and we have it checked off. So if this trade starts going against us, it's not going to wait for it to hit your stop at 75 ticks. It's going to take you out of the trade when that 15, when momentum starts to wane, and that 15, that EMA of an EMA, it more resembles a 7, a moving average with a period of 7, because it's an EMA of an EMA, but we call it our modified fast, and it's a really good indication of momentum. As soon as momentum wanes, it's going to take you out of that trade. There's no guesswork, and it's really a sophisticated stop. And that's why our winning trades are a lot higher than our losing trades. So our stop, let's say the trade does go in the correct direction. Once we hit our first profit target, our stop is going to go to break even. Once our stop is at break even, we're in the trade now with no risk. And we have a second profit target of 200. So we're in with no risk and with the potential to keep running up the score on that trade with no risk on the table. And this is trading on a 15-minute time frame. So these are the parameters of the strategy. What we do is we like to run a 15-minute, a 5-minute, a 1-minute, and we get a variety of different instruments. Right now, we're currently active on the E-mini, the NASDAQ, and the Russell. And we're working on developing crude oil, gold, and a few others. And once we have some consistent test results, those will be coming out for the people that own the system. Okay. So let me just check real quick just to see if there's any questions. If not, I'd like to show you the system perform on a live market. And I've got a really special offer for you. Brendan. Hey, Arthur. Thank you, Arthur. Okay. Okay. Not too many questions. So let me keep moving. And I'm going to show you why we're so excited about this. I'm going to have to drop my my slides here just for a moment. Let's take a look back because I'm kind of curious about this myself. Let's just see what the average winning and losing trade was on that 5-minute on this NASDAQ. Again, it says the same thing, which is kind of odd. So I'll have to look into that. But the results, I compared the actual profit to what my strategy did, and they resemble one another. So you can see in our summary, it's at about $10,000. This is the ES on a 5-minute time frame. And let me see that the time frame is April 1st to June 16th. Okay, about $10,000 on the ES. All right, so I want to show you this video and really why our members are so happy. And I'm going to show you the Discord chat group and then we'll wrap it up. So let me escape out of here and let me go to the YouTube video. Now this YouTube video, this is a video. I know you're not going to have audio, so I'm going to put it in full screen mode. And what this was is this is a June 15th. This was on Thursday. And we were running the 15-minute, the 5-minute, and the 1-minute on the NASDAQ. And we were also running the 5-minute on the ES. And the monthly results that I'm about to show you are going to be the results running from June 1st to the 15th. But before we get to the monthly results, I wanted to show you this replay from the session on Thursday of June 15th. Because the system is just incredible. You'll see on the 1-minute on my top right, you can see the cross comes, the market internal, the entry arrow came up, and the institutional traders are driving the market up on the NASDAQ. And the trade does give us a little heat, which is just part of trading. But there's some definite follow through. And you can see in real time our stop is right on the chart. I don't recommend it, but if you wanted to move it, you could. And the system is extremely exciting, and you're going to see why. It's just getting started. This move up, the goal of this system is once the institutional money kicks in, it wants to reach your profit target and get you out. It wants to put you on the sideline for the day with your profit target met. And that's really what I love about the system. It really doesn't fool around. It doesn't play games. It's very efficient. So you can see it jumps right back in as they're pushing the market up. And there's just a huge disparity between uptick and downtick. And the system sensed it. And it just pops in on a 1-minute. Now it looks like it popped in on the 15-minute. And then the 5-minute will get into the action. And on the bottom right, you'll see on my ES chart, it's kind of tabulating the P&L as the video goes. And you can see on the 15-minute that stop, it gives us a little more room. And the profit targets are much larger. And now it pops back into a 1. So it loves this setup. It wastes no time. Now, if at any point I kind of let it run this day, normally if I make $1,000, I'll have it stop trading. For this demonstration, though, I just wanted you to see, how powerful this system is. Imagine as, trading this on a discretionary basis. I don't have the ability to do this, with very little to no experience at all. You can enable these strategies out of the box, do nothing special to them, and this is exactly what you'll receive. So this weekend we are running a limited time special offer, and you'll see in just a moment. I'm going to be pulling up. I think this last trade actually goes against us, and I wanted you to see that as well, because not all of the trades win, obviously. To be perfectly transparent, we're right in the 50 to 55% range on our win rate. What makes this such a profitable system is our ATM, our trade management strategy. So right now it's at $2,510. You can see on the bottom right. So this one's going to come back on us. But this is pretty much how almost every day of the week went last week. It was a really exciting week. So let me bring up the week's performance. And I'm about to show right now the monthly performance, which is just over 10 grand. And I'm going to pause it here. Now you can see for the entire month of June, this system is up close to $11,000, and we're halfway through the month. That's how powerful this system is and the results that we're getting. So, you know, a lot of people had mentioned to me, well, you had a good day. We post some videos on YouTube, and sure, we did highlight some of our better days. But now we're looking at several months that we've been doing extremely well running this system. We've had to do updates. Sure, we've had to change our inputs and make adjustments. But that's where having a talented team of professionals really works in our favor, and it's going to work in your favor as well. So with that being said, I'd like to show you the special offer that we have here today. Before I show you the special, I'll come back to this. The special offer, and I'm going to put a link in the chat box. The special offer, and I want to call it the Father's Day special because I'm so proud of my two girls. This is the first year with, you know, with my new baby, and um, my wife and I couldn't be more, you know, grateful to have two now. So our Father's Day special, or Traders Corner special, what we're doing, we want to maintain the integrity of the system. We do have a variety of templates. So we have traders trading it on the micros, on prop accounts, on live accounts. And we haven't had a problem. The markets that we're trading, you know, are very liquid. But we do want to maintain the integrity of the system. So what we're doing is we're making available 25 orders, maintaining, let me say this, and I just want to be, you know, totally transparent on this. Having, you know, 50 or 100 people on the system requires a lot of support. And not only does it require support, but we want to be able to cater to each one of our members and be able to optimize the input and share them with you, and be able to do screen shares with each and every person that requests it. So this is an ongoing commitment that our team is making to you, and that is to, for the people that are on this system, we're going to offer tech support, full installation. We're going to set everything up for you. You need absolutely no experience. Now, I know there's some of you out there that are probably better than we are, that have a lot of experience, and you're welcome, you know, to take advantage of the offer as well, because I think you'll get this. I know you'll get the same result. But I also want to say that the 25 orders, we want to maintain the integrity of the system. We don't want to have 200 or 300 people. We have to keep it down to something that we can manage, and that's not going to, you know, cause any problems with us getting our fills. We don't want any latency. So we're opening it up to 25 new traders today. And as a special, what you're going to receive is pretty much what I showed you today. You're going to receive really two systems. You're going to get our discretionary trading system. What the discretionary trading system consists of, and let me put the link in. What it consists of is all of the chart template, all of the indicators, all of our ATM strategies, all of everything that you'll need to execute the trade on your own on a discretionary basis, all of the signals. I know we've got a few minutes over, and I do respect your time, but I just want to go over this offer and then we'll wrap it up. So the link is in the box, and the other bonus that I wanted to mention to you and show you is the Discord chat group. Now, before I show you Discord, because really this is how we share our information as a community, which is really another part, one of the most important things, our mission at Right Line Trading is to create a community of like-minded traders that share, results, strategies, and supports one another in this journey. So our Discord chat group is really a tremendous tool that we have to bring everybody together as a community. So what you see here is in our Discord chat group, we have our general trade channel, We have our resources and strategies where it has the PDFs and the videos that I had mentioned, the indicators that go into it. We have a couple of professional traders, Savvy Trader and Dr. No. We have our daily trading results. You can see in our daily trading results, people post their results. And you can see the results that people are posting. These are happy people. These are people that are making money trading our system. Okay, so you're going to become part of this community of traders. But I really wanted to show you, and I think is the most important thing, is when we do an update. And to me, it's one of the most important things. There's nothing more frustrating than buying something and it just doesn't work anymore. I've talked to so many traders that have purchased strategies that they did well with, and then it just stopped working. That's not the case here. We have in our updates channel, we have Charles and Jacob and Sergio have Calendly linked that you'll be able to click, and same day, they'll be on your screen getting you updated, getting everything set up properly, answering your questions, and getting your system running. Okay, that's same day. And that's all of the updates are always shared. A lot of you won't need it, some of you will, and we're definitely here to support you and hold your hand if you need it. We also have our AI Auto Challenge. We challenge you to create your own strategy with your own input. We award $200 every week to the winner. If you create a strategy that beats everybody else, we will give you $200 in prize money. So it is fun. It's a great community. And you will be a part of that community if you take advantage of this special offer today. Now, last but not least, if you have a question, I have a couple of hundred people in the room today. It's the big event with Traders Corner. And I know I can't get to all the questions, but if you have a question and I'm not able to get to it, please put your name and your phone number in the questions box. The nice gentleman at Traders Corner, Rob, and his team will share them with me, and I'll be able to give you a call, and I can try to answer any questions that you might have. Now, the special offer, we've got some coupon codes that are going to be good throughout the weekend. Don't wait till Monday to do it. I've only got 25 of these available. The coupon code is going to be save $100 for the monthly offer. It's $2.99 a month. The system comes with the full discretionary system. It comes with the full automated system, all of the strategies. the Discord chat group, and we're going to be releasing additional instruments in the very near future. We've got something running on crude that's very exciting as well, that will be coming out shortly. Come aboard now, get grandfathered in, and you'll get all additional markets. Okay, that's going to change soon. Now, the best value is going to be the annual subscription, which it normally is $24.97. With the coupon code save $500, it brings the annual subscription down to $19.97 a year, which is a tremendous value. It's almost half price on the $299 a month. It brings it down to about $160 or $165 per month. So for $165 per month, you're going to have the full trading system, the automated strategies. You're going to be part of our trading community. And I'm really excited, and I hope that you'll come aboard. Let me just answer just a couple of questions. Someone asked me about the prop accounts. I think I had mentioned that this system can trade prop account. It does trade the micros, yes. If you want to trade 6 micro contracts or 2 micro contracts, it's good for any size account. Another question, does the strategy trade in either direction? Yes, it does. If the market sets up long, it's going to go long. If it sets up short, it's going to go short. Is this a plug and play? Brendan asks, is this a plug and play indicator? Or does this need to be input information? This is what you call a plug and play. I like to call it a load and go. You load it, you click the enable button, and hold on. Michael asks, how much are you trading? We're trading, great question, Michael. And I should have mentioned this. Believe it or not, the equity curve that I showed you, and last week, this is the performance of last week. This is based on trading 2 contracts, Michael. 2 contracts. Okay? 2 contracts, 2 minis, not micros. That's on our 5-minute, 15-minute, and our AI auto aggressive on the 1 minute. Let me see. So the answer to your question, Michael, we're trading 2 contracts. However, listen, that doesn't mean you have to trade 2. Let me clarify. The input in the strategy allows you to, if you have a large account, or let's say you grow, and a lot of people don't talk about this, but let's talk about scaling up for just a minute. If things are going well and you have a week and you bring $6,500 in profits, then you might want to go to your strategy and maybe upscale and trade 2 or 3 contracts for next week. After all, you're risking their money now, and that's when you want to scale up. When you've realized some profits and you've grown your account some, then it's time to scale it up. So one more question. Yes, that's correct, Michael. It's only $299 per month right now, correct. If you use the discount code, save $100. There it is. Save $100. Let me put this up here. Save $100. Will bring your monthly down to $299. Now, once you do order, you're going to instantly receive the trading system. Okay, this isn't something that you're going to have to wait on till Monday or Tuesday and hope to God it comes soon. The minute you check out, it's going to roll over the page and give you the instructions on how to install it, how to do the third-party licensing steps, the zip file for the indicators, the zip file for the strategies, and access to the Discord chat group instantaneously. Okay. So this is not something that you're going to have to wait and hope. Can it be adjusted for the tight stop requirements? It can, Shannon. That's a great question. In fact, the owner of our company, Mark, ran a very interesting strategy. He had a great nickname for it. I wish I can remember it off the top of my head. But what he did was he made the stop extremely tight. If you look at our stops on our 1 minute, and I'm glad you brought this up, and we don't really have a lot of time in these short presentations to show. But this is the strategy here that made all the money. It made about $3,000 or $4,000 this week. And on the NASDAQ, the stop on it was 36 ticks. Okay. So if you're risking 2 contracts, it's at 72. Now there's nothing stopping me from putting this on the micros and then increasing this to 3 and 3 and put this on the micros. Okay. So you can put it, there's a number of different ways that you can reduce the risk. Now, the way our proprietary trailing stop work, you have to have 2 targets. Okay, you don't want to do this and put 1 and 0 because it takes away the power of our trailing stop. So regardless of whether you trade the micros or the minis, you want to have 2 targets. And that lends into our trailing stop strategy. Okay. Gary, the reason it shows 24.97 right now is because you would have to put in the coupon code. Gary said he went to the checkout page and it's showing 24.97. Use that coupon code. It's save $500 and it'll bring it down to 19.97. Okay. Last question, and then I'm going to go ahead and wrap it up. And I do apologize. I know I've gone over, Rob. Give me just one moment. You said on the YouTube video, the grand total bottom right, what was an ES chart? The question, was that 25,000 or was that total of the NQ contract? Yeah, they were all run, Arthur. What that was a cumulative of all of them running at the same time. On the bottom right, Arthur asked me about the YouTube video. On that video that I showed you, that 2,500 was cumulative of all the strategies running. Okay. All right, guys. Listen, again, I want to wish everybody a blessed weekend. Happy Juneteenth. And to all you fathers out there, man, you've earned my respect. I've got 2 running around, and man, you enjoy your Sunday, your Father's Day with your children, the people you care about the most. It's a real blessing to have kids, and God knows that you deserve it. Happy Father's Day. Happy Juneteenth. Have a blessed weekend, everybody.
Rory,
Yes, sir.
happy Father's Day to you, and your first as a father of multiple little girls, sir.
Thank you. Thank you.
You're welcome. Rory, your strategy looks amazing. We've been hearing that your automated strategy is absolutely crushing it, and you have absolutely shown the demonstration of how. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, or blowing out trading accounts, Mr. Powers over at Right Line Trading has a solution for you. You can learn more by clicking on the link. Please use the coupon codes. Thank you again, Rory, for being on Trader's Corner and making such a great offer to our audience. Well, ladies and gentlemen, that will conclude our summer special event. The staff at Trader's Corner would like to wish all the fathers out there a happy Father's Day and everybody a happy Juneteenth. I want to thank you all for joining us today. It's been an information-packed event as usual, and we hope you enjoy the rest of your weekend. Have a great evening. Have a great everything. Thanks again for being here. All of the presentations will be on our YouTube channel tomorrow or shortly thereafter. So long.